Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharjani and with me is Anushi. Anushi, if you take a look at the markets today, yesterday, of course, it did cheer the overall sentiment, the Santa rally that we were calling it. Did see that it was, the entire day, the market was well held above the 26,100 levels. Today also, it is above the 26,100 levels, but absolutely flat at that 26,179 at present, trading completely flat. Let's try to pull up the Bank Nifty as well in tandem with the Nifty 50, almost flat as we speak. The broader markets, let's try to see as to how the mid cap 150 and the small cap 250 is doing. Again, very flat in terms of where the mid cap 150 is concerned, but the small cap 250 slightly doing better at that 0.3% higher rate. Let's try to quickly pull up the Nifty 50 heat map and then of course go to our guest for the day. The Nifty 50 heat map almost even Stevens there, not seeing much gains in terms of where some of the names are concerned, but some names doing fairly well includes something like a Coal India, but something that's under pressure includes something like an Infosys. But with that, let's also welcome in our guest for the day, Swati Hodkar, AVP Technical Research at Nirmal Bang, and Asta Jain, Senior Research Analyst at Head Securities, joining us now. Welcome to both of you and season's greetings to both of you as well. I'll take up the first question, which is from Afreen, who's writing us from Hyderabad, asking about a long-term investment in the pharma space. She wants to know whether she can go ahead and invest in something like a Lupin, Sun Pharma or Cipla. Asa, hi. I'll come to you on this one. Which one would your bet be?
Hi, good morning to everyone. Yes, we are positive on the pharma space on like all these three stocks which the viewer is interested to invest in. I think Cipla is well placed as of now, although all three stocks are looking good to us. But if anyone wants to go with single stock, then I think Cipla is also a good choice. So right now we are positive on Cipla, and I'm recommending this stock to hold as well as a buy also at the current level. And our price target for Cipla is somewhere at around I should say 1700 to 1800 odd levels. Now talking about the fundamentals of the company, fundamentals seems to be very strong. What we have seen is that they have got a very strong chronic and the trade generics product portfolio, and that is also boosting their sales. So that is product portfolio is very strong. Their financial results were also very strong. So we believe that all the three counters are looking very strong at this point of time. But if anyone wants to go with a single, then Cipla is a good choice to enter at present.
Okay, so that's with regarding to the pharma pack that we are seeing. But moving on to the first caller of the day, it's Govind who's calling to us from Hyderabad. Hi Govind, how can we help you?
Yeah, good morning ma'am. Good morning all of you ma'am.
Good morning.
Ma'am, actually, is it right time to enter for Antony Waste ma'am? For 2 to 3 years, I can invest 2 lakhs rupees per investment ma'am. What is the fundamental and technical view ma'am?
Okay.
Yeah, this is a waste cycle theme sir. Cycle theme ma'am. That's why I can invest ma'am. Because
Okay.
that is huge correction is happened in Antony Waste. How is fundamentals and values ma'am?
Let me go to Asta then. Asta, your view with regards to this counter?
Yes, so Antony Waste, the IPO came way back, I think a couple of years ago, if I'm correct with my memory. And what we have seen that, yes, this stock has corrected a lot. But right now also, I don't feel that it is a good level to enter into this counter. What we are seeing that the stock is shown a very strong performance today, but we really need to see how the quarter 3 of FY26 pan out to be for this quarter. So right now, my idea here is not to invest at this point of a time. Let it correct further. Right now, it is on an upside movement. So whenever we see some sort of a correction, then try to enter, or just wait for the results to come in. In case if results are favorable, then also one can make entry into this counter. So I would suggest to wait before making fresh entry at this counter.
All right, so that's the view with regards to where Antony Waste is concerned. We've got our next question, which is from Satyan, and this question is directed to you, Swati. He's saying that he has about 2 lakhs to deploy for a month or two and wants to know the two counters that are showing the best potential from a short-term perspective. Swati, what would your bets be?
Best pick for these sessions will be from the pharma side, that is a Glenmark Pharma. I believe that the stock has a very strong potential to continue its move rally from currently the counter is sitting at 2070 levels. At least 30-40% can be invested at the CMP. I believe that this rally is likely to be extended towards to 2150 to 2200 in the very short period of time. So Glenmark is the one, and from the IT pack, Birla Soft really looks very positive because it's a beaten down counter. I believe the stock has given the very strong corrections from almost 650 to 350 levels, and from there almost we have seen a double bottoms nearby those levels. And if you look at the harmonic pattern, also it is on the formations of the CD leg of the Gartley pattern. I believe it has a very strong potential to reach up to 540 levels on the higher side. So for the investment purpose, Birla Soft and the Glenmark looks very attractive at the CMP. So you can just take a long bet on those counters.
Okay, so that's with this particular counter that we are seeing. But moving on to the next query, it's from Anand, who's writing to us from Hyderabad. He's also a regular viewer of the channel, just like Satyan, and currently wants to understand overall picture in terms of what's happening with Shriram Finance. Of course, it has been in focus on the back of this big MUFG deal that we are looking at. Currently, even if you look at his profit, he's sitting on a profit of 23,000. He holds 500 shares, and this is at a price of 900. Wants to know, can he acquire more for a long-term period? Astha, Shriram Finance is a stock that has been talked about since this last 2-3 trading sessions. What do you make of it? You know, while there is expectations that the book value will continue to see an uptick or so, in this particular year, there would be a leeway period or so, and then there would be a substantial increase. What do you make of this?
So my idea here is definitely whatever growth capital will be provided by Mitsubishi at this point of a time will definitely help the company in posting very, very strong set of numbers. Another point which is looking positive about this company is that the industry it is in which it is operating, we are positive on the NBFC space as a whole, because what we are seeing is right now we are in the interest cuts, environment. So definitely NBFCs are looking in very sweet spot at this point of a time. So second point about it, the kind of industry structure or the kind of industry phenomena right now going on is also looking very, very positive. So my idea here is definitely this is a very good long-term story to hold as well as to bet upon. Currently, it is quoting at around 946. So maybe entry at the lower levels of around 900 is better. So idea here is to make entry, but at the lower level. Otherwise, those who have this stock in their portfolio, they can continue holding it. Initial targets can be set at around 1050 to 1100 odd levels.
Okay, all right. So that's with regards to where Shriram Finance is concerned. The next one is from Rajiv Jain, who's writing us from Delhi, asking about IDBI Bank. He's bought around 1,000 shares at the levels of 102.45 apiece. Wants to know if he can continue to hold from a short-term perspective or not. Swati, how is it looking on charts right now, and what should he do?
View is positive on IDBI Bank. No wonder it's the counter is really doing very well from the last few months or say, but slowly and steadily it's gradually just taking out the positive move. If you look towards the weekly chart, the stock is under the formations of the cup and handle formations, and I believe that very soon it's likely to witness some sort of a breakouts, and the breakout levels comes nearby their buying price itself 103. If it manages to maintain the positive closing above those levels, a new trend rally can be seen on the higher side, which will take a stock towards 215 to 120 levels. So hold for some more time. I believe that one should definitely hold on for a target of 115 to 120. If you want to keep any kind of a stop loss, 95 rupees is acting as a very crucial support level. So by keeping that as a stop loss, you can hold your long positions for a target of 115.
Okay, so those are the levels that you should be watching out for IDBI Bank. Hope that helps. Moving on to the next caller, it's Mohan who's calling to us from Bengaluru. Hi Mohan, how can we help you?
Good morning. I have just purchased 6 shares of Keynes Technology for 4,300. I just wanted to know, I would like to add more for long-term perspective.
Okay, you mean a 2 to 3 year of outlook do you want?
Yeah, total outlook. I just want for long-term perspective. Can I add some more shares, or can I? What is the status? What is the outlook?
Okay, got it. Let me take this with Astha then. Astha, your view with Keynes Tech. Now the stock did see a correction after there were reports on in terms of how the disclosures were. What do you make of this? Do you see that there would be higher investor confidence post that? There was a conference call, there was clarification from the management as well, but what's your view?
Yes, there was clarification from the management, and I think in the light of the latest development which has happened in this counter, maybe this counter can fall more. But fundamentals intact at this point of a time, because this company is continuously gaining, traction in their PCB segment, and being one of the fastest growing EMS player, I think that their margins are also very superior. So fundamental seems to be okay. The only problem is with the latest development which has happened. So right now, rather than making entry outrightly at this point of a time in this counter, I think just wait for the results, because very soon we will be start getting the results in from January 15th onwards. So definitely then it will be a better point to make entry. Just wait and watch, because right now the news flow is not that optimistic in this counter.
Okay, all right. So that's with regards to where Kane Tech stands. The next one is from Govind Kumar, who's writing us from Hyderabad. He's holding around 6,000 shares of IRFC, purchased at the level of 149, and wants to know if you can continue to hold this for the next 1 to 2 year or not. Astha, what's the view like?
So IRFC from the 1 to 2 year perspective is looking good. So my idea here is, yes, one can continue the holding for such a long period of a time, because we all know, and the kind of momentum which we are seeing in the railway stocks only, definitely the railway stocks will be a limelight right now before budget, and any positive news flow which we'll get from budget definitely will help this company also in posting good set of numbers. So yes, IRFC looking good to us, and one can make entry as well as continue the holding in this counter.
Okay, so positive view for IRFC, but it's time for the first round of rapid fire. So Swati and Astha, I'll request to keep your answers as short as possible so we can take more queries. Now starting off with Shrishti, she wants to know the future prospects of HDB Financial. Is it a good buy for a 3-month perspective? Swati, your view?
At the current level, I will not suggest to take a long positions. 740, 730 levels are the good levels to take a fresh long.
Okay, Tata Investment Corp is the next one. 100 shares bought at the levels of 1,050. Narayana wants to know whether he can continue to hold or exit. Swati, your view on the charts?
I will suggest to hold on for a longer term duration. Immediate target is 820 to 840 levels.
Next viewer wants to know about Glottis, bought 114 shares at 129. Should he continue to hold it for next 1 year? Astha, your view?
I think start exiting at the higher level, because it is not that very strong counter to hold for a long term, and just divert your investment in some very good counters.
Okay, Zaggle Prepaid is the next one. Santosh from Chennai has got 115 shares at the levels of 428. Should he hold from a long-term perspective? Astha, quick answer.
Yes, from the long-term perspective, it is a hold with a price target of 390 to 400.
Okay, next one is from Harsha, facing 30 to 40% loss in Cohance. Wants to know whether he should hold or exit. Swati, your view?
I would suggest to hold on for some more time. Likely to be seen a positive move towards to 600 to 650.
Okay, Venkat Ramani wants to know whether she can continue to hold Biocon for the next 12 months or not. 230 shares and 345 is the level at which she's bought. Swati, on the charts?
Definitely hold for a longer term durations. Target will be a 450 to 480 rupees.
Reliance Power, next stock in focus. Sai Karthik has bought 10,000 shares at 37.8. Wants to know whether he should continue to hold at current level. Swati?
Hold with a trailing stop loss of 34 rupees. Upside momentum can be seen towards 242 to 44 rupees.
Okay, Tata Motors commercial vehicle. Is this the right time to make an entry? Gautam from USA wants to know from a 15-month perspective. Astha, your view?
Yes, one can make entry to this counter.
Okay, next one is from Venkat from Chennai. He's bought 300 shares of HUL at 800. Wants to know whether to hold or sell. Swati?
Definitely you can hold on this long position. Immediate target will be 2400. Beyond that level, 2500 can be seen.
Okay, Vanita wants to know whether she can continue to hold NBCC from a long-term perspective. She's bought 1,000 odd shares. Astha, your view?
Yes, hold NBCC from long-term perspective. Price target can be set at around 130 to 135 odd levels.
Okay, Godavari Biorefineries, next stock in focus, bought 800 shares at a price of 277. Wants to understand the outlook, whether it's a continue to hold scenario. Astha?
Yes, one can hold this counter from the longer term perspective with a price target of 290 to 300.
Okay, VST Industries is the next one. Whether continue to hold from a short-term perspective or not. Swati, your view on the charts?
Yes, my view is positive. Upside 270 to 75 levels can be seen.
100 shares of Paytm is what Tom's has bought at the levels of 1367. What's the view for the next 12 months, whether he should exit? Swati?
No, I will suggest to hold on this particular counter on the verge of giving the breakouts. Upside 1400 to 1450 levels can be seen soon.
Okay, 25 shares of L&T bought at the levels of 3570. Should Ekambara continue to hold? Astha, your view?
Yes, L&T is a hold from our side with a price target of 4200, 4300.
All right, okay. So that brings us to the end of this first round of rapid fire round for Ask Profit. But viewers, we'll try to slip into a very short break. We'll be right back answering all your queries on the other side, so do stay tuned.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
सामने नया सुपरमार्केट खुलने वाला है, क्या करूं कि पुराने कस्टमर भी रहें और नए भी आ जाएं?
देखो, आप दुकान के बाहर एक चाय कॉर्नर लगा सकते हो। चाय पीते पीते पुराने कस्टमर बातचीत करेंगे, उन्हें देखकर नए कस्टमर भी आएंगे और एक्स्ट्रा कमाई भी होगी। इसके अलावा आपके बिल्स देख के समझ लेते हैं कि कौन सा सामान कितना बिका है।
माई भाई, do you know any cool bank जो डिजिटल फर्स्ट हो?
SBI कूलेस्ट है।
What?
डिजिटल लोन्स 30 मिनट में, AI मॉडल्स 140+, योनो यूजर्स 9 करोड़, डेली UPI ट्रांजैक्शंस 33 करोड़।
Cool तो है।
चलो, SBI, the banker to every Indian, truly.
फॉरेक्स ट्रेडिंग अभी
एक ट्रेड में सिक्सर।
प्रसिद्ध, पहले सेफ्टी वरना क्लीन बोल्ड। अनऑथराइज्ड प्लेटफॉर्म पे फॉरेक्स ट्रेडिंग यानी नुकसान, धोखाधड़ी और कानूनी कार्रवाई का डर।
मतलब नुकसान की हैट्रिक। इसीलिए RBI वेबसाइट पर जाएं, ऑथराइज्ड लिस्ट जांचें। RBI कहता है,
जानकार बनिए, सतर्क रहिए।
Hi, welcome back. You're watching Ask Profit right here on NDTV Profit. This is a show where you get all your technical and fundamental queries answered. So we'll just start with that, and the next companies that we'll be speaking about, in fact, sectors that we'll be addressing is the rail and the defense pack. And this is an interesting query coming from Jeet from Kolkata. He wants to understand whether the budget rally for rail and defense companies have already started. We are seeing a lot of these stocks in focus. Apollo Micro, Jupiter Wagons up around 5 to 8% in trade today. Titagarh also seeing about a 1% of an uptick right now. So let me just take this with Astha. Astha, what's your view with all these defense and rail companies? If we just take the year in context, they have seen some bit of correction, especially in these last two to 3 months after this kind of superior rally it had at the initial start of 2025, especially for defense. Do you think valuations are now on par to make fresh entries in any of the particular counters from these two sectors?
So first of all, what I feel is that definitely they are showing some momentum because this is a pre-budget rally, and we have always seen that before budget. Definitely railways and defense are the core focus of any budget, and we have seen them showing strong momentum. Now talking about the evaluation, what we have seen that these stocks are corrected a lot in last 1 year. If I talk about railway stocks, they have corrected 18%, more than 20% also, so more than 15%. Definitely we have seen that these stocks have corrected from their highs. So yes, now the valuations are also becoming very much in a comfort zone. And most important part is that definitely last year we have not seen that much allocation towards defense and railway segments in the budget, but this year definitely we are expecting a strong allocation to these segments. So on the basis of all these, we are seeing a rally which I believe is going to be sustained, and in that we are really liking defense counters like BEL, EML, and in the railways counters, RVNL, Titagarh are some of the counters which are really looking good to us.
Okay, all right. So that's with regards to where some of these railway names are concerned. The next question is from Murthy, who's writing us from Hyderabad, holding about 1,000 odd shares of Ashok Leyland at the levels of 114. So sitting on profits of 62,000, over 62,000 rupees right now. Wants to know, from a long-term perspective, can he expect a return of 15% CAGR is what his expectations are. Asa, do you think that is achievable? And for that, should he continue to hold the counter?
Yes, but 15% CAGR, I cannot, assure on that part. But yes, definitely this is looking very good to us. First of all, what we have seen is a good set of numbers from this counter, and which is really boosting this counter. Secondly, now they have entered into, H2 FY26 on a strong footing. So what we are expecting from the second half of FY26 is similarly a strong, half year, and results wise also it should be a stronger one. So overall, Ashok Leyland is looking good to us, and yes, it will deliver strong, output both in the terms of capital appreciation as well as financial performance. But exact number of percentage I cannot assure of. That is 15% CAGR.
Okay, Asta, the next query is also for you, and this is Abhijit, who's writing to us from Kolkata. He's bought 150 shares of PFC, and this is at a price of 393 that we are seeing. Currently facing a profit of 35,000. Interestingly, also holds REC shares, and that's 140 shares as well. Wants to understand an outlook for the next 3 to 5 years. What would you suggest? Should he continue to hold or buy more or accumulate more at these levels?
See, what I think one should continue to hold PFC, and the main, point why I'm saying hold is we are expecting the loan book growth to be at around 10 to 11%. So this is what we are expecting growth wise on the loan book part. And this quarter, I mean, the quarter gone by was not very strong because there were some elevated repayments which this company has done, and that is why we have seen the results were not very strong. But going ahead, the kind of loan growth even management is also expecting, definitely it can be a slow mover, but yes, definitely it can move upside. So yes, hold from my side, and from the 2 to 3 year perspective, accumulate, but not at the current levels, at the lower level. For PFC, in fact, REC is also looking good to us, as I've already said that we are positive on the budget. And from the railway counters perspective, and hence REC can also be accumulated from the longer term point of view.
Right, so that's with regards to where PFCRC is concerned. But the next one is from Nilesh Mehta, who's asking about Dixon Tech. He's got 50 odd shares at the levels of 15,000. Wants to know if he can book losses or should he continue to hold for some recovery. Swati is sitting on a loss of around 1 lakh rupees already right now. What should he do?
I would suggest to hold on at the current period of time because the counter is forming a very strong support nearby 12,000 levels, and also the interesting fact that it is trading in oversold zone. So I believe that the trend reversal can be witnessed in the near term future and no need to book the losses at the lower side. So as long as the 12,000 levels are intact, we are expecting some bounce back rally towards 14,300 and beyond that level 15,700 levels can be seen. So it's a hold from my end at the current period of time. Whenever the stock comes down near 12,000 levels, I will try to I will tell them to just average it out at those levels so that the buying price will come down. So at the current level, hold. Bounce back rally can be seen towards to 14,000 to 15,700 levels.
Okay, so that's a Dixon Tech. The next query is from Ravi Kumar, who's writing us from Hyderabad. He holds 50 shares of Jyoti Labs, and this is at a price of 497, which was around a year back that he made this investment. Currently, the stock has seen correction. It's trading around 285 or 286 right now. Wants to understand whether he should exit or hold because of this correction that has happened, or he can continue to hold it for next 1 year. So, Asta, what would your view be?
So regarding Jyoti Lab, I should say hold this counter because exiting at this point of a time is making no sense. The loss is going to be huge. Right now, what we are seeing that the growth is somewhat affected because what we have seen in the Jyoti Lab that there was a miss on the part of EBITDA, miss on the part of revenue, as well as bottom line, that is profitability. So all these three main line of items in any P&L statement are showing not very strong performance by this company, and hence we have seen not very strong performance also. But and going ahead also, I think the revenue trajectory will gonna be muted and the margin pressure will be there. But exiting at this point of a time is making no sense. So try to exit at some higher levels rather than exiting at this point of a time. This is what I want to say.
All right. Okay. So that's with regards to where. Sorry, Asa, you were saying something?
No.
Okay, all right. Okay, so that's with regards to where Jyoti Labs is concerned, and one of the counters in the FMCG space that's been lagging. But let's shift focus and take a look at what the FNO market setup right now is looking like. How are the cues shaping the trade today? Sharad is joining us to give a snapshot of that trade.
Well, Mahima, it's a very boring market, and markets are again flat. And the India VIX, if you look at it, that has also come down to 10 for the last 4 sessions. Nothing much happening, to be honest. Ultratech Cement, Power Grid, these are the stocks which are doing well in trade, but still a very narrow range coming in. Reliance also turning into red. Bharti Airtel, Infosys, slight selling coming in, but net, broader indices, there is more action rather than the FNO space, to be honest. Looking at the Sensex futures, this is where the discount numbers are coming in. It's gyrating in a very small range, taking, of course, a technical breather with a sentiment being in the bullish space. This is the actions happening, and it's looking like even Stevens here for both the segments. Let's pull up BankX, how that is performing, and largely the BankX also, we are slightly seeing profit booking happening in certain counters. Let's get up the bigger names over here. Of course, SBI is coming back. That's where the short covering happened, and HDFC Bank, that's on almost 0.6%, and these are the contracts on your screen. Let's move on to the stocks where the action is then. Of course, it's stock specific space. Coal India, back of buzz flow of their arm getting listed, stock is up 3%. NMDC, the metal pack rallying, and this also is one of them. Chola Financial, a strong short covering happening, and of course the news flow also getting discounted from Cobra Post, and Dalmia Bharat, that's also up almost 1.8%. Long unwinding for Cyient and Keynes Tech, no major conviction bet, to be honest. And last one is a short build-up. Coforge, that's something on the radar. Street is not liking the fundraise plan, and Fortis Healthcare is down almost 1.5%. So these are the stocks in the FNO space buzzing.
Okay, thank you, Sharad, for that daily snapshot that we get for the FNO space. But moving on to the next query, it's an interesting one that we are seeing coming from Romana, and it's a large quantity that she's bought. NHPC is the stock in focus, 20,000 shares purchased at an average price of 100. Once you get a 1 to 2 year perspective on this, currently just facing a loss of over 4 lakh on the counter. Astha, what would you suggest?
Yes, currently facing losses, and what I believe that the counter is, not very, very strong going ahead also, because we have seen that what the number they have shown was, profitability was very much not, muted, first of all, and going ahead also, it was a mixed number, which we are believing operating performance not at the very strong level, and hence we are recommending that holding such a big quantity, first of all, is always like, tracking the numbers, etc. But right now, try to exit from this counter at the higher level. Just hold it and see at any higher level. I am recommending exit for NHPC. 70, it is quoting. So maybe at the price of around 82 to 85, try to exit from this counter partially.
That's with regards to where NHPC stands. We've got our next caller. Vivek is calling us from Mumbai. Vivek, hi, a very good morning to you. How can we help you today?
Good morning. Good morning. The question is for Apaji.
Okay.
And Apaji, good morning. So basically, can you hear me?
Yeah, she can hear you.
Yeah. So Apaji, I want to invest for the next 1 to 2 years in BU, which is the Nifty BU. And I'm pretty, I want to avoid precious metals and debt. So this is basically only into equity. If she can suggest into how to divide the amount between large, mid, or micro cap, or if you would suggest any PSU, defense, IPBs,
Sure.
how to exactly divide this amount?
Okay, Vivek, got your question. Astha, Vivek, I'm not sure if Astha will be able to help you with investing in equity Bs, but if not that, I'm sure that she'll be able to give you some stock-specific names to invest your amount in. Astha, what's the view like?
Yes, I can give some stock names where one can make investment. First of all, L&T. It is looking very, very strong. From here also, we are expecting this counter to move more than 10%. So L&T is looking good to us. We can make investments there. Secondly is SBI, State Bank of India, in the banking space. As I've already told, we are positive on the banking counter. So SBI is looking very, very strong to us. So there one can see. And thirdly, in the IT space, we are positive. So HCL Tech and Persistent System, these two IT counters are looking good to us. So I think these are some of the spaces which looks to be, attractive from the long-term investment point of view, and where one can make entry in.
Okay, so those are the top picks that we are seeing, some of the stock picks that we are seeing for the fundamental space. But moving on to the next one, it's Ravi who's calling to us from Hyderabad. Hi Ravi, how can we help you?
Yeah, hi.
Hi, please state your query.
Yeah, I have query on Tata Power. So, I'm currently holding 50 shares bought at 348.
Okay.
So, shall I stick to the Tata Power for next 3 to 6 months, or shall I switch to some other stock in the power sector? Or could you recommend which is more, more better than Tata stock?
Okay, let me take this with Swati then. Swati, for next 3 to 6 months is the view that Ravi wants to understand whether he should stick to Tata Power, or do you have any alternate names in this particular sector?
I would suggest to stick on with the Tata Power because the buying price are attractive. No need to reshuffle the stocks at the current levels. The counter on the weekly chart has given the breakouts of the cup and handle formations, and as of now it is just trading in a consolidation phase. I believe that very soon we are likely to witness some sort of a breakouts on the high side, which comes to nearby 395 level. If it's manages to give the breakout level, 420, 430 levels are the targets I'm looking forward for the near term future. If you want to protect your principal amount, I will suggest to keep the profit stop losses at around 365 rupees. That is acting as a very cluster support zone. So by keeping that as a stop loss, you can hold on the long positions for a target of 420 to 440 levels on the high side.
Ravi, so hold on to Tata Power. That's the view coming from Swati. But it's time that we quickly slip into a short break, but don't go anywhere. Stay tuned to Ask Profit.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतू सा, और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद एयू।
एयू AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने, एवरी मंथ।
सोच बदलो और बैंक भी।
IMTF rates hurting your profits?
Bhai, what's your MTF interest rate? Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum.
Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, कम्पीट, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
10 दिन में बदलो 10,000 को 1 लाख में। Learn the secret strategy that the big players don't want you to know. Join कीजिए हमारा paid trading course. Guaranteed profits or your money back. ऐसे flashy promises तो रोज आपके फीड पे दिखते होंगे। In reality though, these are unregulated entities. Always choose the trusted route through SEBI registered intermediaries only.
An investor awareness initiative by SEBI.
Hi, welcome back again. You're watching Ask Profit right here on NDTV Profit. Now, it's an exciting time. We're just a few minutes away from the rapid fire round. But before we do that, let's take on more stock queries which are there. And if you're talking about the next one, it is in the retail side that we are seeing. Ranjit is writing to us with regards to Pata. He bought 100 shares and this is at an average price of 12.50 that he bought. Currently, he's facing a loss on the counter and wants to understand what can he do. Swati, what would your view be with this particular stock? I believe you're on mute.
I'm really sorry. We have already seen a very strong correction in this particular stock from almost 1300 to now 950 levels, and it is trading nearby the oversold zone. So, which indicates that the downside is limited. I believe the stock will find out a good support nearby 920 to 900 levels, and from there onwards we will see some consolidation, then reversal rally. So, no need to book the losses at the lower levels since the downside is limited. I will suggest to hold on for some period of a time. If possible, try to average it out whenever the counter comes nearby 920 levels, and upside rally can be seen, or see a bounce back rally can be witnessed towards 2050 to 1100. So those are the target for the short period of time. So hold for some more time at such the current market price.
Okay, all right. So that's with regards to where Bata stands, trading at its day's low point as we speak. But Guru is calling us from Bengaluru. Guru, hi, a very good morning to you. How can we help you today?
Ma'am, I would like to know about the GRSA.
Okay.
I'm holding around 3,500 at the price of 2560.
Okay.
So, from 20% profit to I'm currently running into losses. Can you please share the outlook now?
Okay, Guru. Got your question, and I see that your losses are at around 4.7 lakh rupees. Astha, we're now seeing, these shipbuilding stocks, defense stocks have started to pick up. Just, probably trading before the budget is the reading that a lot of analysts have, and even we've discussed the same. Do you think that he can recover some of his losses, maybe charter the green territory as well? Should he continue to hold?
Yes, because order book holds key for these companies, and here the order book is order backlog is around 20,200, which is almost 3.5 times of TTM revenue. So I mean strong revenue visibility. In fact, what we have seen that this counter has risen with a very strong CAGR growth in the financial performance wise, and it was in the last 4 years the CAGR growth was more than 30%, I believe. So they have got a very strong growth, very strong order backlog. I believe that definitely this counter will show some good moves going ahead. So please stay invested in this counter. Although right now investor is having some losses, but I believe that this counter can move till the level of 2,800 to 2,900 in the medium term perspective. So just stay invested in this counter.
Okay, stay invested in the counter is the view for Garden Reach Pillars. But the next one is from Aman Rathi, who is writing us from Rohtak, Haryana. Wants to know about PC Jewelers. What his question is that he's bought 7,000 shares at the levels of 15.77 in July 2025. Since that, it's been falling despite good results. What should be the next course of action? Swati, I'll take this up with you specifically because this stock has seen a very good momentum run up in the past, couple of months. Now that it's seeing correction, do you think that it's found its bottom? What should he do? Should he continue to hold or maybe book whatever gains that he's made?
In the 2024, we have seen a very spectacular rally in this particular counter. From almost 4 to 18, we have seen a rally, and 2025 was not a good year for this particular stock. We have seen a correction from 18 to now rupees almost 9 levels. But at the current level, I feel that the stock has a very multiple supports nearby 8.5 or 8 rupees, and from there onward, we will witness some sort of a recovery rally. I will not say the change into the trend, but yes, bounce back rally or recovery rally can be seen, and which will take a stock towards to 13 to 14 levels. So hold on for some more times. Already you have kept a lot of patience. Hold for some more time. Any pullback rally towards to 12 to 14 levels should be utilized to exit the long position. So I will suggest to sell on right strategy should be implemented at the current market price.
Okay, so that's with regards to PC Jewelers, the view that we are looking at. But moving on to the next query, if you see the query, it's from Venkat Reddy, who's writing to us. He's bought 100 shares of Vinti Organics, and this is in November 2023 that we are seeing. He's bought shares at the price of 1730. Wants to understand whether he should hold or sell this one, and what would be the outlook for the next 6 months or so. So Swati, coming back to you on this counter, what is your view?
The view is little bit cautious at the current market price, but after finding out such much correction from 2100 to almost 1500 and so level, I believe that we will see some turnaround levels from the current market price, which will take a stock towards to 1700 or 1750 levels. So at those levels can be utilized to exit the long position, not to book the losses at the lower levels. Definitely a bounce back rally likely to be coming soon. So it's a hold from mind at the current market price. Any momentum towards to 1700 or 1750 can be utilized to exit the losses.
Okay, so that's with regard to this particular counter, but moving on to the next caller, it's Nikhil who's calling to us from Bengaluru. Hi Nikhil, how can we help you?
Yeah, good morning.
Good morning.
I have Tejas-Net 190 shares at an average cost of 619.
Okay.
So I want to know if I should average it out or I should exit from this.
Nikhil, how long can you hold this counter?
Probably 6 months to 1 year.
Okay. Let me take this with Swati then. Swati, from May, this stock has seen a downward trajectory. It has seen correction as well. What would you recommend him to do?
I will not suggest to deploy more capital into this particular counters because already is facing a losses bought at elevated level. No need to average it out at the current market price also. Hold for the some period of time. Bounce back rally can be seen because the counter is already trading in oversold zone levels, and it's the momentum indicators such as RSI is on the verge of showing the positive crossovers, which indicates that the bounce back rally can be witnessed in the near term futures, which will take a stock towards to 540 to 600 levels. So at that period of time, I will suggest to exit the long positions. So at the current market price, you can hold on. If you want to keep any kind of a stop loss, 440 is acting as a good support level. So by keeping that as a stop loss, you can hold the long positions. Any momentum towards to 550, 600 should be utilized to exit your longs.
Okay, all right. So that's with regards to where Tejas Network stands. But viewers, it's time for a second rapid fire round. Astha and Swati, you know the drill. Try to keep your answers as short as possible. The first one is from Naresh Jain. He's asking about Satvik Energies, holding 34 shares at the levels of 468. Astha, what's the view like?
The view is not very strong. I think it came in the IPO, but right now just hold and try to exit at the higher levels.
Gujarat Gas, is it a good stock to buy for next 6 months? That's what Chandra wants to know. Swati, your view?
Not at the current market price. Any dips towards to 380 can be utilized to take a longs.
Okay, Marksans Pharma is the next one. 340 stocks bought at the levels of 190. Shravan from Hyderabad wants to know if you can continue to hold. Swati, your view?
Yes, hold for a target of 240 to 250 levels.
Okay, for a mid to long term horizon, is Varun Beverages a good buy at current levels? Astha, your view?
Yes, long-term outlook is looking positive. Maybe one can start accumulating at this point of time with a price target of 520 to 530.
Okay, G. Krishnamurthy has bought Metro Brands, 400 shares at the levels of 495. Should he continue to hold from long-term perspective? Astha, your view?
Long-term perspective is looking good to me, and one can remain invested in this counter. Fresh entry is not recommended at this point of time.
Okay, Yojit has bought 75 shares of Amara Raja, and this is at an average price of 931. Wants to know whether he should accumulate more or exit. Swati, your view?
I would suggest to hold on. Positive momentum can be seen towards 982,000 levels.
Okay, Info Edge can be bought at the current levels. Swati, what's the view like on the charts?
Info is not at the current momentum. Any dips towards to 1300 so can be utilized to take a fresh longs.
Okay, Venkat Ramani wants to know whether Ambuja Cement is a good buy at the current levels for the next 1 year. So, Astha, your view?
Maybe one can buy this for the long-term perspective, yes.
Okay, Tata Steel is the next one. Srinivas from Warangal has 200 shares at the levels of 147. Should he continue to hold from long-term perspective? Astha?
Yes, Tata Steel is looking good to me. 190 to 200 can be seen in the longer-term perspective.
Okay, Venkat holding 50 shares of Dixon and is facing a loss of 50,000. Wants to know whether he should exit or continue to hold. Swati?
Hold at the current momentum. Positive rally can be seen towards 13,800 to 14,000 levels.
Okay, PG Electroplast is the next one. Santanu from Kolkata is holding at the levels of 652. 445 shares is what he has. Wants to know if we can continue to hold, sell or accumulate. Swati, your view?
Hold at the current moment. 650, 700 levels can be seen.
Okay, G. Krishnamurthy has bought 400 shares of Metro Brands at an average of 495. Wants to know whether he should continue to hold for a long period. Astha, your view?
Yes, Metro Brands can be held from the longer term perspective, but if cost price is lower, then partial profit booking or 1/4 of the profit booking is also recommended at this point of time.
Okay, Hindustan Copper is the next one. Jaya from Bengaluru is holding 100 shares at the levels of 250. Whether she can hold or book profits. Swati, your view on the charts?
Definitely, it's a hold from my end. 500 are the likely targets can be seen very soon. So book at the level of 500 levels.
Okay, Shantanu wants to know whether PG Electroplast is a good buy at the current level. Swati?
Not at the current market price. Wait for some more time. Any dips towards to at least 530, 540 levels can be utilized to take a long.
Okay, Ravi Kumar wants to know if BEL is a good counter to make an entry right now. Swati, your view on the charts?
BEL, na?
BEL, yes.
Yes, yes, definitely 20-30% can be accumulated at 400 levels. Upside rally can be resumed up to at least 430 to 440 levels.
All right, okay. So viewers, that brings us to the end of this rapid fire session. Of course, Ask Profit as well. Swati and Astha, thank you so much for taking out the time and taking us throughout the show and helping us with the queries. But like I said, we're completely out of time in this edition of Ask Profit. Do stay tuned. KYC on the other side.
जब से दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ। लो बन गया ना चपरासी।
Not banking with AU.
AU?
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम।
AU?
हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
सामने एक नया सुपरमार्केट खुलने वाला है। क्या करें कि मेरे पुराने ग्राहक भी रहें और मुझे नए ग्राहक भी मिल जाएं।
देखो, आप एक चाय कॉर्नर लगा सकते हो। चाय पीने पुराने कस्टमर्स रुकेंगे और नए कस्टमर्स भी आएंगे। इसके अलावा बिल्स और सेल्स देखकर हमें कितना
With SBI, celebrations unlimited. Make every celebration special with festive offers on car, personal, gold loans and loans against mutual funds.
राजस्थान शौर्य और वीरता की धरती। अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र। इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव। विकास भी विरासत भी सिर्फ NDTV राजस्थान पर।
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, but today let's give you some guesses, why we are calling a company here. And for today KYC, let's guess the company. The first one is it's a recently listed pharma company. Half of this guesswork I already have given it to you. This has been subscribed 94 times during the IPO. Ace investors have also participated. But the company has come with a weak Q2 numbers. Just after listing, company comes with a weaker set of numbers. And of course, the market will treat it on the other way and there will be some punishment. The company I'm talking about is Sudeep Pharma. That's the focus. And there are some questions I need to ask. The first is, what led to a weaker Q2 just after its IPO? Second question is, there's a margin pressure coming when I'm analyzing their numbers. Will this margin pressure continue in the third quarter itself? That's another concern. The third question I'll be asking is, working capital issues are still there. Will this continue going ahead? Because once this happens, this continues for at least 6 months to almost 9 months in this industry like the company which is operating. And will the return ratios remain under pressure because company is going through expansions and also some restructuring, and that is where my concern comes on the balance sheet. Also, what is the market potential for supplements? This is a very sunrise sector and we are seeing all across the market nutraceutical players all flocking this segment. So what's in it for the company and how different it is as if you position this company with another pharma company? So these are the questions we'll be asking for Sudeep Pharma, but I want to make you understand something about this company. This company is a bit different. It's just not a regular pharma company, and I would like to point out this was recently listed and there is a moat in this kind of business. To be fair, the company manufactures pharma excipients or food grade minerals. Now this excipients is nothing but, let's just say, the best supporting role when it comes to a medicine, and what happens because of this is they help in giving a binding agent, they become a flavoring agent, and where the real action is supposed to happen for this table, for these tablets or medicines, that's what the excipients do. So they are very, very much important in the entire ecosystem. Over here, specialty nutritional ingredients are also there as we move towards the lifestyle side, and that is where Sudeep Pharma comes in. Now the IPO euphoria, that has come down on a weaker Q2 earnings. That's what the street is looking like. Last 2 trading sessions, there were under selling pressure post the earnings. IPO subscribed 94 times. That is what everybody was talking about. But if the numbers don't come, the markets do punish you. And of course, we're looking at the large listing gain. That was the pop. That was 24% for this company. And there were some important investors, Mukul Agarwal, Prashant Jain, related promoted entity also participated. But now let's go back to the segments, the core business. Where's the action? Specialty ingredient, that's around 67 odd %. Remaining the pharmaceutical, the food, that's around 34 odd %. So that's the revenue breakup I'm getting via the business. Geographical distribution is largely, there's around 58% for Indian markets. Exports, if you look at it, that is also coming in roughly on the higher side. But this is the detailed breakup coming in. It's still, there is no major, you could say, concentration happening. The distribution is slowly planning out. There are 3 plants in Baroda, Vadodara, 1 facility in Ireland, which was acquired in FY25. That is what we'll be looking out for. The total installed capacity currently stands at 72,246 million tons per annum going ahead. And also they're setting up a new expansion plan in Gujarat, and that is why the pressure is coming. The IPO is also done to actually take some proceeds for this expansion, and that's why we might see the pressure in the financials for the company because they have taken a big hit. Now expected to be operational by Q4 itself. So we will be asking the management what is the status about this important expansion, and because of that the street will be looking forward to the commentary as well. But now let's focus on how our KYC show comes up, and we give you generally 8 categories which has to be focused in. And largely I'd like to point out the financials, the income statement, the balance sheet, the cash flows, and even the return ratios. These are the 4 parameters where I'll judge the company, and the remaining 4 parameters, they include shareholding, street cred, valuation, outlook, and then we'll come with a combined KYC rating for Sudeep Pharma as well. Let's start with income statement where the action is there. Of course, recently we have studied the IPO because the last numbers which you can see, they have been decent. Revenue has grown up almost 14%, but EBITDA, that is something which has brought my eyes into this interest. That's around 38% growth coming in. Margins very decent, for a pharma player, getting a 39 to 40 odd % and sustaining, that's something which is commendable. But net profit, that has also done well, and the Q2 numbers, that has become sore for everyone, and because of that there is some pressure in the stock as well. Revenue, nothing much happening, just 15% year-on-year basis growth coming in. And if we could just show the numbers again, how it's actually panning out for the Q2. The concern is here, the margins, the net profit, that is where the important market was looking, to look at the good numbers. But just after IPO, a weak set of numbers coming in. Now let's pull up the margins, what happens. And largely the margin trajectory was 40 to 39%, and we thought this would be sustaining, but then again it's back to 31, and that's where the question arises. what's the actual sustainable margins going forward? Will there be more pressure as companies going for expansion as well? So two sides of the coin, and I will be giving a neutral rating when it comes to the income statement. The second one is balance sheet. That's also very much important in post IPO. Of course, we have seen the numbers shore up, going on the higher side, the equity base going up, the book value going up, but the borrowings, that has slightly gone up by almost 6 odd crore rupees. So we thought that there would be some debt reduction, but this has not been used. This has been used for expansion when I am talking about the IPO proceeds. Also note the cash bank balances, that has showed up properly, and that's roughly gone up from 37 to 68 crore rupees. So it's decent, but it's not something which is very great. On that basis, I will give the balance sheet parameter a neutral rating. So income statement, balance sheet, both of them are done. But let's look at cash flows. It's one of the most important things to judge a company. If a company claims it is having a strong moat, if a company claims it has a strong margin, if a company claims that its products are very strong compared to its peers, let's see what the cash flows suggest then. Operating cash flows, that has gone down, and that has started for me to research more into the company, and the concerns start coming in here. Also, let the PAT numbers, that has also actually gone down. It's down almost 78 odd crore rupees. Let's come down and just show you the cash flow to PAT conversion. That has been going down from FY24, FY25, and now in September as well, and my concerns are starting to come. The net cash flows, that has also been erratic, and just 11 crore coming in the month of September. So we'll be asking company the questions on the working capital, and will it actually improve, or will the pain be there for the next 6 months or 9 months or even 12 months? Because these industries, the working capital issues are definitely there, and they have a higher time period for that. And because of that, I will give a thumbs down when it comes to the cash flow segment for Sudeep Pharma. Also, let's look at the return ratios. I had already mentioned to you that the return ratios would be in a big problem, and why this is? Because company is doing expansion, and this is of course a greenfield expansion coming in, and the nutraceutical business, there are some restructurings happening as well. Company mentioned it honestly in the Q2 numbers as well, but the market sees how the growth is there, and the sustenance of 30 of these numbers actually might be coming down as well for the next 6 months or 1 year. So ROC numbers still decent, but I would be giving because of its history, I would be giving this a thumbs down. So we spoke about 4 rating parameters to you, and right now the financials, they were evenly poised, but there's some concerns came in cash flows and the return ratios. But let's look at the other aspect also, and this is the shareholding aspect. If you're seeing just only one data set is there because it was recently listed, so I'll be giving a benefit of doubt to the company. But let's look at how the numbers pan out. Promoters are having 76% stake, so likely in the next 3 years there'll be a minor stake sale for SEBI norms to be fulfilled. FIs, very not much, but DIs have come in properly, 15%, almost double of what the stake was there in the public shareholding. So net initial levels, it is looking neutral to me. With time, we'll judge the company more, and more progression will come in both institutional and public participation, and let's see how things move. But as of now, where the things stand, I will be giving a neutral rating when it comes to the shareholding pattern. Street cred, very small history, a very strong listing pop, but after that there wasn't much happening. From the listing price, stock is down 19%. From the IPO price also, we see there has been a good downtick of more than 10%, and post the earnings in the last 2 trading sessions, the stock has seen selling pressure. So that is where the issues start happening, and for that, if you remove the IPO euphoria, now slowly the company, the fundamentals and the pricings have started to match. Might look to go down also from here onwards. So right now I'll give a thumbs down when it comes to street cred for Sudeep Pharma. But we spoke about the stock movement and the shareholding, but let's also talk about how the valuations pan out. The company claims that in their RHP there isn't much any peer as such. I did a little bit of research. Sigaji Industries does have some kind of similarity. It's trading at a trailing 12 month of 54 times even after the IPO correction. That means there might have been a mispricing from the merchant bankers, or maybe the valuations were high. That this is what the street has been buzzing. But just to keep things in fairness for my show in KYC, I have got Nifty Pharma Index. That is at 33 times trailing month 12p. Even in this, I will still give a benefit of doubt to the company and a neutral rating coming ahead in the valuations front. So of course we need to give in more time as well. So 7 ratings are done. Let's go to the 8th rating. That's the outlook. Specialty ingredients, they are manufacturing, and that is where the street is very bullish on. These are high margin products, and we need to give time, especially for a long-term investor, 2 year, 3 year, 4 year, to actually see the benefits coming in. And if you had an IPO listing pop gain, congratulations to you. And now the upcoming greenfield expansion, everybody will be looking at this, especially the timelines and when the incremental benefits start coming in. Mineral chemistry expertise for battery material, that's what the management has been bullish on as well. But the question is, when are the R&D numbers going to come? When the client announcement will start coming in? That's what the street will be waiting for. Nutrition supplements is a large theme in the making. So of course, that is something which you'll be watching out for. So overall, looking at this outlook, I will be giving this a kind of a thumbs up going ahead. But let's just revise all the ratings, how the ratings have panned out for Sudeep Pharma. Recently listed company, 94 times subscription, but weak Q2 numbers. Income statement, balance sheet, it has been largely neutral, but cash flows and return ratio, that's where my concerns come in, and that's why I've given a thumbs down to it. Let's show the other parameters as well. Shareholding valuation, it's neutral. Street cred, after IPO, there isn't much thing. If you have entered discounter, and last but not the least, outlook, out of all the 8 parameters, this is the only parameter I have given thumbs up to it, because it is of course there in a sunrise sector, at least in their category which the company claims. So on the lower side of my analysis, I would give Sudeep Pharma 3 out of 8 in this segment as well. But there are a lot of doubts in the investor community, and we will clear all of them. But first, we'll slip into a very quick break, and on the other side, we'll be joined by Sunil Bhayani. He's the director of Sudeep Pharma. Stay tuned.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ। सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं, और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, compete, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with 2 major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. Use कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
Welcome back. We are now joined by Sunil Bhayani. He's the director at Sudeep Pharma. Very good afternoon to you, Shanil. First of all, IPO recently it was listed, high subscription numbers, but a weak Q2 numbers coming in, and of course the numbers have been on the weaker side. I looked at the margins, I looked at the PAT. What led to this kind of an impact in Q2, Shanil?
Yeah, hi, good morning. Thanks for having me on the show. I think, our business is such that I've always maintained this, that it's best to look at the business on a YTD basis. We operate something in the food pharma space. We operate a campaign order book, which happens on certain quarters for very large customers. We do annual contracts with them, but not necessarily that each quarter there would be a campaign. But throughout the year, there will be multiple campaigns, which is why if you look at the business on a YTD basis, right, you will see the growth that the business has done. I think 26% in terms of revenue, 19% on PAT. Q2, definitely, I think there were two reasons. One, certain campaign orders would not have occurred in this Q2 compared to Q2 of FY25. In addition to that, what has changed is, I think the tariffs were announced in August 2025, and that kind of led to a wait and watch scenario for the first month or so in the US, which is our largest market outside of India. What we've seen after that is, I think there was a lot more clarity that came in terms of which products were subject to tariff, which products are not subject to tariff. Today, 50% of our business to the US is now exempted. So while that clarity came in, customers started to place the orders again with Sudeep. I think there was a time differential, so a lot of the invoicing moved to Q3. So while you don't see the numbers reflecting Q2, they will certainly come in Q3. But again, we maintain that as a business, quarterly, there could be significant growth in one quarter, say slightly muted growth in one quarter, but on a YTD basis is the best way to look at our business.
Shanil, the margins fronts, that has been a cause of concern, and a lot of investors have also written to me. They've stated that, of course, before the IPO, the numbers were looking very strong on the margins, and we are asking, will this sustain or not? Now the margins are almost downtick coming in. I saw your Q2 numbers also. There were some reasons for it. Will these margins or the ROC numbers continue to stay in pressure for Q3, or will there be some bottoming out?
I think if you ask me honestly, I don't think there is any significant margin pressure. When you look at gross margins, they were exceptional last year in FY25. They were significantly higher for a one-time event. Otherwise, 63-64% is our historical average in terms of gross margin, which we are comfortable that this will sustain, and this is what you will see in the rest of the year for FY26. More importantly, on the EBITDA and net margins, what has happened is operationally we continue to remain as strong. However, and I mentioned this yesterday in my quarterly call, that we are making an upfront investment today in building out a larger sales team in the US and Europe, which are two key markets, including warehousing capabilities. Additionally, there is expense that we're currently booking in the business to support the growth in the battery materials ecosystem. So while that is getting expensed out today, that is, I would say in the next couple of quarters, you will see that investment today being, kind of bearing fruit and adding value to the business, both by going direct to Europe and the US through the direct sales approach, the margin will actually further improve. So while today there is an expense that we're accounting for, it's for the growth and the margin improvement in the coming few quarters.
Shanil, you explained us about that, but the greenfield expansion, that's what before IPO the conversation was, after the IPO conversation was, post earnings also that's the conversation happening. Give us the expected timelines, incremental benefits will start occurring. What will be these dates?
Sure. So as I mentioned, the greenfield is close to completion. We will commission the facility in the next couple of months. So in Q4 of this financial year, there is a total investment of 150 crores that will go into this greenfield, which is now almost complete. And if you look at our historical business, we've operated at a 2.5 to 3 times asset turn. And that is the kind of asset turn that we expect to maintain along with the margin profile for the new greenfield as well. So you will certainly see the benefit coming in FY27, more importantly in FY28.
All right. Shanil, the supplements part, we call it nutraceuticals or allied products. Yeah, I'll ask you two questions. One is the industry aspect of it. What are the key products which are the excipients are there, which is like literally, you could say, a very big supporting actor to a medicine? to simplify it for our audience. But you position yourself as a pharma company having no exact peer as such. That's what I read in RHP. So how different you are and what's your moat in your business?
I think great question. So I think we were a pharma excipient company when we started in '89. Over the years, we've transitioned from a core pharma company to now becoming a technology-led specialty ingredients. And why I say this is our expertise actually lies in the 6 proprietary technologies which we have developed at Sudeep. And the use of these technology is how can we make the mineral or the ingredient more effective in the human body? So how can we improve the absorption in the human body? How can we make the product more stable? How can we control the release के body में, where it gets absorbed, where it gets released, stability of the product. And these technologies are technologies which very few companies in US and Europe have scaled significantly, but no real competition in, say, other geographies, including India and China. And that is where we see the large opportunity in competing with manufacturers in the West. And that will also kind of drive the margin profile going forward as the specialty ingredients continues to grow. Today, it's close to 40% in terms of revenue contribution. In the next couple of years, we see this becoming almost 50% contribution to the business. And that will further drive the margin improvement in the business.
Yes, Shanil, you have mentioned that. If I'm not mistaken, please correct me. It's like something like in chemical industry, your products are like something like a flavor or a fragrance, having a high margin kind of a usage, and also overall the demand in the entire ecosystem is going up. Also the new product launches, I want to know a little bit about that, and if you could just give the non-scientific version of it so that our audience understands. You spoke about supplements, and especially if you can give us the lifestyle angle also. What are these key product launches or the categories you are looking at?
So we are, from a nutrition perspective, we are focused on 6 key minerals. So calcium, magnesium, iron, zinc, sodium, potassium. I think when COVID happened, we all recognized the need of having a healthier lifestyle and taking the necessary supplements. You consume, during COVID, people were taking zinc supplements, people were taking vitamin C. Historically, people take calcium supplements. So our investment going forward will be, how can we help an individual taking calcium supplement? How can we help them absorb better calcium into their bones? Whether it's iron, whether it's zinc, so improving the delivery or the level of absorption in the human body. In the greenfield that we are commissioning, we are expanding capacity of some of our existing products. Additionally, we will be launching certain new molecules again to do with the zinc, calcium, and iron. Again, focusing on how can we make the supplement more effective for the person consuming it. So, what you consume goes down, but your body actually improves the level of absorption that it receives.
All right. Shanil, one more question is there, because it's a very new product category and I've slowly started to understand that there is a moat in your business as well. But there are a lot of acquisitions and cross-selling from your arms also are there, right? So there's a key product, then there are ancillary products which keep coming in. Just to give us that entire view, next 3 to 4 years, where do you see Sudeep Pharma, going ahead? How will it look like?
I think there are 4. I think today from where we're sitting, there are 4 areas where we see significant growth opportunities. One is the greenfield and further investing in the minerals category, as I just mentioned. Second is strengthening our specialty ingredients or the technology-focused ingredients that we're doing. This has further been strengthened by an acquisition we have done overseas in Ireland. The company has been around for 40 years, and they are a key marquee player in the infant nutrition segment. As a business, we want to operate in critical end markets, whether it's infant nutrition, whether it's clinical nutrition. For example, people have started taking a lot of GLP-1 drugs for weight management. When what that does is people start to skip meals, but there is still a requirement of the relevant nutrition that someone needs to consume, right? So that the vitamin and minerals category for clinical nutrition is a key focus area for us. And the third is the battery materials that we're entering into. Again, mineral chemistry is our expertise. The product iron phosphate, we are today the largest in India and have been making it for 10 years. And we're leveraging that expertise to also offer a battery grade iron phosphate, where today we would be the first company globally outside of China to have the technology and the product readily available.
All right. Thank you very much, Shanil, for that. And we're seeing that the management is defending post its Q2 earnings as well. Lot to cover, lot to prove when it comes to Sudeep Pharma as well. And that's all for today. Thank you very much for joining KYC.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
छुट्टी पे तो चिलकर
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतू सा, और वो भी हर 3 महीने बाद।
नॉट बैंकिंग विद एयू।
एयू एयू सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
एवरी मंथ। सोच बदलो और बैंक भी।
IMTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, कम्पीट, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
Nice, yeah.
Hey, Mahi, suggest a cool bank जो environmentally conscious हो.
SBI, coolest है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, EV लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया।
How? That's cool.
SBI, the banker to every Indian. Truly.
राजस्थान शौर्य और वीरता की धरती। अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र। इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ NDTV राजस्थान पर।
Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. And let's take it straight to the big boys as we wind down on 2025. Let's get chatting with Kiran Majumdar-Shaw, who's the Executive Chairperson of Biocon. Kiran, always a pleasure to welcome you on NDTV Profit. Now, as we wind down on this particular year, Kiran, this has been a remarkable year with many, many milestones that have been achieved, which have been in the works for many years for you personally and your ambition in the company Biocon. So first of all, I would like to ask you, with this merger, biologics, Biocon as a combined force, what it means for you in the journey for the company.
So thanks, Nisha, and let me start by wishing you a very, very happy 2026 ahead.
Thank you. Same to you.
And let me start by saying, yes, this has been a very, very eventful year for us. And I think the recent announcement that we made of the intended merger between BBL and Biocon is indeed a big announcement, because I believe that this actually unlocks and creates the value that we have been witnessing in terms of our biosimilars business and as well as the GLP-1 opportunity ahead. And we felt that by combining the two businesses, actually we would unlock a lot of shareholder value for Biocon as a conglomerate. And we believe that this creates a bigger company, a much more diversified entity, and a simpler and elegant model, which actually then helps us to focus on, really leveraging the opportunity that we have of being uniquely positioned to combine both insulins and GLP-1s, the insulin biosimilars and the generic GLP-1s. So I think this is a big, opportunity for us now to drive big value. And I think this benefits all stakeholders.
Right, and it's a big development, and from next year onwards, the stakeholders, shareholders in the company will start seeing the benefit of the combined force. And Kiran, I know for sure that it has been in the works for several years, putting all the pieces together. Now, before we go to much larger conversation and big picture outlook for 2026, I wanted to ask you about one news development, which is about securing the global manufacturing and commercial rights for Hulio. What does this mean and how will it benefit the company?
Well, Hulio was an asset where we had basically a transfer pricing, profit sharing arrangement, etc. And I think once we basically got the whole business, as we have just discussed, we believed that it was important for the biosimilars business to be actually capturing the entire value. So I think from that point of view, we believe this is a big deal, and it now brings the asset under our full control. We believe we can get higher margins by doing this. And we also believe that we will be able to unlock significant growth opportunities having this advantage in terms of both cost efficiency and the kind of opportunities that we have ahead in terms of adalimumab.
Right. So this is also going to, it's a much larger play in what you had a commercial tie-up with. So that's really extending the benefits that could come out of it. But Kiran, as you look back on 2025, of course, many milestones for the company itself. But as a leader, industry leader in the healthcare space, how do you see this particular year for the entire sector? And what were the key highlights that came across for you?
So, Nisha, to me, the biggest highlight was the announcement of ANRF. I think this has been a very important step taken by the government to basically focus on IP-driven economic growth through research and innovation. And I think this is really going to help us all big time in every sector, especially even in the pharmaceutical sector. Added to this, of course, is the RDI, which of course helps the pharma sector particularly, because I think a lot of companies are beginning to invest in research and innovation that will drive even greater value. As you know, up until now, we've been really focusing on biosimilars and generics, which of course are very important growth drivers for the pharma sector. But going ahead, can we actually focus on innovative drugs and create even greater value is the opportunity we are looking at. In addition to that, I think we are also seeing the emergence of affordable innovation across the world. And I think India can lead in that. Even in cell and gene therapy, which is such a big challenge for the world to access, I think India has taken the lead in delivering affordable access to even CAR T therapies and gene therapies, hopefully in the future. I think there's also a very strong focus on ADCs and RNA technologies and synthetic biology. So a very, very interesting 2025 where companies have really focused on these emerging areas. ANRF is going to focus on critical technologies. And I think this is going to augur well for the entire sector and especially for companies like Biocon that has always believed in a research-driven approach and an innovation-driven approach to its business.
That's right. In fact, Kiran, it's been several years that we have been chatting about how India can make that shift from generic leadership to innovation leadership for the next year. That is a much shorter time period. How do you see this developing and the key aspects that you're watching out for in 2026?
So apart from what I've just mentioned, Nisha, because that it's going to take time for innovation to really deliver. So as long as we start that journey, I think there's a big opportunity ahead. But I think what is even more important is for us to notice what has happened at the macro level. One is, of course, the Biosecure Act, which is going to really open up a bigger opportunity in CRDMO. And this is something which India must double down on, which it already has in many ways, but it must get a much more significant market share. And I think here the whole focus on biomanufacturing is going to help us a lot. The Bio E3 policy focuses on biomanufacturing. And I think whilst Biocon has been the front leader in this, I think other companies also ought to then now focus on investing in biomanufacturing at global scale. As you know, and this of course opens up a much bigger opportunity for India as a whole. And then, as I mentioned, affordability is the theme for the global pharma ecosystem. And you know that President Trump himself is very focused on affordable access to drugs and pharmaceuticals in general. And I think this is also playing to our strength, because I think here the MFN condition that he's levying to most of the big pharma is actually an advantage to us. And I think we are now going to stop seeing cross-subsidizing of pharmaceutical products in various markets. And this actually then opens up an even bigger opportunity for companies like Biocon.
Right. So, Kiran, I know that how well connected you are in the global scientific world when it comes to healthcare space, and all those points that you mentioned, I'm sure is something that is the view globally that is really emerging. But when you look at Biocon going forward, how is the positioning of Biocon that you would like to see in the world? Of course, your push towards innovation in the last few years has also been very critical.
So, Nisha, first and foremost, I'm very proud of the fact that Biocon has already attained leadership in biosimilars amongst the top 5 biosimilar companies globally, and the only one out of India to really gain that kind of recognition. We have a very strong pipeline of products. We are also going to be the only company with biosimilar interchangeable insulins in combination with generic, GLP-1s, which again positions us very uniquely. In addition to that, we have a very large and growing pipeline of biosimilars and specialty generics as well. We are very strong, apart from the diabesity space, as we call it, in oncology and immunology. Again, Biocon's generic business plays to this strength, because we have very strong generic oncology products, and we have a very strong presence in immunosuppressants, which adds to the immunology aspect. So it's going to be a very exciting year ahead, and of course time ahead for Biocon as a company, as it merges into a single entity. And we will have a very simple, elegant structure of products and services. Services through Syngene, and of course products through the biosimilars and generics, which really makes us a very unique Indian company with this kind of spread of products. So I'm very excited with what is happening to our business and how we've shaped our business and the opportunities ahead.
You mentioned GLP now with liraglutide also launched in Europe as well as India. How's Biocon positioned in the global GLP-1 race, Kiran?
Obviously, everyone's, eyeing this very lucrative pie where, semaglutide is going to go off patent in many markets, including Canada. In addition to that, of course, Biocon, we believe, have got a competitive advantage because of our global scale in the insulins business, because GLP-1s is not just about a product play like any other product. It is about a device play. It is about at scale drug product and drug substance capability. And you just heard that the oral GLP-1 of semaglutide, which is the Rybelsus, has just got approved in the US. And this actually needs recombinant DNA capacity to make it at such large scale, which Biocon has. So I think this puts us into a very strong situation, because we will have end-to-end capabilities when it comes to GLP-1s. Of course, it's a very fungible space when it comes to insulins, because we've already created global scale manufacturing, whether it's drug substance or drug products. And peptides, whether they're insulins or GLP-1s, are very fungible. So I think it's going to give us an added advantage, and that's why we believe we are uniquely placed.
So you're uniquely placed for GLP-1, but how meaningful will this be in a near term of say 3 to 5 years, Kiran, as compared to biosimilars, your GLP-1 push?
Well, GLP-1s is a big opportunity. It's a huge opportunity because, you haven't even sized the whole market as yet, for the simple reason that GLP-1s right now has not been fully explored and leveraged in emerging markets, because the GLP-1 companies were really focused on the advanced markets. So this is going to add to the growing opportunity of GLP-1s. And I think companies are all focused on that. Of course, the real opportunities in advanced markets open up only in 2030 onwards, when semaglutide goes off patent. But in the interim, of course, there's a very large opportunity in emerging markets, especially Canada. Everyone's eyeing that opportunity. Of course, Biocon wants to play a good role and a front-running role in that.
Yes.
And we believe that because of what I just mentioned, we do have that opportunity to play a very significant role.
All right.
But I must say that this is going to be a big opportunity for everyone who wants to play in it, but they've got to have global scale to be competitive, which we believe we have at Biocon.
All right, so you have that global scale. Before we let you go, Kiran, a few of housekeeping questions about Biocon. After the 4,500 crore rupees of QIP, do you think now this equity dilution for now is sufficient? How long is it going to last, and what's your comfortable debt EBITDA levels that you are looking at post the integration?
So Nisha, first and foremost, we are having this QIP really to address the part cash, part stock deal that we have entered into with Viatris. And once we are post that, I think we are in a very healthy position, because as a company, we will be below the 2.5 debt to EBITDA ratio. And we believe going ahead, it will even go below 2 because of the kind of business that is growing and the kind of EBITDAs that we're generating. So organically itself, we'll be able to reduce the debt EBITDA ratio to a very comfortable level. And I think going forward, you will see this business growing stronger and stronger. And combining the businesses has actually helped us to deliver a very strong balance sheet. So I just think that we've done everything that needs to be done to put this business back on a very sound track, in a very healthy way, on a very strong financial footing.
So Kiran, your excitement about the next year, about the business of Biocon is really infectious, and that's really great to hear as we wind down on 2025. Thank you so much for joining us right here on NDTV Profit. Have a great new year, and we will connect with you in 2026. Thank you so much, Kiran.
Thank you, Nisha.
All right, now we'll slip into a short breather after that exchange of conversation with Kiran Mazumdar-Shaw of Biocon. We'll slip into a break, but don't go anywhere. We'll focus on the markets. Anil Rego, the founder and fund manager at Right Horizons, will be joining us with a market chat. Stay tuned.
Co-powered by Switch to Paytm Money. Brought to you by Aditya Birla Sun Life AMC Limited and India First Life, promoted by Bank of Baroda.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ। सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद एनडीटीवी इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, कम्पीट, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
ये धरती माता हमें पेट भरने के लिए अन्न उत्पन्न करती है, लेकिन इसका स्वास्थ्य भी ठीक रहना चाहिए।
Agricultural landscape of Uttar Pradesh is changing. Government's priority on direct interaction with farmers, a forward-looking approach to better technology and the timely implementation of agricultural schemes have made agriculture the backbone of development.
अन्नदाता किसान को समय पे खाद मिले, ये संभव है।
The Yogi government is providing subsidies of up to 50% for polyhouses or greenhouses. Training schools are being set up in villages for farmers. In the state, 79 Krishi Vigyana Kendras are currently operational and the construction of 10 more is underway. A modern seeds park is being developed in Lucknow. The low-cost, high-production mantra of the double-engine government at the centre and the state has doubled Uttar Pradesh's agricultural growth rate over the past 8.5 years.
Welcome back. You are watching Markets at 12 and let's take a look at the markets at this particular hour. Now for this trading day, as we are winding down in the last few days of 2025, it is showing a little sluggish movement when we talk about Nifty 50. It has seen a gyrating movement in the trading day today. But remember, it's only in a tight range of 70 odd points from the low point of the trading session to the high point. Closer to the high point and comfortably above 26,000 levels in this particular week is a big takeaway for Nifty 50. If we really take a look at almost all the sectoral plays, well, Bank Nifty, even though a lot of financials are contributing the most to Nifty 50, including HDFC Bank. It's Bank Nifty which is underperforming the Nifty per se and is on the flat line. So there is sluggishness of the holiday season that is quite visible in the market. Let's take it straight to Anil Rego, who's the founder and fund manager at Right Horizons. Anil, what's your sense now that we are winding down on this particular year and there is already some sluggishness that is seen in the holiday season, in the Christmas and New Year time. But how are you sensing the momentum as we begin 2026?
I am actually reasonably bullish on the momentum for 2026. In fact, for some time I've been talking about a revival in the earnings curve. And I think that is sort of coming through. One is also expecting small caps also to come in ahead in from the subsequent quarter as well, and also post relatively strong earnings growth. Just looking at even markets and the fall that has happened in respect to small caps, when you break it down and say, at different market cap levels, right? At small market cap levels, it's almost like 50% plus type of, falls that are seen in those particular market caps. So it makes, we think that we are also closer to sort of the correction phase. Valuations now are far, far better than what it was, say, the last 12 months or so, or 15 months. And I think, we are well poised for a good 2026.
Right, so you are positive about that, and you did speak about the small cap universe, the mid caps. Today, Anil, are underperforming the key indices, while there is participation from a lot of sectors, but the mid cap universe is a little weak and under pressure. Now, when you look at 2026 and the kind of correction we have seen, what's really looking much more mouth-watering when you want to pick up any particular themes or sectors?
Yes, so there are a few themes that we have been liking. Okay, some of it is also linked to where India is as an economy, and where we expect penetration to be there. So we write from our own space, which is sort of the wealth management space. We expect good movement from multiple areas. One is the wealthy individuals are sort of increasing at a good pace in India. The second is also the move towards advice, I think, over a period of time, as India gets, better and better at larger and larger economy, and as well, I think that will also move in. And when you look at, moving from, say, a $2 to $5 trillion type of economy, financialization of assets is there. So that is one area that we have been, very, very strong on. The other thing that I would take the other extreme, maybe on hospitals. I think post-COVID, there has been a complete change, and by our WHO standards as well, we have to more than double, the number of beds per thousand, and so those factors, I think, are also coming in play. We like various segments on the consumer side, both value retail, where tier 2, tier 3 cities, and the advent of brands into these tier 2, tier 3 cities in a larger way, as well as the other extreme, which is the premiumization, right? So on the premiumization is also another trend that is something that we like in the consumer space. So it may be, let's say, high-end watches. It may also be segments like jewelry, right? So we have a good set of opportunities.
And Anil, thank you so much for your insights coming in. Of course, hospitals valuations have been on the higher side despite and obviously because of the points that you mentioned. Thank you so much, Anil, for joining us on NDTV Profit with all your views on the market. Moving on then, remember the Delhi government has amended its excise policy, including a significant increase in storage and possession limits for the special denatured spirit, and also an expansion of provisions governing the sacramental wine for church use. Mahima is here to put all that into perspective. Tell us, Mahima.
Right, so Nisha, as you rightly mentioned, overall there's an amendment in the Delhi Excise Policy 2019, basically easing norms for two things: industrial alcohol storage as well as expanding permissions for sacramental wine. Basically, if you take a look at the special denatured spirits, the increased limits, max quantity that can be stored in the licensed premises has been increased from 6,744 kiloliters to 15,000 kiloliters, and annual authorized possession limit has also been increased from 64,000 kiloliters to 1,20,000 kiloliters. Now, there's also a scope of expansion in terms of where the sacramental wine is concerned. The Bishop of Delhi now can possess around 4,000 liters of duty-free sacramental wine versus that of 91 liters earlier. So that has significantly increased. Who benefits? Basically, manufacturing and industrial alcohol company producers will benefit from this. And overall, if you take a look at the consumption-based alcohol, that will not see any impact. So this is the overall view of what this change means.
Right. Thank you so much, Mahima, for getting us that story. All right, moving to HCL Tech. Now, remember, HCL Software, which is the software division of HCL Tech, has announced 2 strategic acquisitions, and that positivity is reflected on the counter as well. In fact, my colleague Jaspreet gets us all the details on what these acquisitions really mean for the companies.
Well, hi, thank you for that. Now, if you look at overall HCL Tech as a company has been acquiring entities. Over last week, we saw one acquisition, and this week we saw a couple of them. Starting with the first one, the company acquires the Jasper company from the CPG group. Well, this acquisition is a 2,000 odd crore acquisition, and this to strengthen companies' business intelligence and the agentic angle of the company going forward. And from the signing of the deal, within 6 months, this company to acquire a particular entity, and from Q4 onwards, we might see the uptick coming in from the top line as well. Now, in terms of the other aspects, the Jasper Soft has 115 employees, which will be joining HCL Tech's software division of the company. Now, the second acquisition is the Vobi acquisition, where the company is acquiring this particular startup at rupees 4.5 million euros. That's roughly 4.7 odd crores. Well, this is an early stage startup which currently operates in AI space and creates agents for the warehouses. This will strengthen companies' AI reach and distribution in terms of the overall aspect. So all in all, we see the stock in green today. Stock started off in red but has moved up in trade, showing overall positive sentiment for this particular acquisition. Interesting to watch out how does the Q3 and Q4 pan out for the company going forward, and what are company's view for the further acquisition, as the company has already done 3 acquisitions worth almost 4,500 crore in last couple of weeks.
All right. Thank you so much, Jasmeet, for getting us all the acquisitions, and HCL Tech getting a thumbs up because of the acquisitions made by HCL Software. With that, it's completely out of time on this edition of Markets at 12. But keep it with NDTV Profit. Lots of news and views on the other side. Stay tuned.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी।
Prime Minister Narendra Modi's dream of providing a Pakka house to every poor person in the country has been turned into record achievements through Chief Minister Yogi Adityanath's own vision and fast-paced working style.
60 लाख गरीबों को पिछले 8.5 वर्ष के अंदर एक आवास उपलब्ध करवाने में हमने सफलता प्राप्त कर दी।
Significant progress has also been made in the Chief Minister's housing scheme run by the state government. The target of 3.73 lakh houses will be achieved soon. Government land that was under the control of mafia elements is being freed and used to build homes for the poor. While it takes an average of 299 days to construct one house at the national level, Uttar Pradesh has set an example by completing a house in just 195 days. Through convergence, the completed houses have been provided with toilets, electricity connections, LPG connections, and drinking water connections.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio.
expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to Profit Buzzers. I am Sharad Dubey and with me is Mahima Vatsrajani, and let's just see the markets, how they're actually panning out. Initially, we had mentioned that there was a good decent opening, but then some gains were coming up and market is in a very small range right now. It's almost flattish, nothing is happening. And let's just pull up Nifty Bank also. Is there any action there? Largely, it seems like even there itself, there isn't much any action. That's trading with slight cuts, but still net both of these indices are flat as well. Also, let's pull up the India VIX. For the last 4 to 5 sessions, it's below the 10 mark. Today is Nifty expiry and we are not seeing any volatility. It's actually coming down and that's a cause of concern, especially in the options market. Let's pull up the Nifty constituents and see where the action is there. And of course, it looks like even Stevens and there is a rotation happening. Technically, if you could just pull up the Nifty constituents to show what are the top gainers here, and HDFC Bank is trying to show momentum. On the other hand, ICICI Bank is pulling it down as well. Reliance also is negative, not much action happening here as well. So that's something which we'll be looking out for. But Mahima, there's a concern there that this small cap rally is coming in the Santa space.
Yeah.
But will it actually continue? That's also we're looking at. How are the broader indices looking like?
Well, the mid-cap 150 is almost in tandem with where the benchmarks are, right? Let's try to pull that up. There's not much of a movement where the mid-cap 150 is concerned, just about 0.02%. So, flat as a bread. But the small-cap 250, as Sharad was mentioning, is where we're actually seeing the Santa rally. As compared to the benchmarks, the mid-cap 150, the small-cap 250 is moving in reverse. It's up by about 0.4%. So the broader end of spectrum is looking strong. Let's try to pull up the advanced decline ratio once again to just take a look at that. In terms of the overall sentiment of the market, you have 1500 odd advances versus that of 940 odd declines. So that ratio is almost 1.5:1. And that shows that there is strength in the broader end of spectrum, especially where the small cap 250 goes. Let's try to pull up the BSE 500 quickly before we go on to Varsha for the next story that we have for you. If you take a look at the overall BSE constituents, there's IRCON, which is leading that chart, up 10%. Chola Finance, of course, backing up by about 7%. RITES, KIOCL, IRFC are some other counters that are moving in trade anywhere between 5 to 6%. But on the flip side, you have something like a Coforge, Rajesh Exports seeing profit booking today. M&M Finance, Asahi India are some of the counters that are down by about 2 to 3% each. But with that, as promised, Varsha joins us with stocks that are in focus on the back of order wins and are moving in trade today. Varsha, over to you.
Well, thank you so much for that. Let me start with the Antony Waste, wherein the stock, if you see, is up 9% in trade today and was up 27% in last 5 days. Now, the company has one order of 329 crore from Thane Municipal Corporation, and the order book as of September, if you see, stand at around 12,000 crores, and the order timeline is 10 years. The company has also one recent order win, which is the biggest one. It's a 2 order from Municipal Solid Waste Collection. Then the order value stands at around 1,330 crore. Next on the list is Sanghvi Movers. Again, the stock is buzzing on the back of order win. The stock is up 16% in the last 5 days, and the stock price is 11.9% below 52-week high. Talking about the order win, company's arm has received 428 crore order from independent power producers, and this order will commence from Q3 FY26 and to be completed by Q1 FY28. And the consolidated order book stands at around 1,200 239 crore. Well, the next on the list is GPT Infra Projects. The stock is up 2.4%. The stock was up 6% in the last 5 days. Company emerges as L1 bidder for NHAI's 670 crore order, and the order is for construction of 4-lane elevated road, and the unexecuted order book, if you see, stands at around 3,591 crore. Onto the recent order wins, they've got 3 recent order wins. For supply of concrete sleepers, which is at 54 crore, but the biggest order is for supply of conveyor belt system, which stands at around 195 crore. So these are 3 stocks which are buzzing on the back of order wins as of today.
Thanks a lot, Varsha, for that. But Sanghvi Movers, this counter, just you can pick it up, the stock is up 5%. It was in the list for Varsha also. And now we are seeing the crane players actually gaining momentum. The order flows are getting announced, MOUs are getting announced in small cap space. There's Tarachan Logistics, and also Ace Construction is there. But today, Sanghvi Movers would be in focus, and that's on the back of a large order win that's coming in from Sangareen Future Renewables. If you look at it, the order size is roughly 429 odd crore rupees from prominent independent power producers. Joining us to decode these new order wins and the outlook going ahead is Rishi Sanghvi. He's the MD at Sanghvi Movers. Very good afternoon to you, Rishi, and it's a pleasure always to talking to you. Rishi, first I'd like to know about this order win which has come in, and now the industry specific standards also. We are seeing a lot of MOUs being signed with your peers as well. I want to get your light on both of these subjects.
Hi, good afternoon, and thank you for having me on your show. So we're very excited to announce this large order from multiple independent power producers. You know, we have been tasked with a turnkey EPC delivery from conceptualization to commissioning of nearly 270 megawatts in wind energy. So this order book will start in execution in Q4 of this financial year and will be delivered in the by end of 2027. This order we have taken in our step down subsidiary, Sangareen Future Renewable Private Limited, and this is in line with our 5-year strategy of Elevate 2030, where a significant portion of our revenue will come from the renewable sector and specifically from prominent independent power producers. The scope of work, as I mentioned, is from conceptualization to commissioning. For the MOU with ACE, this is a strategic MOU. The government of India has imposed an anti-dumping duty on select Chinese OEMs for the import of heavy slew cranes. So Sanghvi Movers and ACE have partnered together, whereby we are blocking the next 2 to 3 years of production, and we will be using Make in India cranes to build India's infrastructure. So the largest Indian crane manufacturer, we would provide cranes to the largest Indian crane rental player. We are also the 5th largest in the world, largest in Asia, but the largest Indian crane rental player to build India's infrastructure in the spirit of Make in India and Vikshita Bharat, which has been promoted by our Honorable Prime Minister.
Okay, Rishi, hi, Mahima also joining in. Just want to understand that overall, if you take a look at your order book, it's roughly over that 1200 odd crores, 1239 crores to be specific. Now, from my understanding, this entire order book will be billable in FY26. Just want to get a sense as to how confident are you that this will go through in terms of implementation without any slippages, and then what's the outlook looking like for the top line growth by the end of FY26?
So our current order book, as you rightly mentioned, is around 1,200 crores. Roughly 10% of that may get postponed into the next financial year due to delays on the customer side, which are beyond our control. We have also mentioned this in all our external facing communications. So my company is confident on delivering a historical top line which will be beyond 1,000 crores this financial year. Now for the next year, things are looking extremely positive and bullish. For example, in the renewable wind industry, I foresee that 6 gigawatts of additional capacity will be added. And we see demand of cranes coming from all core sectors such as cement, steel, thermal, nuclear power, and all other sectors such as ports, metros, railways, bridges, refineries, etc. So next year seems to be a very positive year, and our growth will look similar to our growth this year as compared to last year.
Rishi, with regards to your segment mix, overall crane hiring is around 68%, wind EPC is almost 27% now, and project EPC is around 5%. Considering that you have been signing orders with regards to the wind project side, do you think that this mix going forward is going to change for you? And then do you think this will have a positive impact on your margins going forward from a long-term perspective?
So, our core rental business is a high EBITDA margin business. It's 50%. We have invested significantly in our core business, almost 630 crores this financial year, which has been approved by the board of directors. And subject to board approval, we are looking to do another 300 to 400 crores next year. So we will be investing 1,000 crores in our core crane rental business, both in India as well as in the Kingdom of Saudi Arabia, where we provide crane rental businesses. And our EBITDA margins there are healthy at 50%. Our EPC offering under a step-down subsidiary, Sanghvi Future Renewable, is a high volume, low EBITDA margin business. So it will be around, it should be anywhere between 12 to 15%. So going forward, the volume from EPC will increase. However, we are making substantial investments in our core business. And we believe that while overall EBITDA margins may lower, at a consolidated level, we will be delivering historical numbers.
Rishi, I would like to get you in on this. Now the budget is also coming close, infra-related orders, just focus on domestic front. Are the inquiries going up post-monsoon, or are we seeing the levels are still flattish like what we saw in November?
No, we definitely see an uptick on demand. There is a significant amount of inquiries. We are sitting on an inquiry pipeline of 2,500 crores as of today. So really, the economy is doing well in terms of demand for cranes, and we are seeing it across all sectors.
Okay. All right. Got that, Rishi. Just one last question from my end with regards to the Saudi Arabia part of business. Just want to understand, by 2030, your plan is to be one of the biggest players in Saudi Arabia. Just want to get a sense as to what is the kind of investment that you're looking at for growing the business to that extent.
So we will have within our third year of operation, we are in our first year, we will have approximately between 120 to 150 cranes in Saudi Arabia. And in the first 3 years, we will invest anywhere between $80 to $100 million in the Kingdom of Saudi Arabia.
Right, Rishi, thank you so much for giving us those insights, and all the best for everything that you're taking up in the future plans of Sanghvi Movers. Thank you so much for taking out the time. Viewers, with that, we're also joined by Lancelot Dicuna, who's the CIO of ValueX Wealth Connect LLP, joining us now. Lancelot, hi. A very good afternoon to you, and thank you so much for taking out the time. Any quick view on something like a Sanghvi Movers or that space in particular if you're looking at?
I think Sanghvi Movers is definitely looking at an attractive proposition. It is the largest crane rental company in India. And what we are seeing is that with all the new orders that are coming in, plus the outlook looking strong, as they had mentioned, there is an anticipated revenue of around 1,000 crores in this year. So that should be almost 25% growth from the 768 crores which they did last year. So it looks a very interesting option, and maybe one can look at adding it to the portfolio, because even from a debt equity standpoint, they're not highly leveraged. 0.8 is the debt to equity, so it's reasonable as far as debt equity is concerned. And you are seeing consistent growth for the next 2 to 3 years, so which should be a good option to look at adding this company to the portfolio as well.
Right. Addition is something view is coming in from Lancelot when it comes to Sanghvi Movers. But shares of Chola Mandalam Investment and Finance Company, they have climbed up as much as 8% after the Murugappa Group company clarified on allegations made by Cobra Post in a report. Somit is here with more details. Somit, a significant short covering happening in the stock. What are the key details? Why it's so up?
If you look at the Chola Finance shares, they gained as much as 8.1% in trade today, and this is the biggest move that we have seen in the share price of Chola Finance since January 28. Biggest intraday move. Now, why this move? it was largely because of short covering is what dealers have highlighted. Now the stock, if you look at the stock for the previous 6 sessions, it was down nearly 8.7%. From the price of 1,736 rupees, it declined to 1,585, and this was because of multiple reasons for Chola Finance. And this short build-up that we had seen in the share price of Chola Finance largely reversed, and we have seen this kind of a up move coming in the share price of Chola Finance. Now yes, the management has clarified on multiple things that Cobra Post had alleged on the group. They said that the entire allegations are baseless, asset quality and liquidity position continues to be robust, the ICRA rating continues to be AA+, and the management also confirmed that all operations are in line with the compliance. Now do remember that Cobra Post, a local journalist website, had leveled multiple allegations on Chola Finance and the Murugappa Group, and this was largely regarding corporate governance gaps, flaws in Chola Finance, Murugappa Group of companies and the promoters as well, and there were clarifications that came in from the company side. But today's move that we are seeing in the share prices is largely because of short covering that we are seeing in the counter.
Soumya, thank you so much for getting us those details. And so it seems like the entire worry around the report, the Cobra Post report, has not affected the stock at all. Your quick view on this one?
Yeah, so I think Cholamandalam has been relatively good as far as corporate governance is concerned, and I think this issue about the cash deposits that Cobra Post is saying, as well as the undisclosed related party transactions, I think those should be able to be explained in the normal course of business. So given that background, since the management has come and clarified a lot of these issues, so it really is a strong company, and one can look at holding on to the investment if already has an investment here.
So the hold call is coming in from Lancelot when it comes to Chola Financial if you are already holding the stock. Now time for a quick break. We'll be right back. Lots more lined up on the other side.
राजस्थान, शौर्य और वीरता की धरती। अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र। इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ NDTV राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 AM to understand your next big bet.
you're watching Profit Buzzers here at NDTV Profit. It's time for Trending in Trade, your snapshot of the stocks making the most noise today. Jasmeet is here with the details. First up on the list is the entire defense pack. Jasmeet, what's the latest one that's buzzing in the defense pack?
Well, thank you for that. So today we are covering the stocks that are sensitive to the budget and the stocks which are buzzing on the back of the upcoming budget announcement. Starting off with my first defense segment, I have something like a BEML. While the stock is up almost 11% in last 8 trading sessions and trading currently at 32% lower from all-time high, we can say an upside for this stock going forward from here on. The next stock is BEL. The stock is up nearly 5% in last 3 trading sessions, and even this counter is down almost 30% from all-time highs. While something like Apollo Micro is also up almost 16% in last 3 trading sessions, and overall trading volumes are 32% lower compared to the all-time high. If you look at the volumes today, they're 57% higher than the average 20-day trading volumes. Now I have Paras Defense as well. The stock is up almost 5% in last 5 trading sessions, and if you look at the overall stock, it's down almost 30% from all-time high. So we see a trend where most of the defense stocks are trading almost 30% lower from the all-time highs. It's something to watch out. How will the overall budget angle play out for the stocks, and will FY27 and FY26 be something where these stocks come up and shine together? I would also like to mention my last stock, that's Data Patterns, where stock is up almost 5% in last 5 trading sessions. But if you look at the overall stock, it's down almost 20% from the all-time highs.
Thank you so much for getting us those details. Lancelot, any of these defense counters on your radar right now, just before the budget is announced?
I think, I've been tracking Data Patterns. It looks very interesting because they are migrating from providing only radars into providing entire, the entire missile guidance systems as well as radars for fighter jets and planes, and that should be good for them. So as they migrate into providing a larger portion of the supply of aircraft, we'll see value addition happening. While at this point in time, the stock is trading at a fairly high price earnings multiple. Given that there is a strong growth potential, as the growth plays out over the next year or so, then maybe one can look at, if the multiples do correct, it becomes a long-term opportunity to hold on to the stock.
All right. Jasmeet, coming back to you, the railway stocks, they have been chugging along the last 2 to 3 trading sessions. The pre-budget trade is happening. They're already, downward pressure in these stocks for the last 1 year. What are the stocks in your radar?
Well, as rightly said, alongside the defense, you have railway also buzzing in trade. If you look at something like RVNL, it's up almost 11% in last 8 trading sessions. And the stock has surged the most in last 4 months. And the call options have doubled for this particular counter. If you look at the overall volumes, they're roughly 5 times the 20-day average. Now, there's something like Jupiter Wagon. Now, this counter is buzzing on multiple reasons. First is the volume, where the volumes are almost up 40 times on 20-day basis. And the recent news from the company where the promoter is increasing its stake from 18.6% to 19.2%. It's something that has created an overall positive momentum for the shareholders out there, and that's why the stock is up about almost 12% in trade today. Now, in terms of other stocks, I have Titagarh Railway trading again at 11% high in last 3 days. In terms of the all-time high, the stock is on 36%. But something like Taxmo Cover, like this particular railway companies, the stock is up 11% in last 8 trading sessions, and the volumes are up 7 times on 20-day trading basis as per today's data. Now, lastly, I have RITES. For this particular counter, this stock is up again 11% in last trading sessions, and recently company has signed an MOU for transportation of infra at Botswana. Now, if you look at the overall this particular counter, the stock's volume are at 14 times the 20-day average. So we see the buzz coming across the railway as well as defense coming up on the back of the budget.
Thanks for that, Jasmeet. Lancelot, I want to get you on this. The railway pack, they are buzzing now. Technically speaking, the charts are suggesting a good up move, and maybe a positional bet could be there, at least till the budget. Anything in your radar?
So, most of the valuations in these railway stocks are, extremely high at this point in time. And based on the anticipation that they will receive, large orders in the budget, it sort of spurs the price earnings ratios even higher. But if you look at the stocks, from getting orders to converting it and growing profitability, I think there lies the challenge, and where we may see, because of some disruptions or because of lower profitability in terms of earnings, you could see that these stocks have a very strong possibility of getting re-rated on the downside. So at this point in time, it's better to stay away from high price earning stocks, especially in the railway segment, because things like budget could immediately change the outlook and one could be set in for a big disappointment over a longer period of time.
Lancelot, in fact, let's try to pull up how Jupiter Wagons has done in the past 5 days. I mean, look at the rally that the counter has seen. It's quite significant in a way, and the chart actually suggests as to how it's done so far. So that's with regards to some of these railway names. Now, if you take a look at some of the counters that are moving in trade today, there are two IT counters that are in focus. The one IT counter that we've been talking about is Coforge, and the other one is Cigniti. And Jasmeet is still here with us to break that down for us as to why these two counters are buzzing. Jasmeet?
Well, thank you for that. Something like a Coforge is buzzing on the back of the announcement where the company wants to do a fundraise. Now, well, there are a few concerns on this particular counter, given that company has enough cash reserves, but they're still going for fundraise. That's something to watch out for. And the company's guidance that they want to return back 70% of cash, is that something that is in concern? These are the couple of things why the stock is tanking in trade after the announcement. Now, something like Cigniti, where Coforge is a majority stakeholder in the company, is also tanking in trade as they hold the stakes in Cigniti. Now, if you look at the overall fundraise, the board to meet on 26th of this particular month to consider the fundraise. And as per the last fundraise, the company had done at around 4,300 rupees. This was the pre-split of the stock price. It was back in May 2024 to buy Cigniti per company itself. Now, in terms of the other concerns of the management plans on growing by acquisitions, as they mentioned in the investor day presentation, while they also make a note stating that they want to acquire more clients by the terms of acquisitions. While in terms of their opinion towards the Cigniti acquisition, they stay really positive about it, and they say out of top 3 clients of Cigniti, the 2 are already clients of Coforge going forward. While this is something that will be in focus on 26th to see why exactly is the board raising money. Is it for the acquisition or for other corporate purposes? While on the other hand, company also plans to touch the 2 billion revenue mark by FY27, for which they are being on track itself. Given the Coforge is the fastest growing mid-cap firm in the current sector, and over last few quarters they have grown the most compared to the large cap and mid-cap space as well. The overall fundraise is something that is creating the hang for the particular stock. It's to wait and watch on the analyst call what's the reason behind the fundraise and what's their outlook with regards to returning the 70% cash to the shareholders going forward.
All right, Jasmeet, thank you so much for getting us those details. Both counters in focus. Coforge down by about almost 5% as we speak. But viewers, it's time to slip into a very short break, but we'll be right back with more news and updates on the other side, so do stay tuned.
राजस्थान शौर्य और वीरता की धरती, अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र, इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ NDTV राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Lackluster trade on the Lal Street even as Nifty continues to hold steady above the 26,100 mark. Small cap continues to outperform benchmarks and it fails to hold on to earlier gains. Realty, Pharma and PSBs under pressure. Metals continue to shine.
Ambuja Cement surges as the company moves to consolidate its operations with the merger of its subsidiaries ACC and Orient Cement. The industry giant plans to create a pan-India cement powerhouse.
And Chola Finance in focus after the company refuted allegations made in an online blog post over financial irregularities and termed the claims as malicious and baseless.
KSH International debuts with a discount of 3% on the bourses. This follows 83% subscription of its 644 crore rupee issue.
And the Delhi government amends its excise policy, including a significant increase in storage and possession limits for special denatured spirit and an expansion of provisions governing sacramental wine for church use. Welcome back. You're watching Profit Buzzers on NDTV Profit. An interesting day of trade that we are looking at. Clearly, the volumes are pretty shallow in trade right now. The key over here is how long will we be able to sustain with this number above levels of 26,100 as well. In fact, 26,200 is what we are nearing as we speak right now, almost trying to inch towards the day's highest levels. The key over here is it is expiry. In the last hour of trade, what is the turn that markets are going to take? Let's also get it Lancelot Dikuna from Value Wealth Connect, who's joining in as well. Lancelot, welcome to the show. Always a pleasure to speak to you. We're just in the last leg of 2025, entering 2026 in the next couple of days. Anything that comes to your radar as buying opportunities?
Well, at this point in time, there's nothing really especially cheap that comes in or looks attractive, in a sense that most of the companies, we probably will be able to assess a little bit more accurately after this quarter results are announced. Because, the last quarter results, there was a lot of good results, but we need to see whether those companies are able to follow through in the next quarter, and that would give greater strength in terms of the earnings upgrades for the following year. Because in case it was only for a quarter or two and, earnings are again tapering off, then one would wait for, some price correction before adding to companies. But the sectors which look really interesting are, maybe the travel sector, the hotels, healthcare as a sector. I think the automobiles and auto ancillaries, these are the areas where you will see a growth coming back. And especially even consumer discretionary, where we have seen lifestyle and we've seen an increase in sales due to premiumization that is happening. So these are the areas which we are looking at, trying to watch out for opportunities. Maybe this quarterly results which are announced in January, that would give a better edge to understand whether the trends are going to follow through for the next year or not.
Okay, makes complete sense, Lancelot. The other counter that we're focusing on today is something like a restaurants brand, Asia. Now, there has been a block deal in this particular counter where around 1.3 crore of shares have changed hands in that block. Recently, in November also, we saw a Mansa investment sold around 2.05% stake. The stock performance, if you take a look year to date, the stock has not done anything. It's down by about 22%. So still continues to be under pressure, and that is, there are quite significant reasons behind that. The company has not been able to scale up its business in the fashion other QSRs have been able to do it in the past couple of quarters. Now, if you take a look at first half of FY26 takeaways, there has been a growth in same-store sales growth, but it's been very slow. In terms of the India execution, that remains anchored on traffic-led growth. So it's not a price-led growth for them right now. Profitability agenda is increasingly going to be a structural one rather than a price-led growth is something that the management has said, and they're focusing on increasing sales through value and menu innovation, which has been the case in a lot of other QSR companies as well. What to watch out for going forward? Well, Q3 and Q4 is something where labor normalization will take place, and that could positively impact their costs. Overall, broiler rollout completion in May or early April is something that they're expecting. So the next FY is something where the cost benefit of that will come into picture. CRM activation is something that the management had said that over the next few quarters it will take place. We'll have to see as to how early that implementation happens and how much of a cost saving that brings to the table. And lastly, Popeyes turnaround, which has already started, but we'll have to see as to how the awareness of this brand happens and how it scales up going forward. Lastly, in terms of outlook, the management plans to add around 60 to 80 new restaurants every year. It plans to reach around 800 restaurants by FY29, and gross profit margins to be at around 70% by FY29 is something that the management is targeting. So this is the overall view of what is happening with the counter. Of course, today it's buzzing on the back of a block deal up 2.7% as we speak. With that, let's also welcome in our technical guest, who's Sachin Janadar, who's the AVP Derivatives Retail Research of IDBI Capital, joining us now. Sachin, with regards to Restaurant Brands Asia, it's not done anything year to date, down 22%. Do you think that it's found its bottom now and from here on it can see a further upside, or no? Sachin, I think you're on mute. Okay, I think he seems to be fixing. It seems to be a technical error. But Lancelot, I'll quickly come to you then. Restaurant Brands Asia, would that be your preferred pick in the QSR space?
So not really at this point in time, because the last 7-8 quarters we've seen sales have been relatively flat, between 611 crores to about 700 crores. And operating profit also hasn't really grown. It's been around 70 crores per quarter. And it's been in that very narrow range. Although, one has to consider that what we had seen in the past was on the back of high food inflation, which has sort of tapered down over the last 12 months. And going forward with the measures being taken by the company to sort of enhance its brand as well as its store presence, you could see some improvement. But if you look at it from a growth perspective or a valuation perspective, it's still highly priced at this point in time. So it's better to wait for a while, see whether the steps being taken by the management are showing some effect both on the top line and the bottom line. And then one can have, when one can look at buying it, because alternatively, there are other companies in a similar space which are also doing much better, which have much better operating ratios as well as growth ratios. So one would stick with those names at this point in time.
All right. Okay, Lancelot. So that's the fundamental view with regards to where Restaurant Brands Asia is concerned. Sachin, I'll again come to you. Your view with regards to where charts are concerned. Has it found its bottom?
Currently on a daily and weekly charts, the stock is in a downtrend. And today it has actually touched a 50-day moving average, wherein 68 levels are the crucial levels for this stock. If it is closing above 68 levels, then we can expect 70 and 75 levels on the upside. However, this will be the last level for this stock, and again we can see the resumption of the trend on the downside.
Okay, so that's with regards to where Restaurant Brands Asia goes. Now, this is time for a big budget breaking as well that, my colleague Shrimi has been getting us time in and time out. Now, the customs duty reform is set to be the next big ticket budget overhaul, with Finance Minister Nirmala Sitharaman expected to outline a sweeping revamp to simplify procedures, cut tariffs, and boost the procedural efficiency. Shrimi joins us with more details. Shrimi, over to you.
Yeah, what we are picking up that the custom duty reform is being positioned as next generation reform in the upcoming budget, and in fact sources indicated that there could be a dedicated paragraphs in the finance minister budget speech is what sense we are getting. And talking about the broader elements of this custom duty overhaul is basically focusing on simplifying the custom regime, reducing the tariff complexity, and improving the procedural efficiency. Now, talking about the tariff aspect, there are a couple of points in that. So first up is with respect to that there are multiple notification on the concessional rate. There are scattered duties around, and they are planning to sort of bringing it into single and comprehensive notification. The second one is they are planning to sort of reduce import duty on some raw materials which mainly focus on semiconductor, EV materials as well as specialty chemicals, and this is also mainly to do with correcting the inverted duty structure is what we've been indicated, and in fact they are also trying to align these tariff with the tariff talks with India is been doing and certain FTAs being signed, and important being the United States where the talks are still in progress. And the third one is of course the procedural efficiency, where the government is planning to sort of reduce the timeline of the cargo clearance, the custom clearance, which currently taking 3 to 4 days of the timeline, which they are planning to reduce it up to 48 hours. Of course, there's a lot of focus on bringing automation in the custom regime as well as making it a faceless proceeding. So with all those details, of course, the exercise is on, and we will get more concrete details closer to the budget date. But for now, the sense being that there will be an overhaul, the next generation overhaul in line with the GST and income tax, and that will be implemented in a phased manner through FY27.
Thank you so much for that. A couple of sectors that you're mentioning about is semiconductors, EV batteries, and you're talking about rare earth mining. Lancelot, anything that comes to your radar in terms of stocks that one should be watching out for on the back of the customs revamp that could be the next big reform?
So I think, it's difficult to look at these particular companies. While the customs reform is beneficial for semiconductors, for battery, charging, for EV manufacturing, as well as for rare earth magnets. But most of these companies, if you look at the price earnings that they are trading at high multiples. So it's better to stay away because, you actually have to see profitability grow and demand grow, which will drive earnings growth, and then only one can look at ensuring. Otherwise, till that time, you are actually basing your investment on the hope that things will get better. So it's better to stay away. Let's see how the duty cuts play out, what kind of profitability and growth you can see in revenues, and then we can pick up specific stocks.
Okay, all right. So that's the view with regards to where some of these names are concerned. But moving on, let's talk about Interglobe Aviation, that is Indigo. In fact, sources are telling your channel that Indigo's global expansion plans for FY26 remain firmly on track, with the airline preparing to launch flights as per its initial plan. Danish joins us to give us more details as to what's the development looking like. Danish?
Indigo sources are telling us that their plans to launch international operations, they remain on track. Let me tell you that in May this year, the CEO was holding a press conference in which he said that Indigo will be expanding to 10 international destinations. Out of that, Indigo has already started flights to 5 destinations. In the coming few days, we will hear an announcement that Indigo will be starting flights to Athens from Delhi and Mumbai. So their international plans are on track. There were 4 countries which Indigo initially had thought of flying to, which were 4 Central Asian countries. Those names haven't been revealed yet, but sources are telling us that they will be flying to those international destinations as per the plan. But besides this, if we look at the wider angle, sources are also telling us that Indigo will be now taking a measured approach as far as their expansion is concerned. And this is on the backdrop of whatever we have seen in the past many days, the tight regulatory scrutiny that is happening. So by this, I mean that Indigo will be expanding when they feel it is right for them to expand. And this will solely be dependent on the number of pilots that they have. Sources are further telling us that Indigo is also fast-tracking its command upgrade program. Well, what does that mean? Command upgrade is basically when a first officer is brought into a process to get promoted to become a captain. So all in all, if we see Indigo's international operations are on track right now, they will soon be inducting an A321 XLR by the end of this month, and by the end of FY26, Indigo will be having at least 3 A321 XLRs, which will definitely help Indigo to fly to those far-fetched international destinations where currently it is using its leased wide-body aircraft from North Atlantic. So, to sum it up, Indigo sources have confirmed to us that the international plans remain on track, and they're gonna take a measured approach as far as future expansion plans are concerned.
Okay, thank you, Danish, for that. In fact, let me come to you, Sachin, on this one. With the way things have panned out for an Indigo, what are charts indicating? And, Indigo's loss has been a benefit to SpiceJet if you have to talk from a fundamental perspective. Let's compare both the charts. Where are you seeing strength?
Compared to SpiceJet and Indigo, Indigo is better on a weekly chart. But however, it's in the downtrend on a daily chart. Even on a derivative data front, 5200 call writing we are seeing currently. But as soon as 5200 is closed, we can see upper levels wherein we can see 54 and 5500 levels, which will be the next levels for the Indigo. On a weekly chart, compared to SpiceJet, I will totally say one should avoid, and it has found support near the 4600 levels, Indigo. So I think the bottom has been made in this stock, and we can see more upsides in coming weeks.
All right, so that's the way with regards to where both these airline charts are concerned. But viewers, with that, it's time to slip into a very short break, but more news and updates on the other side, so do stay tuned.
Yeah, 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 yeah.
राजस्थान शौर्य और वीरता की धरती, अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र, इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ एनडीटीवी राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome back. You're watching Profit Buzzers on NDTV Profit. The way markets are panning out right now as well, a lot of counters that are buzzing in trade as well. Let's pull up a KIOCL as we speak. Strong moves coming in on this counter. Apart from a KIOCL, you have names like Nazara, which is buzzing in trade, or Con, IFCI, Railtel. All of these counters see gains upwards of around 7%. Jupiter Wagons 13 to 14%. We've spoken to about a few of them. Sachin, are you seeing further strength on any of these charts that I mentioned? Jupiter Wagons, Nazara, or Con, IFCI, Railtel?
So comparatively, JWL is looking very good. Still, in 2 days, it has run a few almost 30%, but still I think the bottom has been made in the stock. The double bottom formation has already made in the stock, and we can find 445 levels to 500 levels also in the stock in coming weeks to months.
Okay. All right. So that's with regards to where some of these railway counters are concerned. With regards to the defense space as well, we've been talking about this as to how both of these sectors, not just the railways, but also defense pack as a whole has been moving just before the budget. Sachin, I'll come to you on this entire pack as well. Any particular counter that you're looking at right now where charts are looking extremely attractive?
So in compared to rail budget, the defense sectors actually are in downtrend, but however, I like BEL, Bharat Electronics. Overall, the chart structure is very good in the stock, and recently it has found support near the 200-day moving average. We can see further levels. Currently, it is trading around 401 and 402 levels. We can see 430 and 440 levels in coming days.
Okay. All right. So that's with regards to where the defense counters are concerned. In fact, Belrise promoter Sumed Barved confirms that a defense pact with Plassen for 80 EMM EVS and a 6.56% stake sale worth about 897 crore is something that has taken place. So let's listen into what he had to exactly say about this particular MOU that they've signed.
This company called Plasan Sasa that we have signed a strategic partnership with. They're a global leader in the armored vehicles and ballistic protection space. They're doing some incredible work globally, including in the likes of the US and various other countries. The partnership that we signed is specifically for this product called the Atom, which is a UGV, an unmanned ground vehicle, which we are looking to not only sell and manufacture and sell in India for the MOD, but also are working on a manufacturing partnership for them. We'll be manufacturing parts for them for their global platforms. That is the idea that we're trying to work with them. And it's a very unique, one of its kind product. The best part is it can run independently, or it can be attached to another prime vehicle. And as it can be, it's an EV, it's an electric vehicle, and it can operate in very remote and inaccessible conditions. And it can be partnered with, it can be a payload carrier, it can be connected to a tethered drone. It's a very versatile product. And that's why we're very excited about this partnership and looking forward to bringing it to India. Thought process was, as we declared in the DRHP, that we would be merging two of our entities into Belrise. Now with that, given the fact that we are already under 75% promoter shareholding, with the merger of these two companies, we'd go above the 75%. Which would breach the SEBI MPS norms, which would obviously not be allowed to do. So rationally, we had to dilute a certain portion, about 6.5%, which will allow us to merge these two entities and go back to in that range of 70 to 75.
Okay, so that's with regards to where Belrise goes. The stock was seeing some smart gains, has cooled off as well. Lancelot, your view with regards to Belrise, because you're talking about a foray when it comes to defense. Yes, there will be impact when it comes to margins. What would you advise investors to do and your view on the counter?
So, at the moment, stock is trading at about 40 times its earnings. And if you look at these ventures, this venture to manufacture these unmanned electric vehicles is going to take time, because the whole procurement procedure for defense undergoes rigorous testing, product approvals, and then there will be contracts being handed out, and then these contracts have to be executed. There has to be a certain amount of components that is manufactured in India. So it's a long process. Just getting the a tie-up with somebody to provide these vehicles or getting interest from the army is not yet profitability. So I wouldn't want to pay a higher price today for something that may or may not unfold, and how it unfolds in the future, we still don't have any clear idea about.
That's the view with regards to where Belrise Industries is concerned. Now, speaking of the commodity space, Kunal Shah of Nirmal Bang Securities recommends fresh long positions in silver after the recent price correction, but remains more optimistic on gold than silver in the near term. Let's listen in to what he has to say exactly.
The investment demand of gold has skyrocketed over last 3 to 4 months. everyone is rushing towards buying safety, buying like a insurance policy against the risk which can arise due to the imprudent monetary policy decision by the global central bankers. So I believe that gold is better placed right now to give you 15 to 20% return. Silver, there can be a sharp profit taking because we've seen a humongous rally. There can be a sharp profit taking also. So silver, I would recommend you to wait, and then whenever there is a profit taking correction, at that time you can indulge into a fresh long position. But gold, I feel that should outperform going forward, and 15 to 20% return conservatively is something what you expect from gold in next 1.5 years. So I'm more optimistic towards the outlook of gold rather than on silver at these levels.
Okay, so that's with regards to where the overall view when it comes to commodities. Let me take this question with Lancelot. Lancelot, taking the way commodity cycle has been moving, silver, gold, copper, you have the entire metal pack that is rallying in trade. I think 4 or 5 consecutive sessions of gains that are coming in for the metal pack as a whole. Would you still be a buyer with the rally that has already happened?
So I think, one has to look at this rally in two parts. One is as far as gold and silver are concerned, because they are stores of value, irrespective of the industrial use and demand and supply. And the other metals, which is, copper, aluminium, steel, etc. Now, if you look at the other metals, there has been a short-term dip in terms of the supply that is available. And that is why there is a steep increase in the prices. However, going forward, a lot of new capacities are expected to come on stream, and that should taper off prices going forward. So I don't think one can, unless one buys at the bottom of the cycle, then you get benefit on the upside. Otherwise, if you're buying at a peak of a cycle or investing in at the peak of the cycle, you're more likely to see a temporary correction or maybe even a sideways correction. However, when you look at gold and silver, I think these have now become avenues for investors to put money instead of putting it into the equity market or instead of fixed income instruments. And like we've seen, they have now become a certain element of speculation has crept into these gold and silver, where everyone's putting in money, hoping that tomorrow the prices are going to be higher. And because there's limited supply or there's less supply, the prices are getting squeezed up on the higher side. So while in the short term, yes, you could get returns which could be higher than the markets or maybe higher than other asset classes, because there's a huge flow of money into these two commodities. Over a longer period of time, they really do not provide any economic value. So when the craze to invest or when everyone starts to liquidate positions, you could see very sharp volatility both in gold and silver, and that could hurt retail investors going forward. So one needs to be a little cautious about investing at higher levels. It's better to wait for the correction. And whenever there's a correction, then one can look at investing, because you need to keep that more as a long-term safety measure rather than a short-term investment option.
Makes complete sense, Lancelot. Buying at correction is something that Lancelot is suggesting. With that, Lancelot and Sachin, thank you so much for taking out the time and speaking with us at NDTV Profit, and of course giving us all those insights. We're completely out of time on this edition of Profit Buzzers, but small cap buzzers on the other side. Do stay tuned.
राजस्थान शौर्य और वीरता की धरती, अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र, इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा, और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़ें राइजिंग राजस्थान कॉन्क्लेव। विकास भी विरासत भी सिर्फ एनडीटीवी राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
शराबी प्यास जिसके हम ना हो जान रहा है दिल ये तो जान दी है तू मेरे तू मेरा
to NDTV Profit. My name is Varsha. Well, you're watching Small Cap Buzzers. Now, let's see how markets are doing. First, let me, just focus on Nifty. Let's see what Nifty is doing. Well, Nifty, if you see, is up almost 0.07%. Let's see what the contributors when it comes to Nifty 50. Well, it's there you go. So you have, if I want to talk about the sectoral indices, you have media, you have energy, you have metal and finance, which are contributing to Nifty 50. But on IT, pharma, realty are actually down. When it comes to sector overview. But overall, if you see, let's moving on. Sailesh Chandra, who is MD and CEO of Tata Motors Passenger Vehicles, says that the company aims to maintain 45 to 50% of market share in EVs. Let's listen in.
To support all the product and mainstreaming actions, we announced a capex commitment of 16 to 18,000 crore between FY25 to FY30, which will help us strengthen leadership, expand our EV portfolio and accelerate the mainstreaming of electric mobility in India. And through these actions, we believe a steady state EV market share of 45 to 50% is achievable for us, even in an intensely fought market.
Well, moving on, let's shift our focus to the management, which is Forgings. The stock is up 16% in the past 30 days. Well, onto the, what does this company do? The company is engaged in the business of manufacturing steel forgings. But, to speak more about the numbers and what goes ahead? What's the outlook for the next few years? I'm here joined by Mr. Vidya Shankar Krishnan, who is the chairman and managing director at Forgings. Well, Mr. Krishnan, welcome to NDTV Profit. Pleasure to have you. You know, just
good to be here.
Thank you
Thanks,
so much.
man.
Pleasure is all ours. Sir, you know, just wanted to talk about the export strategy. You know, when you have what you have, what's the export strategy when it comes to H2 FY26? If you could give us outlook over there.
Yes, the US truck market seems to be very down compared to the previous year, and Europe is going reasonably strong for us. So we would expect the dullness in the American market to continue. But what has happened in H2 versus H1 is that several of our important customers have had a lot of inventory that has been run down in H1. So H2 onwards, they're coming back to lift some parts. So that's good news as far as we are concerned. However, the results won't be seen much in H2. Q1 of next year onwards, we should see upticks.
So, Mr. Krishnan, just wanted to talk about the target mix, because if I see the US downtick was actually recovered through the sales in Europe. So, what will be the product mix, or I would say the business mix going forward when it comes to, US and Europe?
Right now, Europe accounts for around 22% of our sales. That will continue, and if US picks up in Q1 of next year, we should see the US share rise from around 9% to about 15% of overall sales.
If you look at the last 1 year, in fact, Soumit Sarkar also joining into the conversation, sir. So in the last 1 year, the share prices of Forgings is down 25%. But that's not only Forging, for other forging companies also we have seen this kind of a downtick, because the overall slowdown that we are seeing for the CV industry, not only in India but also globally. But as of now, the current management, the current commentary that is coming in from other players like Tata Motors, or for that matter Ashok Leyland, is the fact that we are seeing a pickup when it comes to MHCV volumes on ground. What are your understanding here? What is it that you're picking up on ground, sir?
Yeah, without naming customers, I would say all the biggies are looking at strong Q4, without doubt. And that is also their order book and offtake as far as we are concerned.
Mr. Krishnan, I also wanted to talk about the EV space. How companies preparing when it comes to EV related shifts in auto components?
The EV shift, as we had originally predicted or thought it through, continues to be a very slow shift. However, it's a slow and steady inroad it will make into the market. Consider that a mature market like China, almost 60% of new cars are all EV. So India will also progress towards that, but it will take a lot of time. It will take beyond this decade, partly because of the availability of materials including battery, lithium, etc. And not only that, also magnets. So all this has to get recalibrated, and we'll see the EV market in India pick up slowly but steadily. It will take time.
Also, sir, the order book, if I'm not wrong, the order book stands at around 300 crore. What is the timeline and strategy to execute this order?
Yeah, our new orders are pretty strong. So whatever we've been talking over the last couple of years, they're all maturing now. Some of the customer projects have gotten shifted by about 9 months or so. So instead of the previous year, they're all coming out into, or this year, they're all panning out into Q4 and beyond. So that will take about 12 to 15 months to execute.
Sir, domestic market currently contributes around 61% to your top line.
Yep.
Will domestic market continue to be the focus market even going forward, or will you look to increase your share from US and Europe?
Beyond a year, I would say export markets will form the backbone of our growth. For the next 1.5 years, it will be domestic. Beyond that, it will be the export markets.
So if you could give us any numbers, sir, what is the kind of growth that you're expecting from US and Europe, say 3 years for the next 3 years, and what is the kind of growth number that you're expecting from the domestic market?
It's way too far away. Without the trade deal, no numbers can be spoken of in exports. We are actively pursuing businesses, and the potential is huge across the world. But all this has to be superimposed on the tariff scenario, and that is at present very hazardous to guess. Of course, everybody is talking of a trade deal, and we also expect that something will happen. But till it happens, we have to wait on the sidelines.
So you're also commissioning, I believe, 16,500 ton mechanical press. It's first of a kind, I believe. What are the kind of margin benefits that you would get in post this capital expenditure gets deployed?
The press is expected to be commissioned early next fiscal. So sometime around Q1, max Q2. So this press would be margin positive. Right now, the order book for that press is very light, but it will get booked as we move on.
Right. And Mr. Krishnan, just talking about the financials, in the last 3 years, if you see the sales, you've grown your sales at a CAGR of around, 10%. Going forward, maybe, in FY26 and FY27, what is the expected growth that you've set for yourself when it comes to revenue growth in 26 and 27?
26 will be a flat year, Asha, because we've seen customer projects which were due this year getting postponed. So those launches have resulted in a sluggish year. Not only that, we have seen almost about 40, 45, 50 crores of turnover drop out of our bucket due to the US market slowdown and stocks available, inventory available at customer end. That has been a double whammy as far as we are concerned for this year. So going forward, I would say a minimum for the next year should be 15%. Our internal target is 20 to 30%.
So you are saying that FY26 would be a flat year, but 15 to 20% of growth you are expecting from FY27. Am I right?
That's right. That's right.
Got that point. Sir, also on margins, because we've seen some pressure in margins in this is Q2 quarter. What is the sustainable margin that you're seeing for 26 and 27?
Long-term margin trends should hold, Varsha. Long-term, wherever we are, 18 plus, 18 to 20, that should reasonably hold.
Understood. And sir, lastly,
all this is subject to macroeconomic conditions, and that disclaimer has to be given because we do live in a very volatile time, and we can see the impact of tariffs. Many unexpected areas we are seeing volatility. So all that could have a negative impact, but that doesn't mean we are going to be idle. We are also moving on our feet. And though we have stayed at the same position for the last couple of years, situation has been like that. But now we are changing fast, and certainly we are improving. In the next year, we expect 15 to 20% growth. All things being equal or similar or same, we should see margins improving.
Sir, thank you, sir. Thank you for joining us and giving us the way forward for Forgings. Let's also welcome in the fundamental guest, Tapan Doshi, research analyst at www.ca-tapan.in. Tapan, you heard the management of Forgings. They are quite bullish on the growth plans going forward, given the fact that we are seeing a pickup, at least in the domestic market of the CV industry. At the current valuations, would you recommend this counter to your clients?
Good afternoon, Sumit. Now see, if you see the valuation is quite cheap. Okay, now it has come down a lot from the high. The stock is already down by almost 40 to 50%. And where the management told that they are thinking about the growth of maybe around 15% and odd. And if the sales continue, the domestic front is almost 61%, and we know the demand what is there in India compared to US and Europe. I think things will be better for this company in next few quarters. Again, the auto cycle demand improvement will slowly and gradually going up. Plus, I see a recovery on the margins also. Hopefully, what they are saying 18 plus. But if something, trade deal happens and everything happens, then the margin improvement may also be there. So yes, comparatively, I'm quite okay with this stock. Even the steel forging demand is in a structural growth. So I think there also it's a positive for a company. So at this valuation, I think one can hold the stock. Let us wait for 1 or 2 quarters. If things goes on, I think the stock can move up easily.
With that, let's step into a short break and we'll be back with more small cap stocks on the other side.
राजस्थान शौर्य और वीरता की धरती, अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र, इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ एनडीटीवी राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
"2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जिसके हम ना हो जान रहे दिल ये तो जान दी है तू।
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. Before we move on to the next small cap stock, let's get in Sharath first to understand what's been buzzing in the FNO segment.
Well, overall, it's a very flattish trade coming in, and the VIX levels also at a very lower levels for the fourth straight day.
Looking at the markets, Ultratech Cement, Power Grid, Tata Steel holding up in trade. But if you look at the losers, Infosys and Bharti Airtel are there. But largely, it's a very, very small range-bound market for both Sensex and Bankex. Let's pull out the contracts where the action is happening. And largely, we see it's almost flattish. There's nothing happening in the market as such. The volumes are low, turnover levels are low. And largely, we can see there are some overbought positions. So let's get in Bankex. The story is the same, but the deep cuts are more. Now it's coming in front. Federal Bank is there. Over here, it's down 1%. And even the larger banks itself, there is a trade where you are coming in the red. That, of course, includes a Bank of Baroda. So there is divergence in this segment. And we can also see the contracts on the screen as well. Stock-specific moves are definitely there in the market, in the FNO space. Looking at the long build-up, we have NMDC and RVNL, the railway and the defense space is buzzing. Metal also select back. Short covering for Chola Financial, 7% up, and IRFC also making it to the list, up 5% odd. Looking at the long unwinding position, Scient and Federal Bank make it to the list, not that convincing in terms of volumes. And lastly, the short build-up coming in for Coforge and BSC as well. So these are the actions which are buzzing in the FNO space.
Right. Thank you so much, Sharath, for all the details. Well, moving on, Tata Motors has laid out its big EV roadmap with new launches and investment plans. Our colleague Punit joins us live with more on what's driving this strategy. Punit, over to you.
Well, thank you for that. I'm coming to you live from St. Regis here in Mumbai, and largely Tata Motors is celebrating a major milestone of 250,000 EVs sold since inception. Now, this came back in 2018 with no models and a lack of infrastructure and architecture as well. So there's been a lot of strides by the company in this aspect. What's important is that out of this 2.5 lakh vehicles, one specific model, that's the Nexon EV, has sold over 1 lakh units at this point of time. They have highlighted a lot more launches, and let me get you that perspective as well, because they've announced the Sierra EV, which has done very well in terms of bookings on the ICE side. On the EV vertical now expected to come in calendar year 2026. Along with that will be the Punch EV as well. They've also finally come out with some details of their legacy brand Avinya. Now this will sit above the Harrier, which is priced at almost 20 to 28 lakh rupees. So they are going into a premium side of things with a new brand name. So this won't have the Tata name, but will have Avinya as one of the key models. They've highlighted that this will be a new architecture, of course, and will be an SUV as confirmed by the company. They've also given us some key other data points. There will be 3 additional new nameplates apart from Sierra, Punch as well as Avinya starting 2026, and this will come of course in FY27. But overall, they are looking to maintain 45 to 50% market share, which essentially means 1 in 2 EVs sold in the country will be of Tata Motors. And those are some of the key highlights that the company has highlighted in their event 250K and beyond. But that's the lowdown and the key story with key numbers that Tata Motors has committed for the future.
Well, thanks so much, Puneet, for all the details. Well, Tapan, what's your view when it comes to Tata Motors? Because clearly company has a huge plan when it comes to EVs.
Yeah, see, of course, they have a huge plan for EV, but what hurting is Tata Motor passenger vehicle is that the UK division. We know that the way the cyber attack has impacted the profitability of a company. That is a bigger problem here. I know that the growth will be there from here, maybe double-digit growth will be there. The only thing is we have to see the impact, how much it will be long for next quarter also. Again, if you see the valuation point of view, Tata Motor passenger vehicle is quite available a very, very cheap valuation. So if someone having a long-term duration, maybe if someone can hold for 1 or 2 years, they can enter at this level. But still, I feel 1 or 2 quarters there will be turmoil, because we don't know what is the impact of JLR, how big it is, and how it will impacting the financial statements. Again, from domestic fund, I think their numbers are okay, so that is a good point. So one can wait. If one can wait, I think they can enter at this level also.
D6 System, Barsha, if you know, that stock was up 30% in the last few trading sessions. Today we are seeing some kind of profit booking coming in. The stock is down 5%. what was firstly the reason why the stock moved like this and why such kind of a volatility?
Yeah, so absolutely. So, Somit, if you see, a lot of things are actually working when it comes to, DCX system. Let's analyze first that. First, about the company. So, the company is into system integration and cable and wire harnessing, and which is preferred a largest Indian partner to Israel defense company. Now, if you see the order book as of September stand at around 2,600 crores. And let's talk about the key tailwinds or the key triggers why the stock was in focus. One is so the rising defense Indianization and Make in India momentum, because the share of non-offset projects increased from 15% to 40%. And also, if you see, they are preferred when Indian partner to Israeli defense major IAI. So basically, I would say a defense related company having a more focus on this has led to a sharp increase or interest in this company. But I would also highlight some of the key headwinds and risk when it comes to this company, because if you see, there was a margin pressure in Q2 FY26 and there's a negative EBITDA. Now this was on the back of cost pressures that the company has seen. Also, if you see, a large inventory and receivables were linked to defense project cycle. So kind of working capital pressure is also expected, or rather we have seen a working capital pressure into this company. And lastly, if you see, there's a heavy dependence when it comes to Israeli defense ecosystem, and a slowdown or geopolitical shift can affect the order flow. So overall, if you see, the defense is the leading growth catalyst for this company. But yes, company does have few headwinds which investors must watch. But overall, Tapan, if I were to ask you, what is your view when it comes to DCX system? Because defense is the core focus for this company, and going forward, the growth catalyst for this company is of course defense. But we have seen a sharp decrease when it comes to margins and of course the working capital pressure. What should investors do in this company?
Yeah, I do agree with you. Last few quarters for DCX system was not great as such. If you see, the net margin was negative. Even if you see, the ROE is quite low, around 3%. Operating margin is quite weak. Of course, the defense, you can say order is good, but the execution part is not at all good from the DCX system side. And again, in future, management is quite confident of growing defense orders. But I think this is where the problem lies. Their execution, they have to work on it. And from last few quarters, I am seeing what the management is saying is not reflecting on the, you can say, the results. So of course the stock has gone up, but still I feel that I want to wait for 1 or 2 quarters more, whether they are able to deliver the results as per what they are saying, then only better to enter. Otherwise this uptick, I think one can take a opportunity to get out from this stock.
Well, thank you so much, Tapan, for giving us all the views and joining this conversation. Always pleasure to have you. Well, this is all the time that we have on this edition of Small Cap Buzzer. Stay tuned to NDTV Profit.
राजस्थान शौर्य और वीरता की धरती, अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र, इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़ें राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ एनडीटीवी राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
"2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
Hello and welcome to NDTV Profit. I am Sharad Dubey and with me is Soumit Sarkar. You are watching Ask Profit Afternoon Edition, a show where we get you all the stock related queries answered from our fundamental and technical guests. And looking at the markets, it's you could say it's still a very flattish markets coming in, and Nifty expiry is also at play. India VIX, you could look at it, nothing much happening on the screen, even for Nifty Bank also. India VIX at the lower level, so you can just show the India VIX also. That's lack of options market happening here. Sectoral indices, media PSC is doing well, but largely everything is under a very small range, and nothing much is actually happening in this space. Of course, Railways Defence Pack is doing well, and largely the Nifty gainers also, if you look at it, it's likely even Stevens if we pull up the overall constituents. But let's move on to our guests also in our show. And for the first, the technical guest, we are joined by Kush Bora. He's the founder of kushbora.com, and Samir Dalal from Natwar Lal and Son Stocks Brokers. Gentlemen, a new format, a new day. And of course, a big request has come in from our audiences to actually get in more details in our Ask Profits segment. And we'll start with that. First and foremost, we'll start with the requests which have started coming in, and the messages which are coming in from social media. There's a stock on RVNL. There's a lot of interest coming in. Last 2 days, railway stocks have been also buzzing. Kush, I want to take your views first on RVNL. The request has been coming in from 2-3 people, and stock is also up 3%. What are your views?
Hey, hi, first, very good morning to you, to viewers, and Samir as well. So good to be a part of, a new initiative. Ask Profit's always been one of our favorite shows, and glad to have the afternoon edition and, to be a part of it as well. Now, as far as RBNL goes, honestly, if you ask me, there wasn't much going for the stock. 300, 305 was a support zone, a medium-term support zone, rather. The stocks rebounded, and we know that around the budget, there is traction in some of these names. So, that's the reason you've seen the stock pick up. Do you go out and trade now? I'm afraid not. There is a resistance around the 350, 355 mark. A good part of the moves already come in. So maybe you might as well wait out a little. If it retraces back to those 330, 335 levels, is when you buy again for a favorable risk-reward ratio. At the moment, I would suggest, a wait-and-watch approach. Buy on dips.
Right, the next query is coming in from Sandeep from Hyderabad. It's on EPAC Durables. He is holding around 270 shares. In fact, he has bought at a price of 270, and he wants to know the next 1 year target on this counter. Kush, any view on EPAC Durables?
Hi, Sumit. EPAC Durable hasn't really done all that well, seeing pressure, mild recovery, but that's also being sold into in the last 4 sessions. my suggestion would be to exit out of it, especially now, since the stock is still above his buy price. It's a good idea to exit out of eFactory.
All right, from Varalakshmi from Hyderabad, she has stated that she has 19 shares of Tenneco Clean Air India. She was allotted in the IPO at 397. Samir, if you are having coverage on Tenneco Clean Air, what will be your views?
Sorry, this one we don't have coverage on. I've not studied this one.
Kush, income in case of technicals, if anything is there?
Hardly any data, so I'll have to give it a pass.
All right.
The next query is coming in fact, from Shravan from Hyderabad. It's on couple of stocks, ICICI Bank and KIMS. He has not mentioned whether he wants the long-term view or the short-term view. So I'll come to Samir first. Any view on ICICI Bank and KIMS?
Yeah, so on ICICI Bank, we continue to remain constructive, just that the valuations have moved up and, they're very close to that of HDFC. So now the valuation re-rating story for ICICI is not there. We have to work on the growth story. On the growth story, we believe that 15% growth, I think, on the loan book is something that ICICI probably will be able to achieve on a compounded basis over the next couple of years. So we can expect the stock to give similar kind of returns. We believe profitability will remain strong. NPAs are low. So on the entire banking space, we remain positive. But I think the real story which was there in ICICI back in the day was the re-rating story, which is now done. So I think it's better. Although I continue to say if you're a long-term investor, you can continue to hold. But if you want to play a re-rating story still, I think there are opportunities in the banking space which you can do that. So it's based on what you want to do. If you're just happy with a 15% CAGR, stay put with ICICI. If you want better returns in the banking space, move to the like of IDFC First Bank or an IndusInd Bank, where we believe re-rating and growth potential both are going to be working together.
Views on KIMS, Krishna Institute of Medical?
So I think one can continue to hold on. Valuations rich there. The entire space like that, a hospital space is expensive. KIMS is no different. We think at some point over the next 2 years, you will get a sharp correction across the board, but one can continue to hold on, and whenever it falls, add on more, because we think the long-term growth story is still very much intact.
Right. Before we move on to our next query, viewers, you can send your queries on the WhatsApp number that's flashing on your screen, and also you can call us and ask your query directly to our guests. So please do call in and ask your queries. And the next caller query is coming in from Ahmedabad. Shrey, you can go ahead and ask your query.
Yeah, hi. So I'm looking for investing around 2 lakhs in the hospital segment. And I want to know, is it a good time to enter now in either Max Healthcare or Apollo Hospitals? And another point is I currently have 0% in my portfolio in the hospital segment.
Right. Samir, any view on the hospital segment? He wants to invest 2 lakh in Apollo and Max Healthcare. Is it a good time to do it?
I think Apollo Hospital is something that we've always liked. We continue to remain positive. See, again, I just discussed when we discussed KIMS that the entire hospital space valuations are rich. If I'm not mistaken, Apollo is still trading at about 60 times earnings. Max is probably at, I think, 90 times trailing earnings, or maybe even higher. I'm not sure exactly what it is today. But these stocks obviously have great long-term growth. Why? Because if you look at the kind of hospital beds that are there versus the population, I think you could probably be 5x and still fall short of hospital beds. The problem is these are very capital intensive businesses upfront. So you're going to see more capex coming in the early days, in the next few years, and you're going to see profitability grow. But expect valuations to remain rich. Corrections are good time. If I had to pick, I pick Apollo Hospital. Why? Because you're going to get a demerger there where you're going to get 3 businesses. One is the pharmacy business, which I think has great growth opportunity in India. There's the testing businesses.
Thanks for that, Samir. Let's move on to our next query from WhatsApp. Gayatri from Bengaluru. She wants to know about NCC, invested at 220 levels. It's down 30%. Medium to long-term views requested. Kush, any view on NCC right now?
Yeah, I think NCC is a hold. You're right. The stock's actually taken a plunge. But if you see the last few sessions, there's been a recovery, an attempted recovery at that. My suggestion would be, yes, despite the cuts, it's not a bad idea to continue holding on to NCC. 148, 150, that's the long-term support zone. So keep a tight stop loss at that. If that's broken, then I'm afraid the structure will worsen. But like I said, for now, continue holding on. 148, 150, that's your stop loss.
We have our next caller. He's Srinivas from Hyderabad. Precall is the shares, 300 shares at 580 is there, but he hasn't given his investment horizon. And so, what would be the views, Sameer, coming in for Precall? It's a small cap. Okay, Srinivas is there with us. Hi, Srinivas.
Hi, good afternoon.
Good afternoon.
Team.
Srinivas, Precall, you have 300 shares, so would you like to actually kind of, hold the shares, or would you like to, what's your investment horizon?
First of all, thank you. I'm regular follower to the Kush, so I follow his instructions. So Precall presently I'm holding, so I want to add few more shares of Precall. So is it right time to add, or can I book a profit right now?
Srinivas, I'll take you to your favorite person, Kush. Kush, Srinivas from Hyderabad is asking, Precall, any form of addition? His buying price was 580 rupees. What would it be?
Hey, first, thank you so much for those lovely comments. You've just made my day. My suggestion, continue holding on to Precall. It's just on our advisory. A couple of days ago that we released a call on Precall. The stock is seeing some sort of a pressure, but doesn't worry me with the kind of volumes that it's seeing on the downside. They are not too high, suggesting that the selling is not a very heavy one. I would always, like I do, suggest a stop loss. So in this case, the stop loss would be close to the 620 mark, but continue holding on to this one. There's a breakout around the 670 mark. Once you get a closing above that, the stock would zoom higher. So once again, thank you so much for the lovely comments. Continue holding Precall with the stop loss at 620.
Okay, continue holding Precall is the view that Kush has on the charts. So the next one is from Sriram Raghuraman, who is writing us from Chennai and holding 35 shares of Nuvoco Vistas, bought at the levels of 541. He wants to know from a long-term perspective, can he continue to hold this counter or not? Sameer, I'll come to you on this one. What's the view like?
Yeah, I think you should add up some more. I think the entire space is going to do well, and Nuvoco Vista. Only thing is, do you want to be in a smaller company? Do you want to move into a larger player like an Abuja or AC or Ultratech? That is something that they need to do.
All right, okay. So that's the view with regards to where Nuvoco Vista is concerned. We've got our next caller. In fact, Swaminathan is calling us from Chennai. Swaminathan, hi. A very good afternoon to you. How can we help you today?
Yeah, I am having a Dixon technology.
Okay.
Average price is 13,000 rupees.
Okay.
Can I hold on the share, or I have to add, or I have to reduce, because I am at a loss now.
Okay. So
I am having 10 shares.
When you bought this, did you see the charts while buying the counter?
Yeah, 10 shares of just 2 months back I purchased.
Okay, got it. Okay, I'll take this up with Kush then. Kush, hi. Dixon Tech, what are the charts indicating right now? Do you think he'll be able to reach his buying level and maybe cross that?
First up, hi Mahima. Good to see you and good to share screen with you after a long time. Hope you've been well. As far as Dixon goes, the stock's seeing massive selling up, along with the rest of the pack as well. Amber, Keynes, whatever, what have you, all of these stocks have seen a massive selling pressure. However, the volumes seem to be thinning right now. The stock has rebounded a couple of times from oversold territories. And since it's a short to a medium-term view, my suggestion would be continue holding on with the long-term support, which is at the 12,000 mark. So keep your stop loss there. Continue holding on. If that's broken, the structure will worsen. If not, you could get a rebound. But at the same time, my suggestion would be to start exiting once you get your cost. Don't hope for a V-shaped recovery and those 17, 18,000 levels back in a hurry.
At cost, that's a Dixon Tech for you from Kush. But Giri from Hyderabad, he states that he has around 1250 shares of Mazgaon Dog. He's holding for past 6 odd months and would like to hold for another 6 months max. Will he be able to exit? And his request has come for just 3% profit. I think he wants to exit at costing. Your view, Sameer, for Mazgaon Dog for the next 6 odd months, but let's just break it down. Just 1 month, there is a pre-budget trade also on that.
Yeah, so that might be the right opportunity where he may very well get an exit, because I'm sure the government is going to give some announcements. But if from a short-term perspective, I still find Mazgaon Dog fully valued to overvalued. I would be looking to take money off the table. So if you get the bounce during the budget, I think take your money off.
All right, so that's it with regards to where Mazagon Dock is concerned. The next one is from Vijay Reddy, who's writing us from Hyderabad, asking about Inox Wind. He's bought at the levels of 156 and wants to know if he can buy more now or wait. Kush, I'll come to you quickly on this one. What's the chartical view for Inox Wind?
I'll let you answer the first part, which is buy more now or wait. So yeah, there you know the answer is. I'm sorry, the answer is wait. Don't average just yet. The stock is starting to see rebounds, but not on very heavy volumes. But that's been the case, I think, for most of the market. The volumes have been thin. So yes, the stock is attempting a rebound. The close above 130 will start the upward journey once again. You could continue holding on with the recent swing low at 123. But no, don't average, don't buy more right now.
On to our next caller. Ajay is there from Chandigarh. He holds PNB. Good afternoon, Ajay.
Good afternoon, sir. This is Ajay Pava from Chandigarh.
Oh, yes, sir.
Sir, I'm holding 10,000 PNB share at the rate of 126 for the last 1 year.
So you want to
hold it for? I can hold it for another year. I want to know what is the future of this stock. Whether should I shift to another stock or keep it for 1 year? My target is 150 by the budget.
All right.
Is it possible?
The target is 150 by the budget. That means 1 month, Ajay ji. But I want to get Kush over here. So 1 year target, what could it be there for PNB? And if yes, if Ajay wants to switch over, which stock would you recommend him?
No, why not? I mean, why switch over? PNB's had a fantastic run. So has the entire PSU pack. Some correction here or there along the course is actually healthy. I don't see any issues with PNB if you ask me. It's a good idea to continue hold on to PNB. 150, bit of a stretch for a month for sure, even for the year. But I think 140 to 145, maybe close to those levels that he's mentioning, very much likely. So if he still holds that 1 year view as 150 target for PNB, I think he should continue holding on to it. No reason for a switch. Positional stop loss on this one, I would suggest at 105.
Okay, all right. So that's with regards to where PNB is concerned. The next one is on Bajaj Housing Finance. Manjuvani is asking this question, bought 100 odd shares at the levels of 170, sitting on a loss right now, wants to know as to what should be the next course of action for her. Samir, I'll come to you on this one. What's the view like?
Yeah, so we remain positive. I think one can average and buy some more. Look, the problem was at 170, she bought it at extremely high valuations after the IPO. Now there's more rationality. Now we believe the housing finance space will grow. So buy some more average, get your average cost down. We do have a target price of 130 in 1 year. So at least you'll be able to recover your money if you average it right now.
Right, for our viewers who are just tuning in right now for Ask Profit, call us with the queries. You know, on the top line, you can see the number 02269289333. You can message your numbers here and you can queries which are there, the stock holdings, and we'll get you the results from our guests as well. But from the messaging front, SP Khandelwal from Jaipur, he has given an interesting stock. That's Greaves Cotton. That's a 6-month perspective. And he's holding shares at around 300 of them at 219 rupees per share, sitting at a loss currently. Not a big loss, a kind of a minor loss. But overall, Kush, if you want to see this stock for 6 months perspective, what will be the key levels?
Yeah, I would say continue holding on to Greaves Cotton. Here too, we've seen a massive sell from those 320 odd levels. But if you see the last 8 to 9 sessions, the stock has attempted a rebound. Delivery marking volume yesterday was fairly healthy. 20-day moving average also taken out today. Despite the cut, the stock is holding above the 20-day moving average. So I'll take heart from the fact that the stock is attempting a recovery. And yes, his buying price is higher, but not significantly. Hence, he could continue holding on. In the next up move itself, the stock could move to his buying price close to 220 and much higher levels also. So a hold is the suggestion on Greaves Cotton. Here, the trailing stop, or rather the stop loss on this one would be 175, close to the recent swing low that the stock had made.
Understood. Okay, the next one is from Umesh Gupta, who's writing us from Vadodara, asking about Translate Lightning. Now, he's got 800 odd shares at an average price of 744. He's saying that he is suffering through a huge loss and wants to know as to whether he can continue to hold or exit booking his losses. His time horizon is next 6 months. Kush, what's the view like on the charts?
Again, I think, it's a very similar segment and hence a very similar view on a lot of these. And by segment, I mean, the mid and the small cap space. And we are starting to see some traction on some of these names. I would suggest a hold on this one. The stock has started to see some sort of an up move. However, there could be resistances at the 650 and the 675 zone. So maybe you want to start lightening your positions there, but continue to hold in the upward journey, at least to reduce your losses from where they are currently. Positional stop loss on this one, I would suggest at the 565 mark.
All right. Now there is a request coming in from Mohan from Coimbatore, and largely, actually, this name is actually coming out, but Shilpa Medicare, that is something which is coming in the screen. 780 quantity has been bought at 410. Is it a hold or a sell going ahead? I would like to get Samir on it. One of our viewers have asked this question for Shilpa Medicare. If you could just give your views on that.
Sorry, again, this is not under coverage.
All right.
Okay, Kush, your quick view on the charts for Shilpa Medicare?
Not as constructive as the rest of the pharma pack. I would suggest an exit on Shilpa Medicare.
All right. Okay. The next question is on Kalyan Jewellers, and Giri from Hyderabad is asking this question. He's been holding this since the past 2 months. Wants to know if he'll be able to exit with a 10% profit in the next 2 months or not. Kush, on the charts?
Sorry, what's the buy price?
Kalyan Jewellers, he's not given the buying price.
Oh, okay. No, then I would suggest an exit. I mean, the stock is consolidating, volumes not going anywhere, supply zones, are plenty on the rise. So my suggestion would be, if you don't have a position, don't enter right now.
All right. Now we are joined by Mahesh from Pune. He's holding Infosys, 1001 shares at 780 rupees. Good afternoon, Mahesh.
Yeah, hello. Good afternoon. Thanks for taking the call. So I wanted to know the outlook for Infosys. I'm a long-term investor. I had no plans to liquidate immediately, but if money can be made, I wanted to check if some of it can be liquidated. And
sure. Samir, your views for Infosys on long term?
So Infosys will go up over the long term, but expect very muted returns, 10% kind of CAGR returns. I'll tell you why, because we are expecting no re-rating and valuations, given these companies are growing at 5 to 8, 10% at best on the top line. 10% is also like a far-fetched number. They're growing more in the 5 to 8%. And the bottom line, we don't expect margins to expand. So re-rating is not possible. We're talking of regular growth rates. For me, IT is not a space I would be investing in. But since you've got good money, and we hope that at some point in the near future, the AI integration part comes through and then Indian IT comes back. But otherwise, I would not be wanting to hold on to an Infosys. I would recommend a sell.
Okay. All right. Mahesh, just a query. This is for you. Is what part of Infosys is actually a part of your portfolio? It seems like a sizable chunk is there, and you're already sitting on a 9 lakh profit.
yeah, I have multiple IT companies actually holding, including TCS and other data and analytics portfolios. So generally, this guidance helps, but in general, the IT and data pattern, latent view, TCS, those as well are a substantial part of my IT portfolio. Even if you could provide some guidance on that, that will be great. Yeah,
right.
but yeah, go ahead.
Just a minor request, Samir, for data patterns and other IT companies which Mahesh was mentioning. If you could just give your views on that, or your stance will remain the same for the rest of the IT pack as well.
So if you want to look at IT companies that have high growth, I think that makes more sense. So Persistent is one of them, but valuations have moved up and far higher than what we can justify. Coforge has been growing well. So again, if you see corrections in these two, those are the two that we like. TCS and Infosys 10 to 12% CAGR returns is our expectation. So if you're okay with that, stay put. Otherwise, find better investments, because Indian market should give you at least 15 to 18% CAGR returns if you're taking risk of investing in equities.
Okay, all right. So that's with regards to where the entire IT space is concerned. But, shifting focus from IT space to the banking space, Hari from Chennai wants to know, as to from a short-term perspective, what is the bet that he can make in the banking space? Kush, any particular counter that you're liking on the charts right now?
Yeah, I'll go with the PSU pack. PNB was something that we've already discussed. I will also add Canara Bank, to the mix. I think these stocks have had a fair bit of correction. You're already starting to see recovery in the last 4 to 5 sessions among some of these names. So not a bad idea. Prefer Canara Bank also. from a short-term perspective, I think 156 and 162 are fair targets. And on the downside, you can keep a tight stop loss at 144. So 1:2 risk-reward ratio. Momentum coming in, the stock could move higher as well. So Canara Bank's your pick.
Okay, all right. It's now time for the rapid fire segment, as we always do on the Ask Profit edition. Sameer and Kush, you both know the drill. Try to keep your answers as short as possible. The first one is from Anita, asking about Tata Motors CV, whether she can continue to hold from a short-term perspective or not. Kush, on the charts?
Oh, fairly limited data, pass.
Okay, Sameer, your quick view?
I think one can hold on to Tata CV.
Okay, the next one is from Sainath. REC Limited, 207 shares purchased at 376 a piece. Should he hold or sell? Kush, on the charts?
Hold with a stop loss at 345.
Okay, NBCC is the next one. Venkateshwara from Nelluru has purchased at the levels of 170. Wants to know if he can hold or sell. Sameer, your view?
I think price fully, one can sell, buy another counter in the real estate, buy EMBDL, which is Embassy Developers. I think there's a lot of upside there. They've gone through a bit of a problem, but it'll come back.
Okay, Swiggy is the next one. Dr. Nikhil from Hyderabad has bought it at the price of 448 2 months ago. Should he hold or sell? Kush, what's the view like?
Sell.
Okay, Apollo Hospitals is the next one. 1,000 shares bought at the levels of 7868. Should he hold or sell? Anup is asking this question. Sameer, your view?
Hey, hold on, it was a buy recommendation that we gave.
Okay, JSW Cement is the next one. For the next 6 months, Jiten wants to know whether he can hold or sell. Kush, on the charts?
Sell.
Okay, the next one is directed towards you, Kush. VST Industries on the charts. Is it a good time to buy?
VST Industries or Pillars?
VST Industries.
Cigarette.
No, I would suggest wait.
Okay,
Wait on VST Industries.
All right, IRFC is the next one. Subhash Reddy from Hyderabad is holding 180 shares at the levels of 129. A short-term view on this one. 6 months is the view. On the charts, Kush?
Hold, keep a stop loss at 117.
Okay, Srikanth wants to know if he can hold 4,000 shares of IOCL from a long-term perspective of 1 year. Sameer, your view?
No, find better investment, sell.
Bank of India is the next one, bought at the levels of 159 from a medium-term perspective. Can Kalyan Sundar keep holding this counter or not? Kush, your view on the charts?
Better alternatives, but this also you can continue to hold. Keep a stop loss at 137.
Okay, Union Bank is the next one. Murthy from Hyderabad is bought at the levels of 143. 7,000 shares is what he has. Wants to know if he can continue to hold this counter or not. Some view?
Find a better bank than this, honestly, if you ask me. I'll get out of this one.
Okay, Shakti Pumps is the next one. Sunil has bought at the price of 789, wants a short-term target and stop loss for this one. Kush, your view on the charts?
Yeah, I would suggest a hold on this one from a short to a medium-term perspective. I think 850 is a good target and stop loss should be around the 695, 700 zone.
Okay, KPI Green is the next one. Bought 50 shares at the levels of 466. Yashoda wants to know if she can continue to hold or add more even at the current price. Sameer, your view?
Add more. Very positive. We have a target price of about 600 in 1 month.
Okay, lastly, LIC Housing Finance bought at the levels of 718, 5,000 shares. What should be the next course of action? Kush, on the charts?
You could continue to hold, but will take a while to recover. Stop loss near the 505 mark.
All right, that brings us to the end of this first episode of Ask Profit that we have started. This is the afternoon edition of Ask Profit that we'll be doing daily from 2 to 2:30. So we request viewers to come ahead and of course ask their questions via WhatsApp or calling us. Kush and Sameer, thank you so much for taking out the time and of course helping us with answering those queries. With that, viewers, completely out of time on this edition of Ask Profit. Stay tuned. India Market Close on the other side.
Yeah.
राजस्थान शौर्य और वीरता की धरती अब वही धरती कैसे बन रही है, आधुनिकता और विकास का नया केंद्र। इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़ें राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ एनडीटीवी राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
– 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
Hello and welcome to India Market Close. You are watching NDTV Profit. I am Sharad Ben. With me is Soumit Sarkar and Hiral Dadia. Markets largely has been flattish, but over the last 20 odd minutes there has been an up move coming in, and the 26,200 levels Nifty has crossed and having a better technical setup than Nifty Bank, as well as there is a divergence coming in for ICICI Bank as well as HDFC Bank. Let's look at the constituents, how they have actually performed. Largely it has been you could say an even Stevens day. Advanced decline ratio is almost the same, but Coal India, that's up almost 4% odd. Shriram Finance buying has started again in this counter. Bullish longs are there. Ultratech Cement, Tata Motors, PV also making it to the list. Amongst the losers, interestingly, Bharti Airtel and Infosys, that's where a bit of selling is definitely there. But on the Nifty expiry day, largely the volumes and the wicks and the turnover numbers are still very, very muted. And that is something which you'll be watching out for. Let's look at the sectors, how they have actually performed. Largely from last trading session, metal pack and the finance pack, they are doing well. They are on the positive side, but a very short range. Not much to decipher in the current situation. IT, some stocks are there. Definitely some profit booking is happening here. Also, let's just pull out the advanced decline ratio to understand how the market is. Initial hour of trade, and after that also we see 3:2. That this divergence has kind of shortened down, but still advanced decline ratio is quietly in the favors for the, you could say, for the large cap, for the broader indices. And to give to more color, I think Hiral will give us stock specific moves likely, and some sectors also ahead of budget. Hiral?
Thank you, Sharad, for that. In fact, let's pull up the broader markets and see what they are doing in trade, because it's interesting to see how the volumes are pretty shallow. However, you have the benchmarks which are holding up. If you see mid-cap 150 as well, absolutely flat as a pancake. You look at the small cap index as well. That's trading with marginal gains of around 0.3% in today's day. So there is some bit of respite when it comes to small caps versus what's happening in the mid cap index. If you talk about individual sectors, let's pull up the sectoral heat map and see what's happening on that front, because the trend seems to be pretty interesting. It's mainly your media. You talk about metals, finance, FMCG, auto. These are the ones which are gaining. What's losing out is IT. You have the PSU bank index under pressure, pharma, realty also trading under pressure. Railway is something which is bucking the trend in today's session. Defense as a sector is bucking the trend as well in today's day of trade. So interesting moves coming in there. Prism Johnson, a 14% up move in today's day of trade. Nazara Technologies, Orcon, you have Jupiter Wagons, IFCI. These are a few of the top gainers from the broader markets. What's losing out is a Patel Engineering. That stock is down nearly 5%. Coforge and Signity both trading under pressure as well. Car Trade, Rajesh Exports, as well as Abective Foods, all of these counters are down and about in trade. So these are, that's what the markets are looking like. But let me ask Somit as well. Somit, any trends that you are probably looking at right now?
Well, not trend, but the most interesting counter that I'm seeing is Chola Finance. It was up at one point of time 8%. Now it's cooled off to 6%. This move that has happened largely is because of that short selling activity that did. But Street, I guess, has forgotten the fact that, yes, the stock still continues to trade at an expensive valuation, and the Shriram deal has happened at a much lower valuation. So, Avinash, how are you looking at Chola Finance? Today's move is largely short covering. But do you expect the stock to correct going forward, given the fact that a big investor in Shriram Finance has come at a much cheaper valuation, and Chola Finance is trading at 4 times price to book?
No, I think, Somit, you're right. Today's move is largely because of the sentimental effect that some report from Cobra Post had, alleged some fraudulent practices. And I think the markets have clearly responded to what the management has said. So I think, today's bounce back could possibly be seen into some sort of profit booking, maybe, in a couple of days. And I think in terms of valuation, I think the market was more concerned about the clarity and the confidence from the management, which I think clearly is reflected in the price. So some profit booking is definitely expected. I think at these levels, the risk reward may not look very attractive. I think we'll have to wait for Q3 numbers to see how the traction in business has happened. But otherwise, as you rightly mentioned, Shriram Finance the deal has happened at a much lower valuation. So markets would obviously look at this valuation at a slightly, expensive kind of proposition. And for the time being, it's a hold. I don't think any fresh buy should be suggested at the current levels.
And Kush, if you look at the benchmark index, it's trying to cross the 26,200 level currently. How are you looking at the overall index? Yes, after 2 days of strong move, we are seeing some kind of profit booking coming in at higher levels. But overall, what's your view when it comes to the benchmark?
Hey, hi, Sumit. My overall view is very constructive. The reason that you are seeing this is partly, the expiry at play. Also, the PCR had actually shot up to 1.4, so that cooling off had to come in. Also, like you said, 2 days of good gains, some consolidation is healthy for the market. Overall, like I've mentioned, yesterday and in the past as well, my target on the indices is 26,500, 26,800. We've had a healthy bit of correction. Now from here on, as long as the 25,900, 26,000 support zone is intact, the index could move higher. And if you see the options data for the next week expiry, which also happens to be the monthly expiry, there's massive volume and open interest buildup at the 26,000 put option, suggesting that the market is starting to believe that that could act as a near-term support zone.
Okay, so that's with regards to where markets go. Kush, what would your top picks be in the last hour of trade?
Sure. Hi, Hiril. Going with both the calls on the long side, VST Tailors is one stock that we've recommended even on the channel on the RHS that's been reflecting. The first target of 6030 has been hit on that. So you could continue holding on, maybe even consider a fresh buy for targets of 6180. Keep a stop loss at the 5900 mark. The other one is IKS, Inventurous Knowledge. Good moves on this one, very healthy. Started the moves early, even before the markets rebounded. Has taken support, at the key 200-day moving average and rebounded from there. Volume action also healthy. 1790, 1840. These are your targets. 1690 is where you keep that stop loss.
Right, two picks coming in from Kush, but let's discuss the stock of the day. That is Chola Mandalam Investment Finance. A very interesting report came from Cobra Post, but it's largely markets have discounted that, and then the company came out with its own version also of its clarification. In the brokerage has also stated that there is nothing to worry about from the posts or the allegations from Cobra Post. Now they have gained almost intraday basis up 8%. This is the biggest intraday move coming since January 28. Somit had pointed out earlier, stock hit that 8% mark, slightly down 6%. Short covering, of course, there. That's one of the main reasons. That's down nearly 8.7% in the previous six sessions as well. This went down from almost 1736 to 1585 if you look at the overall numbers. Now, the allegations which was coming in from Cobra Post, that was that they were malicious and baseless. That's what the statement has come in, and ulterior motives were there. The statement also stated that the overall asset quality and liquidity position continues to be robust when it comes to Chola Finance. These important statements, if you look at it, this also shows that the rating agencies are still giving AA+ rating to the stock as well. All other operations are also in line with compliance. So the management, the company statement has given some important clarifications, and that's what is actually sentimentally boosting the prospects of the stocks as well in day's trade. And related party transactions are also, they could say that largely nothing has happened. So it's largely baseless. Even IIFL Finance kind of came out with this report and they have stated that this is not so much important. Kush, I want to get you on Chola Finance. Stock is up almost 6% but still relatively expensive compared to what Somit had mentioned about Shriram Finance. Is there another chance of up move in this stock because there was a good short covering happening, or that trade is done now?
Yeah, I'll go with the latter view, on this, Sharad, because I'm not very constructive on Chola Finance from a very near-term perspective. The reason being that the stock's actually seen resistance at the 750 mark multiple times in the last 2.5 months alone. It traced from that zone around 5 to 6 times. Markets have gone up, but the stock has corrected on the back of healthy volumes. Of course, the Shriram Finance angle is at play, but the stock not participating is not a healthy sign. The rebound that you're seeing today is, in all likelihood, a short covering rally. Yesterday, it hit the 200-day moving average for the first time since September and rebounded from there. So this is more of a rebound play. I wouldn't buy into it. Anyway, there's a resistance at the 1750 mark. Until that is taken out, I don't think the stock is going to move significantly higher from these levels.
Jupiter Wagon is another interesting stock, Kush. If you have looked into it, the stock is up 7% today. Yesterday, it was up around 20% and there were few shares that even came into auction, when the fact that someone might have tried to sell the counter yesterday when the stock had hit an upper circuit and might not have been able to meet that quantity. How are you looking at Jupiter Wagons on chart?
Somit, around the budget, whenever the budget, buzz starts, these stocks start to move up and, make that move higher. I'm not sure if this is really a lasting move. Even if today you see, the stocks actually hit a high of about 358 and down from, those levels as well. So I think from a very near-term perspective, that momentum play has already been done. If you didn't catch them 2-3 sessions ago, or maybe a little longer, just a while back, I think you've missed that bus right now. Maybe on declines, these would make sense. So close to the 300, 310 zone, if the stock does correct and you get some sort of profit booking, will a risk-reward ratio be favorable? For now, from a very near-term perspective, I think the trade is done.
So that's Jupiter Wagons. Kush, I would want you to give us your view in terms of what's happening with gold and silver. Both these commodities have actually hit record high levels. You have silver, which is at $70. You have gold as well, which is at record high. If you can see the charts and tell us what is your view. In the meantime, we'll listen to Kunal Shah of Nirmal Bang Securities, who's still recommending an interesting trade when it comes to gold. Let's listen in.
The investment demand of gold has skyrocketed over last 3 to 4 months. Everyone is rushing towards buying safety, buying like a insurance policy against the risk which can arise due to the imprudent monetary policy decision by the global central bankers. So I believe that gold is better placed right now to give you 15 to 20% return. Silver, there can be a sharp profit taking because we've seen a humongous rally. There can be a sharp profit taking also. So silver, I would recommend you to wait, and then whenever there is a profit-taking correction, at that time you can indulge into a fresh long position. But gold, I feel that should outperform going forward, and 15 to 20% return conservatively is something what you expect from gold in next 1.5 years. So I'm more optimistic towards the outlook of gold rather than on silver at these levels.
Just as we are talking about precious metals, silver has hit its record high levels and it has touched the $70 per ounce mark, and that is, you could say, there is a significant up move coming in. Gold also reclaims its lifetime high levels, that's around $4,500 odd dollars as well. So that is something which we'll be looking out for. But there are some stocks also we should just pick up. Let's get these stocks in. You know, they have been buzzing in trade as well. Varsha, you also have some list of stocks. What are the news flows there?
Well, yes, let me start with HCL Tech, wherein they have a company will acquire Jaspersoft for $240 million, and the deal strengthens agentic and business intelligence roadmap, and this will expand reach through large global developer and architect community, and this deal is expected to close within next 6 months. Then you have GPT Infra, wherein the stock is buzzing. This is on the back of order inflow that the company has got. So the company emerges as L1 bidder for NHAI's 670 crore order, and the order is for execution or rather construction of 4-lane elevated road in Jodhpur city, and as of September 2025, if you see, the order book stand at around 3,591 crore. Also recently, GPT Infra has gone several orders. The one of being is of 195 crore, which is for supply of conveyor belt system. Last on the list is GK Energy, wherein the stock is under pressure as the 3-month shareholder lock-in period comes to an end on December 23rd, and as many or rather I would say 2% of the outstanding shares will free up the trade, and as of last closing, the total value of the shares that will free up for trade is around 80 crores. So these are 3 stocks which are in focus on the back of news flows.
Thanks a lot, Varsha, for that. Let's just talk about the large caps which was mentioned, and of course Infosys is something where the interest has been coming in. Avinash, wanted to get your view on the large cap IT space. There were some kind of positive moves coming in the last 3 to 4 odd trading sessions as well. Do you think there's a value buy play happening here?
Yeah, I think, Sharad, if you look at the large cap companies, we saw very strong performances in Q2, especially from companies like HCL Tech, and Coforge. My sense is the third quarter also should be equally, positive. And I think looking at the kind of current order book and the kind of profit traction, plus the benefit of the depreciating rupee, we don't know what kind of margin enhancement would come in, but then definitely this is a positive for IT companies. So clearly in the large cap space, something like Infosys, HCL Technologies, Coforge. Coforge is down, I believe, today because of some news flow on some equity fundraising. But if you look at the overall kind of fundamentals and the kind of positioning it has put out, I would not be surprised that the company would definitely bounce back after the Q3 numbers. So all said and done, these are good bets in a volatile market like this, where the index is not doing anything great. And I think stock-specific opportunities would offer a much better room for comfort and a better decent risk reward over the next, say, 6 to 12 months.
Okay, so that's with regards to where Coforge goes as well. In fact, on the back of the metal rally that we're seeing, Zinc is also trading at a 16-month high. Silver contributes nearly 20 to 25% of the company's revenues, and that's the reason why we're seeing that kind of a move when it comes to Zinc in trade. 3 companies that are coming to my radar right now. Puravankara, now they've acquired a Bangalore land worth almost 4,800 crore GDV potential. That stock is seeing some smart moves as well in trade. 16% upside coming in on that one. You have Deccan Gold Mines. Now that is another one. I think the metal buzz, plus they've entered a strategic tungsten project in Spain. On the back of which you have a Deccan Gold Mine also, which is buzzing in trade. There you go, 20% upside trading at the day's highest levels. And one stock which continues to drool under pressure for the 3rd consecutive session is Meesho. Let's pull up a Meesho on the screens and see what's happened. Now, why Meesho is interesting is because last 3 sessions, 23% is the kind of downtick that has come in on Meesho. The stock, in fact, rallied almost about 60 to 65% in just 4 sessions before it started losing steam. And the analysts are flagging valuation concerns concerns, profitability concerns when it comes to Meesho. So what's going to be the roadmap ahead is going to be key from here on. Avinash, between Meesho and the other two names that I mentioned as well, Puravankara as well as Deccan Gold Mine, any views that you have?
No, I think Puravankara looks interesting because this land piece which they have acquired, they have said that the gross development value could be about 4,800 crores. The stock has given a big jump, Hiral. I think 15% is a big jump, and I think some cooling will definitely take place. Maybe on declines, it could be a good opportunity because we would like to hear from the management as to when this project is going to be started and what is the kind of cash flows the company expects over the next, say, 1 or 2 financial years. Because it's a very large land piece and obviously it would add to the bottom line significantly to the company. As far as Meesho is concerned, I think there's room for further downside, because if you look at the valuation, it touched almost 1 lakh crores when the stock, touched a high of 232. This was very fast and in a very short period of time. The company still doesn't make any EBITDA, no net profit, and is a negative ROE company. So I think clearly there would be a little more profit booking from the stock, even from the current levels. I think investors who have made money in the IPO would definitely would like that some profits they monetize, because clearly the December quarter is also unlikely to be a profitable quarter for them.
Okay, so the December quarter when it comes to these companies is what you should be watching out for. Kush, let me come to you. Deccan Gold Mines and Puravankara. Are you seeing further strength, or would you advise investors to book profits today?
No, I agree with Avinash. Puravankara is actually shaping up rather well. Not too concerned about the 15% uptick in the sense that, and I don't think you've missed the bus, because this move with the kind of volumes that it's taken, along in its stride, and the kind of levels, supply levels that it's taken out, I think it's very healthy. Of course, you could see some correction over the next day or two, but this puts the structure in a very positive light. So I would continue to be positive on Puravankara. Maybe give it a day or two if you want to buy a fresh see if some profit booking comes in. But if you're holding, I suggest you continue to hold. Keep your stop losses at the 265 mark, which is the 200-day moving average, which has been taken out rather convincingly today.
There's a hold call coming in from Kush, but Coforge is in focus. The company mulls a fundraise, but the stock has taken a tanking. Jasmeet, what's the reason for this, and what would be the bulls and bears case now?
Well, Ray, thank you for that. Now, as we all know, Coforge is planning for a fundraise and board to meet on 26th of this month. While further post that, we also have an analyst call lined up at 5:30. But the market has not taken in a really well way. You see the stock has tanking in trade down almost 5%. Let's quickly understand the bull and a bear case of this particular issue. Starting off with the bull case, we see that the past fundraisers have funded acquisitions like Signity, which has helped company really grow, and companies has a lot of cross-selling going forward. On the other hand, the bear case is this fundraise would lead to further dilution of liquidity, given the company has no promoters. So the FII and DII stakeholders will have their liquid diluted. That's something the street is worrying about. If you go at the next bull case, we see that the overall free cash flow for the company have improved over previous quarter, given it was in negative at minus 46%, and the previous quarter saw a jump of 86%, which is a positive. But on the bear case, we see that the cash conversion cycle for something like Coforge has always been problematic, and it's also a worry given that how will company hit the target of 70% of it as stated in the Q2 going forward. Well, we look at the third bull case, we see that the fundamentals have remained strong for the company. There is no change in those, and even the company's aim to reach 2 billion top line is something remains intact. But on the other hand, the bear case like preferential issue would lead to valuation dilution. Further, it would also lead to near-term fear in terms of the company's growth going forward. While as company has stated the FY27 target of reaching 2 billion top line, is that something a concern that's raising the questions in the street for this particular company? If you look at the last bull case, you see that the priorities, a company prioritizes growth over the investment in the near term. That's the reason why they're doing the fundraise to invest. But on the other hand, we see a bear case that most of the IT companies generally don't do a fundraise, as they are cash-rich company, and they generally invest that money to raise more funds to do the buyback going forward. While in terms of Coforge, we see the opposite happening, where they're doing a fundraise to funded acquisitions. If you look at the last bull case, we see that the MOSL maintains buy on this particular stock with a target price of rupees 3,000, and they see an upside of 40%. But something like Macquarie, they maintain underperform with a target price of 1260, a 23% downside from the current levels. Now, all in all, if you look Lastly, buy rating and the sell rating of this particular stock. The company remains at 28 buy with a return potential of 12% going forward. And this 12% comes on the back that stock has already dipped in trade today, almost 5%. So all in all, we see a mixed picture right now. But post the con call on 5:30 on this Friday, we'll get more understanding of why board is doing this particular fundraise going forward.
Right, Kush, coming to you on Coforge, we saw a sharp downtake, but the stock seemed to have find some support around the 1750 level. How are you looking on the charts when it comes to Coforge?
In a positive light, a couple of reasons for that, Sumit. First, that the IT rally had actually run its course from a near-term perspective, and I think it was yesterday only in the morning show when I said it's a good idea to perhaps wait for some sort of declines and some sort of profit booking on some of your favorite IT names, be it Persistent, be it Coforge, even HCL and Infosys for that matter. It's a good idea to wait for some profit booking and then go out and buy. So that's the overall view on the IT space. Now, as far as Coforge goes, yes, it's seen a sharper dip than the rest of the stocks, but two levels, 1760 and 1705, maybe rounded off to 1700. This is the 50 and the 61% retracement level respectively for the recent rally that had come about. So between this price, between 1700 and 1760, if I do get the stock again, I think my risk reward ratio will be favorable. The correction would have run its course. And even if it doesn't go up one way, in a V-shaped manner, I think the risk reward ratio and a medium-term positive outlook will bode well for the stock. So I remain constructive on Coforge. I think this dip just might be a buying opportunity.
That's the view coming in for Coforge from Kosha. But now let's move on to our special segment, Heard on the Street. Largely the market's volumes have dried up, but the Heard on the Street, any khabars, have they dried up as well, Somit, or is there anything juicy?
Well, not much. Just 3 stocks that I have today on my list because volumes are really low and not many stocks are discussed. But 3 that I have are quite interesting one. Firstly, it's on Restaurant Brands Asia. Now, a big block deal took place in the first half an hour of trade in trade today. Around 1.3 crore shares changed hands. Now, what dealers are indicating is that Amansa Holding was one of the sellers, and there are 2 names that have actually floated around here. One is the name of a promoter of a listed pharma company, and the second one is a domestic mutual fund who has been quite active in past few days and has been buying in block deals. So it would be interesting to see who's actually the buyer when it comes to the Restaurants Brands Asia block deal today, if at all that data comes out in the bulk and block deal data. Second stock on the list is Avenue Supermarts. There are sell flows on large HNI desk is what dealers have indicated. The Q3 numbers are expected to be on the weaker side for this counter. So keep an eye out for Avenue Supermart. And lastly, Coforge. That stock is down nearly 5%. There's a fundraise board meet on December 26th. Now, the buzz on the street is that the company is doing this fundraise for an acquisition, and dealers are indicating that the company might look to acquire a US-based company, US-based IT company, and it will be they'll be buying this on a slump sale basis. And this company has sales of around $250 million US. So it would be an interesting buy, and how much are they paying for this is still not known. So it could be an interesting acquisition if at all this news comes out to be true. And PFC is one counter that we mentioned yesterday, that there are strong buy flows on institutional desk, and that stock is up nearly 3% in trade today.
All right, thanks so much for that, Somit. Khabar confirmed for PFC, and that is something which we will note it down.
And one more, one more stock I want to talk to him about is Coforge. Now, you're talking of a news that could be coming in there, but I think we were just discussing there is an analyst meet which is on the 26th of December at 5:30.
Yeah.
A potential that announcement could be on
announcement could come in back at that time only, and then the fundraise announcement, along with that, they could announce this acquisition. And dealers have also said that this fundraise might not be from various funds, just couple of funds that they have already shown interest, I believe. Hence, they have come out with this announcement.
So
and
I think Coforge should be on your radar as well from here on. But I think the hot topic to discuss today is what's happening with silver and gold. We have Ajay Kedia, Director Kedia Advisories, joining in. Ajay, welcome to the show. Always a pleasure to speak to you on NDTV Profit. This is Hiral on the side. Both the metals, record high levels day in and day out. It seems 2025 has been a year which I don't think so will be repeated in the near future with the kind of gains both these precious metals have seen. What are the levels that you would be tracking on both, and would you advise investors to even buy at current levels?
First of all, golden afternoon, because it will be definitely a golden afternoon, because today also we have seen a new highs on gold and silver, both the counter. Up till now, since January, we have seen 80% gain on domestic gold prices, and silver prices was around 147%. We have seen a rally. Factors like interest rate cut scenario will continue in 2026 also, which has supported. Important would be the silver, because here we have seen metal squeeze has been continuous to be there. Because of that, prices are continuously gaining. And yes, you have rightly said, this type of return we have never seen. Last time in 1969, we have seen when silver has rose to the level of $50 mark. At that time, in a single year, we have seen a gain of 360%. But I think, yes, the fundamentals are with us, like rate cut, geopolitical tension, ETF buying, central bank buying, de-dollarization, dollar weakness. All these factors at one point of time, and especially added flavor was Donald Trump critical metal list, where silver was added. So I hope 2026 is going to be again a positive year, but don't expect whatever the rally up till now we have seen like 147. We are expecting silver to be around $85 mark next year, 2026. But there could be a chance of some correction also, what we have seen in the month of October, where silver has corrected around 18%. So some whipshots would be there. But yes, again, a double-digit return would be there for 2026 for silver and gold both.
And Ajay, the question is, what would be the key levels, if you would give us, and give me two levels, key levels, maybe in the next 3 to 4 months, where gold and silver stand, and if 2026 end levels, if you can get. Because at times, some signals are suggesting a multi-year rally for silver. For gold itself, of course, it would be a different case. But Ajay, just give me the technical levels, short term as well as, medium term for gold and silver.
Okay, first of all, let's talk about the gold. See, everyone is still expecting a gain, but I think the gain around 12-15% would be the prudent level we could look from here. So today, right now, it's around $4,500 mark. I'm expecting maximum upside would be 4850, 4880 level, not beyond that level. That too with a risk inbuilt, because already the rally asset class like gold has never seen this type of moment. So I think maximum upside is around 4850. I'm looking for 2026. Whereas the support side, recently we have seen prices have dropped down to the level of 3840, 3850 level. So I think immediate support would be 3850 level. In case of silver, we have an industrial demand, we have shortage, we have ETF buying, even gold silver ratio, which is dropped by 40% in this year. So suggest more upside would be there. But coming on the level side, immediate support, I am expecting around, let's say, $50 to $53 mark would be the prudent level, where prices should be at least fair price to re-enter again. But higher side, around $85 would be the projection, because we have never seen, this is uncharted territory. In 1980, 2011 also we have seen the level of $50 mark. So I think $85 would be the prudent level we can see. But coming on domestic side, here rupee weakness would be adding some more upside. Maybe a level like 1,50,000 to 1,55,000 in case of gold. As of now, we are expecting, but silver might test the level of 2,75,000 also.
Thank you very much, Ajay, for giving your views on the precious metals and the rally which is there. Expect some good returns next year also, but not so much as what we saw in 2025. Thank you very much, Ajay. Let's take a quick break. On the other side, we get you top BTST trade picks for tomorrow.
राजस्थान, शौर्य और वीरता की धरती। अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र। इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा, और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़ें राइजिंग राजस्थान कॉन्क्लेव। विकास भी विरासत भी सिर्फ एनडीटीवी राजस्थान पर।
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome back to India Market Close. Now, one segment that has been buzzing in trade over the last couple of trading sessions is the railway pack. What's happening? Is this a pre-budget rally that we are seeing? You know, let's look at the past performance during budgets as well. Overall, majority of the companies have given smart returns. If you see the 5-year average as well, in the range of 6% to 27% from RVNL, Jupiter Wagons, Titagar, GPT Infratex, Macro Rail. So the rally seems to be pretty strong when you talk about all of these railway companies. What has not moved? Now, let's look at the key takeaways. Jupiter Wagons, RVNL, GPT. All of these companies have seen a strong rally specifically when it comes to 2024. Moving on, the pre-budget rally has also come in from 2022 to 25. So if you look at all these 5 years, the rally has been strong. RVNL has emerged as the top performer in the last 3 years when you talk about these railway companies. Now let's look at the budget allocation that was done to railways as well. If you talk about the last couple of years, the highest has come in between FY25 and 26, but FY26 has remained absolutely stagnant when nothing has moved. So a flat move there. However, the highest growth in terms of allocation happened in FY24, and that's the year when you did see smart moves coming in from railways as well. So it's going to be interesting in terms of what that number is going to look like for FY27. If you talk about the total capex spent in the first half, 56% of the entire 2.5 lakh crores has already been spent in the first half of FY26 from the budgeted allocation. And the capital expenditure stands at around 1.42 lakh crores if you have to look till September 2025. Now, the key announcements that we should be picking up this year, first up, they've approved the 4 multi-tracking railway project. This was nearly around 24,600 odd crores. So this was one of the key announcements. Then they've said that they're looking to build new railway lines near China border. And the cost of this is going to be close to around 30,000 odd crores. And the cabinet has cleared nearly 11,000 crore worth for multi-tracking across 6 states. They've hiked ticket prices effective the 26th of December. So that's the latest development that has happened over the last couple of days. And 1 paise per kilometer will be charged extra on journeys beyond 215 kilometers for ordinary class. So from here on, the sector on the back of the budget is seeming pretty interesting. There seems to be a good uptick. Whether someone should be really counting on this rally or not is the question we should be taking with Avinash. Avinash, your view, because a good run-up in all of these railway companies over the last 2 to 3 trading sessions. Do you think this is a good time to enter railway and look at a pre-budget play? Avinash, I think you're on mute.
Yeah, sorry. So Hiral, this is the regular yearly kind of ritual. I think ahead of the budget, a pre-budget rally happens in railway companies. I think we are constructive on wagon companies because our belief is that the wagon requirement is growing and there are handful of players who currently hold a large position here. So maybe Jupiter Wagons, Titagar Wagon, Texmaco, these could be companies one could look at because apart from the investment in rolling stock, new kind of railway stations, the railways are very clear that hopefully, the wagon requirement is going to be indigenized. So I think you will probably see a lot of action on the wagon company side, and all these companies are technically very strong. I think, on the capital structuring side and on the order book side. So I think Jupiter Wagons could be an interesting bet. It's come down from a significant level from its peak. And I think numbers are pretty strong. And I think hopefully the second half is a period where you see maximum ramp up in the production volumes. So I think here, I think one could definitely take a bet. But overall, I think there could be some good news in the budget for the railway sector because the government is very keen on to improve the railway infra space. And I think funding is not a problem. The government has clearly ensured that new, rail tracks as well as new rail wagons could be introduced to ensure that the traffic requirements are catered to.
Every 1 month before the budgets, fingers get crossed. But joining us, our tech guest Amar Dev Singh from Angel One. Amar, before taking your picks, I also wanted to take your views on the railway stocks. Just trading perspective for 1 month only till the budget plays. Is there any kind of stocks in your radar? Some have run up already.
Yeah, so I would say amongst the railway stock, RVNL is one stock which one can look at because it has corrected significantly and currently it's on a run, definitely no doubt from. But if you look at it from almost 650 levels in the September quarter of 2024, it corrected significantly. But for the last, I would say 3 days in specific, it's up by almost 10%. But if it sustains above the 350 levels, 350, that's going to be a 350, 360 is going to be an important level to watch out for. Sustaining above that level, then the stock has the potential to rally towards the 400 mark. So this is one stock one can keep a close watch on.
Correct. RVNL would be something to look out for. Amar, what's your technical picks?
So the first one is from the tech space and that is Birla Soft. So in Birla Soft, what we are seeing is that the stock has did correct significantly and then it has bounced back from almost 340 levels. Currently, it's around 455, 456 odd levels. So this is one stock one can keep a close watch on. Buying at the current levels for an upside target of 487 and a stop loss of 427. And the second stock to look at is from the pharma space. And that is Granules India. So what we are seeing in Granules India is that the stock was in for consolidation. Overall, the trend is definitely strong and positive. If I look at the long-term trend, that's very strong and positive. There is momentum on the monthly charts and the weekly charts as well. And there has been a significant breakout above the 570, 580 levels. So the stock for the last few days has been showing significant interest as well. So this is one stock one can look at buying at the current levels or maybe a pullback towards 610 or so.
Right, sir.
So one can look at that.
Right. Moving on to Tata Motors, now they have rolled out a major EV roadmap. Now this is backed by new launches and significant investment. My colleague Puneet caught up with Shailesh Chandra, the MD and CEO of Tata Motors passenger vehicle segment, to understand whether EV sales will now spread more evenly across the entire portfolio of the company. Listen into that.
Firstly, congratulations on 1 lakh sales out of the 2.5 lakh that you sold. Do you think that going forward, when you get the next 2.5 lakh, you'll see that one model having that kind of segregation because you will have a lot more launches in the next 5 years? So do you think that that will get more segregated, or is it that you will have 2 to 3 hero products and you'll have the other portfolio depending on the price range around that?
So I would expect that the next candidate of 1 lakh should be an entry EV. And that's what the trend is also looking like because Tiago EV should be the next to reach the 1 lakh. I think, because we are focusing on ensuring that every product in our portfolio is a compelling value proposition. Not all would be right now, but I said that we are working on our existing product also to make it very compelling for a customer who's thinking of buying a car at a certain price point, who actively considers buying an EV. and finds it compelling.
Okay, so that's with regards to Tata Motors PV. In fact, I think if I'm not mistaken, I remember one of the analysts mentioning, Parag Bhai was mentioning that this will be one of the multi-baggers that one should be watching out for, a 1.2% upside coming in today's day of trade. Avinash, your view when it comes to Tata Motors PV, with the EV foray, with Sierra coming in as well, would you advise investors to look at it at current levels?
Yeah, I think Hiral, looking at the current price, the stock definitely appears to be reasonably attractive. I think, over the next 6 months, October to March is a period where you normally see a good ramp up in the automobile numbers. And we are quite positive on the fact that the new Sierra as well as the new electric vehicle kind of strategy is going to definitely pay rich dividends. Of course, we may not see the entire impact coming in the next 6 months, but FY27 looks pretty good. And our sense is that at these levels around 355, 360, one could definitely expect a decent risk reward provided you have the next 12 to 15 months time frame in mind.
Okay, so that's with regards to Tata Motors. In fact, staying with the auto space, we did speak to the management of Belrise as well on the back of the promoter stake sale that happened, as well as the foray when it comes to the defense space. That stock has cooled off. Let's listen in what Sumedh Badwe had to say.
This company called Plasan Sasa that we have signed a strategic partnership with. They're a global leader in the armored vehicles and ballistic protection space. They're doing some incredible work globally, including in the likes of the US and various other countries. The partnership that we signed is specifically for this product called the Atom, which is a UGV, an unmanned ground vehicle, which we're looking to not only sell and manufacture and sell in India for the MOD, but also are working on a manufacturing partnership for them. We'll be manufacturing parts for them for their global platforms. That is the idea that we're trying to work with them. And it's a very unique, one-of-its-kind product. The best part is it can run independently, or it can be attached to another prime vehicle. And as it can be, it's an EV, it's an electric vehicle, and it can operate in very remote and inaccessible conditions. And it can be partnered with, it can be a payload carrier, it can be connected to a tethered drone. It's a very versatile product, and that's why we're very excited about this partnership and looking forward to bringing it to India. Thought process was, as we declared in the DRHP, that we would be merging two of our entities into Belrise. Now, with that, given the fact that we are already under 75% promoter shareholding, with the merger of these two companies, we'd go above the 75%, which would breach the SEBI MPS norms, which would obviously not be allowed to do. So, rationally, we had to dilute a certain portion, about 6.5%, which will allow us to merge these two entities and go back to in that range of 70 to 75.
And what's interesting is 900 odd crores that they would be raising on the back of this will be probably going into family office. Where that would be interested is anyone's guess from here on. In fact, staying with the auto anch space, we did speak to the management of Motherson, Samvardhana Motherson as well. And this is on the back of the acquisition that they've made. Let's quickly listen into that conversation as well.
Well, for us, it's always the customers' requirements and what do they want us to do. That's the primary thing. So in this case also, Nexans SA had announced many years ago disinvestment in many of their assets. And this was one of their last remaining assets. And the prime customers of this asset wanted us to be there. They blessed us for this acquisition. Apart from that, we have been a wiring harness player for a very long time. Motherson started with making wiring harnesses, and over a period of time, we have manufacturing footprints in different parts of the world and have successfully conducted the business. This helps us having more manufacturing footprints in countries which are emerging economies, and countries like Romania, countries like Tunisia. So we have now a footprint which supplies to the prime German car makers like BMW, Mercedes, Porsche, etc., which are also the key customers of our group in Europe for multiple other products.
That's both the management, Samvardhana Motherson as well as Belrise Industries, both of them giving their views on the strategic outlook going ahead. Avinash, out of these two stocks, which of them are looking better fundamentally placed?
No, in fact, Sharad, Belrise looks better. In fact, if you see the second quarter trajectory, very strong growth in both top line as well as profitability. And I think the second half is a period where most of the volume growth happens. So I think we are quite positive on Belrise, despite the fact that the stock has moved up significantly today by about 6-7% odd. We feel that earnings growth for Belrise for 26 and 27 should be in excess of 20 to 22%. And I think to that extent, Belrise definitely deserves a significant amount of re-rating. And I think the new acquisition which they have made, the joint venture agreement which they have made, this is also going to trickle down into revenue, hopefully in the next financial year. So Belrise continues to be a structurally positive bet for us.
With regards to where Belrise goes, in fact, Coal India, let's pull up that one on the screens and see what the counter is doing in trade. And that stock is buzzing because of the company's plans to raise approximately 1,300 odd crores through IPO when it comes to Bharat Coking Coal Limited. In fact, we had reported earlier, my colleague Shrimi, some time ago in the month of October, that they would be probably looking at it in the month of December. We're still a couple of days away. Let's see if they file for it. But that stock is seeing gains of nearly 3.5-4%. Very quickly, Amar, any view in terms of Coal India? Would you be a buyer at current levels?
Yeah, Coal India definitely want to keep under one's radar because it's breached an important zone. And I would say 415, 420 is a level to watch out for. Sustaining above that level, then the stock is headed towards the 440, 450 levels.
This is one stock that remains in focus. What our channel checks are indicating is that there has been a price hike of at least as much as 2 rupees per stick. Now, this is not done on a pan-India basis. Some regions have seen this hike coming in. So, not everywhere this price hike have been taken. But yes, some regions have seen a price hike of as much as 2 rupees per stick. Now, we did reach out to ITC for a comment, but we are yet to get a response from them. But as of now, what dealer checks are indicating is that there has been a price hike of rupees 2 per stick, and this could definitely be positive for the ITC margins going forward. So we need to watch out for whether the company comes out with any clarification on the same or not. But Avinash, price hike of 2 rupees per stick before the budget and before the excise duty has been announced. Is it a bold move coming in from ITC, and how do you see the impact on margins to come in?
Margins definitely, Swamik, would improve because this definitely would straight away add to the bottom line. Because incrementally, I don't think there's any major cost which is increased. I think obviously the entire benefit would be coming to the PBT level. But I think the move is quite aggressive, considering that this has been done just ahead of the budget. So I think probably some expectations that possibly cigarettes could come under heavy tax, and that's the reason possibly the company has preempted this and already taken a price increase. So I think net it's going to be a good move, but I think we'll have to see how it's passed on a national level on a pan-India basis. Only then we'll get to see the full impact on the numbers.
Okay, that's with ITC. So you're talking about 2 rupees per stick as per what sources are indicating. I think what is going to be the impact is going to be interesting to watch out for. In fact, the stock nearly trading at the day's highest levels. Amar, a quick view when it comes to ITC on the charts?
Yes, so if you look at ITC, I would say ITC has been a slow mover, but currently it's in for consolidation. So if I look at the stock today is up, but I would say 415, 420 is the upside where the stock could meet with resistance, or downside support is around 400 odd levels. So it's more of a range play in ITC given the longer term charts structure.
Amar, what would be your BTST trades?
Yeah, so one stock which I like is Granules India is one stock one can definitely look at, very strong on the momentum side. And it's trading over the 600 level, which was a key zone of resistance. Upside is around 640, 650 one can look at. And the stock has very strong support below the 600 levels.
Right. Well, Ambuja, ACC, Orient Cement and Sanghvi Cement, all of these companies remain in focus on the back of mega merger that has been announced by Ambuja Cement. Now, the entire transaction is expected to complete in the next 1 year, and most of it is via share swap. Firstly, they will be with ACC, if you look at, Ambuja will be issuing close to 328 shares for every 100 shares that you're holding in ACC. So if you look at the math here, the valuation for ACC is largely at par with the current market price. So not much of a discount or premium that Ambuja is offering to any of the ACC minority shareholders. But when it comes to Orient Cement, Ambuja will be issuing close to 33 shares for every 100 shares of Orient Cement. Now, based on yesterday's closing price, this indicates that Orient Cement minority shareholders are getting a premium of nearly 9% compared to yesterday's closing price. So that's positive coming in for the minority shareholders of Orient Cement. For Sanghvi Cement, similar move, Ambuja will be issuing 12 shares for every 100 shares, a premium of nearly 4.5%. And when it comes to the smaller company like Penna Cement, that will be done via cash transaction. Ambuja Cement will issue 321.5 rupees per share to the non-promoter shareholding, given the fact that they own just 0.6% of the entire company. But what does this merger do to Ambuja? Well, it's a big positive coming in, given the fact that it simplifies the entire group structure. It positions Ambuja as one single platform for a cement company all over India, and also eliminates the related party transaction, improves corporate governance, and also leads to more transparency in the company. Also, it will lead to better capital expenditure plans and better capital allocation plans from the company's side, and could also eliminate if there is any holding company discount at this moment. Now, management is targeting a cost saving of close to 100 rupees per ton, based on the fact that there will be supply chain efficiencies that would kick in, and so 100 rupees per ton is what they are targeting at this moment. And what does this do for the existing shareholders of Ambuja Cement? Their merger will lead to some equity dilution of around 13.2% or close to around 32.65 crore. Promoter holding comes down to 60.9 from 67.7%, and based on yesterday's closing price, Ambuja's market capitalization increases to 1.5 lakh crore from earlier 1.3 lakh crore. So all in all, a positive deal coming in not only for the Ambuja shareholders, but also for other companies, all other related cement companies shareholders as well. Right. Avinash, how are you looking at this overall deal? This was much awaited by the street, but given the fact that it's been done at a good valuations, and there is there's some interest left even, or some value left even for the minority shareholders going forward.
No, I think, see, longer term, this entire M&A is going to be beneficial for Ambuja Cements, because typically, any cost saving for any cement company actually adds to the bottom line. And I think 100 rupees per ton is what the ballpark estimates are. Going forward, it could be even much better. But I think the logistic cost, the related party transactions, and the overall, cost savings are definitely going to yield a significant amount of benefit. And plus, the overall volume opportunity is also going to be quite significant. So I think, typically, geographically, Ambuja will be in a better position to tap new markets. Plus, at the end of the day, they would be getting better yields by saving a lot of costs. So I think net, the benefit of this could get reflected in FY27 numbers. In FY26, we may not see the immediate impact coming in. Some dilution has happened, so there could be some earnings growth pressure. But FY27 definitely could see significant amount of benefits rolling in because of this merger.
So that's with regards to where the cement pack goes. A few of the other names that are buzzing in trade, BEML. The stock is up nearly 11% at the last 3 trading sessions. BEL, again, that stock is just trading 32% lower from its all-time high, but has started gaining momentum. Apollo Microsystems is another one, up 16% in the last 5 days. Good moves coming in there because the volumes are almost 57% above the daily average volumes. Paras Defense also, the volumes are twice the 20-day average volumes, and that stock is buzzing. And data patterns also, which is seeing a strong day of trade. In fact, last 3 to 4 trading sessions have been very strong for these names as well. Amar, would you be a buyer of any of these names, because there is some bit of strength, some bit of a positive trend that is emerging?
Yeah, I would say that if you look at the defense stocks, they had witnessed a significant correction. Talking about BML, from almost 2,600 levels, the stock corrected towards 1,600, and then it has bounced back. So this bounce back was on expected lines. So BML is one stock one can look at sustaining over the 1,800 levels. It has a potential to rally towards the 2,000 level. But what we need to understand that most of the defense stocks, they could witness some sort of consolidation, because after the sharp correction, there is this pullback. And the same also applies to Apollo Microsystems in that case, because it's bounced back from a very crucial and important support zone that was around 220 levels. Upside for Apollo Microsystems from a shorter term perspective is somewhere around the 290-300 levels.
Avinash, I would like to get you in on Restaurants Brand Asia. Let's pull up the chart. The stock is up almost 3% and institutional interchange has happened. Amit had also actually pointed out earlier as well. There is a movement happening in the family office as well. But Avinash, a long-term perspective, for Restaurants Brands Asia, how does it actually stand? Because I think in the long-term basis, this hasn't given much return to the investors. It's actually tested the patience. So Avinash, what would be, the view right now?
No, I think, Sharad, ultimately, the company has to get back to profitability. And in the QSR space, there's a lot of fierce competition which is going on. We've seen larger players also, getting a, sense of the competitive, scenario. So I think, most importantly, despite the fact that the stock is available at attractive price levels, the markets would like to see stronger volume traction and margin enhancement, which I think has been missing for a very long period of time. So I think despite all the corporate developments, my sense is that, the second half of this financial year, hopefully if the volume growth is strong, the margins improvement take place, then only I think you could see a significant amount of re-rating, because here the narrative earlier was built very strongly, but unfortunately that narrative was not supported by numbers. And I think that's what the market wants to now have a look at the numbers. Unless these numbers come out, I don't think you're going to see any significant re-rating happening. So structurally, at best, it can be a hold. Fresh buying, hopefully, after the December quarter comes out, we get to know the numbers, the management commentary. I think that would be a good time to commit.
Thank you very much, Avinash and Amar, for your views, both fundamental and technical. But we are moving towards the closing of the market, and some buying has happened across some counters, and that's why it's actually lifting the indices as well. Let's just pull up how Nifty Bank are performing. And okay, that has come in actually flattish. That's interesting actually. There is a volatility at play as Nifty expiry is there today. But all of them are in a very, very short range, as we had pointed out earlier in the day as well. Let's see the stocks, what the movement has happened. The Nifty 50 constituents, let's pull up. Coal India, ITC, Shriram Finance doing well in trade. But some reds have increased, but nothing too much worry about. The IT names and Bharti Airtel, that's where the pain is there. Sectorally speaking also, there is an equal distribution happening here. Of course, FMCG pack, CPSC pack, the PSU pack, which I call, they are doing well in trade, but a very narrow range. India VIX is also on the lower levels. Your volumes and turnover will be also on the negative side. IT, we are seeing some profit booking after 2-3 good sessions. Also, let's see the advanced decline ratio, and throughout the day, it has been in the favor of the bulls. Slight kind of dip coming in, but still it's a 3:2 ratio, which is still maintained in the favors for the bulls. Let's see the mid cap indices and the small cap indices, how they are performing. And largely looking at this, the mid cap 150 index, there was a better performance, and even the small cap, they are doing very, very well as compared to the benchmark indices, and that is for the second or third day we are seeing a very strong small cap index ending as well. And BSE 500 index, stocks such as Prism Johnson, that's almost up almost 19%. Railway related stocks are that's up 7%, and other stocks also doing well in trade. Chola Financial, that's the stock of the day as well. Amongst the losers, there is Coforge, Latent View, and even Kajaria Ceramics, and profit booking coming in PVR Inox as well. This is the entire picture for the day, but net, it seems like small caps are enjoying the Santa rally. Let's see what is there. Cues for tomorrow. US industrial production is there. Data is there. Buyback, Nectar Life Science buyback is there at 27 rupees per share. Bonus issue coming in for GRM Overseas, which you should be having a look. And apart from that, interim dividend announcement, which you can see. So these are the important cues for tomorrow, and there's an important board meet also where Gayatri Projects will come with their financial results. So not much in the corporate setup or even the macro setup, but remember, tomorrow is the eve of Christmas and it's a trading day, but on Thursday it's a market holiday. That's all for India Market Close today. Thank you very much. Stay tuned to NDTV Profit, and up next, Himangshi gets us Market Express.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
माही, कोई कूल बैंक सजेस्ट करो ना जो सोशली कॉन्शियस।
फिर तो SBI कूलेस्ट है।
Really?
SBI ने होनहार बच्चों को स्कॉलरशिप्स दी, गांव के यूथ को ट्रेन किया, स्पेशली एबल्ड को सपोर्ट किया, विलेजेस को अडॉप्ट किया।
That's so cool, man.
SBI, the banker to every Indian. Truly.
राजस्थान शौर्य और वीरता की धरती, अब वही धरती कैसे बन रही है, आधुनिकता और विकास का नया केंद्र। इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव, विकास भी विरासत भी, सिर्फ NDTV राजस्थान पर।
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. First up, so benchmarks have given up the gains notched in the afternoon. So Nifty has manages to close, above 26,100 level. Sensex gives up the gains to lose more than 70 points. Advance decline ratio, if we talk about, has been tilted in the favor of the advances. And talking about the sector, so mixed sectoral picture there. Media and metals lead the gains. IT and PSU banks were on the back foot. And if you talk about pharma and realty, so they were also reeling under pressure. And what's been the key highlight today was the prices of the gold and silver. So they are shining brighter than ever. Gold has set its 50th daily record this year, surging 2.4% in the last session. This is its biggest one-day jump in over a month and touching a record peak of $4,498 an ounce. Geopolitical tensions, robust ETF inflows and de-dollarization trends are fueling this rally. Year to date, gold is up 72%, while silver has skyrocketed 135%, both the metals on track for their best annual performance since 1979. So for silver, if we talk about, the triggers are strong. That is rate cut hopes, supply squeeze for the 5th straight year, rising industrial demand, and its addition to the US critical minerals list. And if we talk about the safe haven appeal and macro tailwinds, so they are making this a historic run for precious metals. Now let's look at the stocks that were buzzing away in trade. First up, we have Chola Finance. So the shares have surged as much as 8.1% today, marking the biggest intraday move since January 28. So the rally is following short covering after the stock has fallen nearly 8.7%. So over the past 6 sessions, viewers, dropping from 1,736 rupees to 1,585 rupees, management has clarified that all the allegations are baseless, reaffirming a strong asset quality and also liquidity, and they have confirmed that operations remain compliant and highlighted that ICRA continues to rate the company AA+. So the allegations reported by Cobra Post involved corporate governance concerns and promoter-related issues. Next up, we have HCL Tech. So that is making a big move in the business intelligence, and the IT major has announced the $240 million acquisition of Jasper Soft, which is a division of Cloud Software Group. So the deal strengthens HCL Tech's agentic and BI roadmap while expanding its reach through a global developer and architect community. So this strategic buyout is expected to close within 6 months, reinforcing HCL Tech's push into the advanced analytics and enterprise intelligence solutions. Next up, we have Satvik Green that is powering ahead in the solar space. So the company and its subsidiary have bagged orders worth 500 crore rupees, including a 486 crore EPC contract for solar PV modules with a 12-month execution timeline. Also, Satvik has secured a 13.5 crore order from Maharashtra State Electricity Distribution Company for solar photovoltaic water pumping system. So these wins, underscore Satvik's growing footprint in India's renewable energy push. And next up, we have Sanghvi Movers, which is scaling up its wind energy play. So the company's subsidiary has secured a nearly 429 crore order from multiple independent power producers for a complete wind project installation covering balance of plant and also turbine setup. Work is scheduled to begin in Q3 of FY26 and wrap up by Q1 of FY28. So with this win, Sanghvi's consolidated order book now stands at 1,239 crore rupees, which is largely billable in FY26, strengthening its position in India's renewable infrastructure space. And Antony Waste Handling has bagged a major municipal contract. Its subsidiary has won a 329 crore order from Thane Municipal Corporation to build a mixed solid waste plant with a capacity of 600 to 800 tons per day. So the project includes operation and maintenance for 10 years, reinforcing Antony Waste leadership in urban waste management. So with this win, the company's order book stands strong at 12,500 crore rupees as of September 2025. Next up, we have GPT Infra Projects. That has also scored a big, win in the road infrastructure space. So the company has emerged as the L1 bidder for a 670 crore order from NHAI to build a 4-lane elevated road in Jodhpur city. So this project adds the significant heft to GPT's pipeline, with its unexecuted order book now standing at 3,591 crore rupees as of September 30th. So a strong boost for the company's presence in India's highway development space. Next up, we have MK Global. That is staying bullish on JK Tyre. The brokerage has retained its buy rating with a target price of 625 rupees and implying a 27% upside from the current levels. So MK expects the company to enter a multi-year accelerating growth cycle with margins likely to surpass the previous peaks between FY26 and FY28. So the premiumization trend in tires is strengthening, which MK sees as a key driver for sustained profitability. Next up, we have Jupiter Wagons, which is on a tear. So the stock has surged 33% in just the last 3 trading sessions, hitting its highest level in 21 weeks. I beg your pardon. And what's the big trigger here? So promoter has increased its stake to 19.24% from 18.69%, and this is signaling a strong confidence in the company's future. So market action has been intense. Volumes have spiked nearly 40 times the 20-day average, making Jupiter Wagons one of the most talked about counters on the street. So investors are clearly riding the momentum as the stock powers ahead. And viewers, railway stocks are seeing some strong momentum with sharp gains and high volumes in the recent sessions. So RVNL has risen 11% in just 3 days, but remains 48% below its all-time high. So Jupiter Wagons has surged 33% after promoters have increased their stake to 19.24%, as I just told you. And Titagarh Rail Systems has gained 11% despite a downgrade by Morgan Stanley and also a target cut. So Texmaco has advanced 11% after approving the sale of its shares in its subsidiary. Rights have also climbed 11% following an MOU with Botswana for transport infrastructure development. And let's shift focus to some defense stocks that are witnessing sharp moves with heavy volumes in the recent sessions. BML has gained 11% in 3 days, trading at 4 times its 20-day average, though still 32% below its all-time high. So BL and Data Patterns have also seen steady gains, while Apollo Micro has surged 16% in 5 days with volumes 57% above the average. Paris Defense, if we talk about, is up 5% with volumes at twice the norm. So analysts are expecting revenue growth for BEML to accelerate from FY27, keeping the sector in focus. And Coforge is in focus as concerns rise over potential equity dilution following its latest fundraise. So while bears point to the weak cash conversion and timing of the preferential issue, bulls highlight improved free cash flow and also strong growth ambitions. The company plans to hit a $2 billion revenue target, prioritizing investments over buybacks seen among the peers. And brokerages remain divided, with Macquarie maintaining an underperformed rating and Motilal Oswal reiterating a buy. So the debate underscores near-term valuation overhang versus long-term growth prospects. Viewers, Restaurant Brands Asia has seen a heavy trading as 1.3 crore shares have changed hands in a block deal. So this comes after Amansa Investments has trimmed its stake in the November, reducing its holding to 6.5%, and the stock has fallen 22% year to date. So even as the company focuses on structural profitability and traffic-led growth, the key watch points include labor normalization, broiler rollout, and also the CRM activation in the coming quarters. So the company is planning aggressive expansion, targeting up to 800 restaurants by FY29 with margins near 70%. Now let's look at some brokerage notes. Motilal Oswal has initiated coverage on Nykaa with a neutral rating and also a target price of 280 rupees. So the brokerage notes that Nykaa benefits from penetration, premiumization, and direct-to-consumer trends, positioning it well against horizontal platforms and also quick commerce players. So private labels are seen as a key margin driver here, while fashion remains a strategic adjacency rather than a core valuation contributor. So the report is highlighting Nykaa's sweet spot as a vertical specialist in the beauty and fashion space. Kotak Securities has also reiterated its sell rating on Samvardhana Motherson with a target price of 95 rupees. So the company's recent foray into the global passenger vehicle wiring harness business is also expected to broaden its customer base and also leverage strong engineering capabilities. However, Kotak notes that the acquisition could be marginally EPS dilutive in the near term. Muted global PV trends and expensive valuations underpin the bearish stance, despite strategic benefits from advanced LV versus HV harness expertise. And GK Energy's lock-in period has ended, viewers. The 3-month shareholder lock-in has officially come to a close, unlocking 5 million shares, about 2% of the company's outstanding equity for trade. So at the last closing price, these shares are valued at nearly 79.92 crore rupees, which is nearly 80 crore rupees. Then this move could actually inject fresh liquidity into the stock and also may influence the near-term price action as these shares hit the market. Next up, we have Lloyd Enterprises that is undergoing a strategic transformation, by merging its real estate arms, Lloyd's Realty Developers and Indrajit Properties. So after consolidation, the real estate business will be demerged into a new entity called Lloyd's Realty Limited. Now, future projects under Lloyd's Realty are expected to have revenue potential exceeding 7,000 crore rupees, and the move, aims to unlock long-term value in the real estate segment. Shareholders will receive shares in both the entities based on a defined exchange ratio. Next up, we have Cipla that has launched Afrezza, which is an insulin inhalation powder in India after receiving CDSCO approval. So the company holds exclusive rights to distribute and market Afrezza now in the country, and manufactured by Mankind Corporation in the US. The product is suitable for adults with type 1 and type 2 diabetes, and this launch could benefit India's nearly 10 crore adults living with diabetes, offering an alternative to traditional insulin delivery methods. Viewers, UPL is in focus as its subsidiary plans to acquire Hybrid Seeds Vietnam Company Limited, which operates in the seeds and allied agri-business segment. So this acquisition aims to expand UPL's presence in seeds and related businesses, strengthening its portfolio in the agriculture value chain. The deal is also expected to be completed on or before December 31, 2025 with consideration of $2,000. And this move aligns with UPL's strategy to grow its global footprint in high-potential agri-input markets. The next stock that was buzzing away was Belrise Industries, and it has signed a strategic defense agreement with Israel-based Plasan Sasa. So the partnership will target ATEM electric vehicles for the Indian military with a strong emphasis on Make in India through localization and technology transfer. So Belrise will also join Plasan's global defense supply chain. And separately, the promoter group plans to sell up to 6.56% stake via Sumeth Tools at a floor price of 153.7 per share, about 3% below the last traded price. So the deal size could reach 897 crore rupees with Jefferies as sole book runner. And viewers, Novo Nordisk has secured a major win in the obesity drug race. The US FDA has approved a pill version of its blockbuster weight loss drug Wegovy, marking the first oral medicine in the GLP-1 class. So the approval is based on the Oasis 4 trial, where patients taking a 25 milligram pill once daily lost nearly 16.6% of their body weight. So Novo Nordisk says that the pill will be launched in the US early January and is also approved for long-term weight loss as well as maintenance. So this move is seen as crucial for Novo Nordisk as it looks to defend the market share against rival Eli Lilly in the booming obesity drug market. And the company has also filed for approvals in Europe and other global markets in the second half of 2025. Viewers, Tata Motors is stepping up its electric vehicle roadmap. The company plans to launch the Sierra EV and refreshed Punch by calendar year 2026, while its premium EV brand Avinya is set to debut at the end of 2026. And speaking on this strategy, Shailesh Chandra, MD and CEO of Tata Motors Passenger Vehicles, said that the company will also roll out 3 new nameplates between FY27 and FY30, while targeting a 45 to 50% share of India's EV market. So Tata Motors will invest 16,000 to 18,000 crore rupees between FY25 and FY30 to support this expansion. And the move builds on the rebirth of the iconic Sierra, first showcased at the Bharat Mobility Expo and officially launched in November, blending nostalgia with a modern electric-first approach. And the battle for Warner Brothers Discovery is heating up, viewers, with Oracle founder Larry Ellison stepping in with his personal fortune to strengthen Paramount Skydance's bid. So Ellison has given an irrevocable personal guarantee worth over $40 billion, addressing Warner Brothers' biggest concern, that is certainty of financing. So the 81-year-old billionaire has also committed not to alter the Ellison family trust during the deal period, which is a key sticking point earlier. So this comes as both Paramount and Netflix have shored up the funding on Monday without raising their bids. So Netflix has refinanced part of its $59 billion debt package to protect its investment grade rating, while Paramount counters Ellison's guarantee to offset its weaker credit profile. And Warner Brothers say that it has received Paramount's revised proposal and will evaluate it, and even as it continues to back its $82.7 billion agreement with Netflix for its streaming and studio assets. Viewers, next up we have Paisalo Digital that is expanding its lending ecosystem with new partnerships across healthcare, agriculture and industrial equipment. So the NBFC says that the move will improve the access to affordable credit for micro entrepreneurs, self-employed individuals and also MSMEs across urban and rural markets. So the tie-ups with healthcare, farm and equipment manufacturers aim to support mechanization, capacity expansion and also livelihood creation, strengthening Paisalo's focus on inclusive growth. Viewers, Mercedes-Benz India is considering price hikes every quarter in 2026 to offset the impact of a weaker rupee against the euro. Managing Director and CEO Santosh Iyer has said that the luxury car maker has already announced a price increase of up to 2% from January 1st of 2026. Iyer said that the euro-rupee rate has climbed around 104 to 105 compared to about 89 nearly 18 months ago, translating into a 15 to 18% depreciation. So to avoid a sharp one-time hike that could hurt the demand, the company plans to spread out the price increases, with each quarterly hike likely to be around 2%, though the exact quantum is yet to be finalized. And leasing of retail spaces across India's top cities is seeing a strong pickup. According to Cushman and Wakefield, leasing in malls and high street is expected to rise 15% this year to nearly 9 million square feet, which is up from 7.8 million square feet last year. So high street locations across 8 major cities are projected to see leasing of about 5.4 million square feet, while mall leasing has jumped sharply to 3.8 million square feet, reflecting improved supply and robust retailer demand. Now on to some national news, viewers. The Delhi government has amended its excise policy, easing the norms for certain regulated alcohol categories used for industrial, medical and religious purposes. Now, under the revised policy, the government has significantly increased the storage and possession limits for special special spirit, which is a key input used in pharmaceuticals, disinfectants, cosmetics, and also industrial products. So the move is aimed at reducing the operational bottlenecks and also ensuring smoother availability for the licensed users. Now, the amendments also expand provisions related to sacramental wine, which is simplifying rules for churches and religious institutions to store and use the wine strictly for sacramental purposes while maintaining regulatory oversight as well. And the Gujarat government has further eased liquor consumption rules at Gift City, doing away with the requirement of obtaining a permit. Now, as per a fresh Gazette notification issued by the State Home Department, any person from outside Gujarat or a foreign national can now consume liquor at designated hotels and restaurants within Gift City by simply showing a valid photo ID. So the move is aimed at aligning the regulations at the global financial hub with international business norms, as Gujarat continues to attract global firms and professionals even as prohibition remains in force across the rest of the state. And the Delhi High Court has protected the personality rights of former cricketer Sunil Gavaskar, restraining websites and online platforms from using his name or image for commercial gains without his consent. So the court has also barred the use of artificial intelligence and deepfake technology to replicate Gavaskar's personality traits and ordered the takedown of obscene and objectionable content circulating online. The ruling reinforces judicial scrutiny over misuse of celebrity identity in the digital space, especially in cases involving AI-generated content. Now on to some global news. Unrest is growing in Bangladesh, with minority groups stepping up protest over the concerns of rising intolerance and violence. So the demonstrations follow the lynching of a 25-year-old Hindu youth, Deepu Chandra Das, which has triggered outrage. In Dhaka, the Bangladesh Hindu Buddhist Christian Unity Council has organized protest and a human chain demanding strict action against extremism and better protection for religious minorities. Protesters have warned that continued inaction could worsen the fear and instability in the country. Meanwhile, in India, tensions have spilled over outside the Bangladesh High Commission, where VHP and Bajrang Dal supporters have clashed with the police. Protesters broke the barricades and, raised slogans against the killing, prompting heavy deployment of police and paramilitary forces in the high security zone. Now on to some sports news. Liverpool have confirmed a major setback, with Alexander Isak suffering a fractured left leg during the club's win over Tottenham. Now, the striker was injured in the process of scoring and had to be helped off the pitch. But before the scans revealed a fibula and ankle injury that required immediate surgery. So the club is saying that his rehabilitation has begun at the AXA Training Centre, but there is currently no timeline for his return. So the injury leaves Liverpool short in attack, with Cody Gakpo also sidelined and Mohamed Salah away at the African Cup of Nations. So the team may now need to reevaluate their forward options ahead of a demanding stretch of fixtures. And with that, viewers, we wrap up this edition of Market Express. Thank you for joining us. Stay tuned to NDTV Profit for more news and updates.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
My bhai, do you know any cool bank जो digital first हो?
SBI coolest है.
What?
Digital loans 30 मिनट में. AI models 140 plus. योनो यूजर्स 9 करोड़. डेली UPI transactions 33 करोड़.
Cool तो है.
चलो. SBI, the banker to every Indian. Truly.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
राजस्थान शौर्य और वीरता की धरती। अब वही धरती कैसे बन रही है? आधुनिकता और विकास का नया केंद्र। इसी विषय पर होगी विस्तृत चर्चा और केंद्र बिंदु में होंगे आधुनिक विकास, सांस्कृतिक विरासत, नई नीतियां, नई संभावनाएं और इनोवेशन। मंच की शोभा बढ़ाएंगे मुख्य अतिथि मुख्यमंत्री श्री भजन लाल शर्मा और साथ ही उपस्थित होंगी विभिन्न क्षेत्रों की दिग्गज हस्तियां। आप भी जुड़े राइजिंग राजस्थान कॉन्क्लेव। विकास भी विरासत भी, सिर्फ एनडीटीवी राजस्थान पर।
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Benchmarks end flat after a seesaw session with Nifty closing above 26,150 for the second straight day. Mid and small cap indices outperformed the benchmarks. Sectoral indices finished mixed with media emerging as a top gainer. Precious metal scale new peaks as silver hits a record high of $70 an ounce, while gold jumps to an all-time high of $4,484 on the back of escalating geopolitical tensions and rate cut expectations from the US Fed. Chola investment gains close to 6% at close after company clarifies that Cobra Post's allegations on corporate governance are malicious and baseless. Says all related party transactions are disclosed in full and complete detail in financial statements. From simplifying custom duties, reducing tariff complexities and improving operational efficiency, sources indicate Union Budget 2026 may introduce big-ticket reforms with focus on custom duty overhaul. India and New Zealand agreed to enter financial services agreement as part of the trade deal, plan to join hands for real-time cross-border transactions. New Zealand will create market opportunities for Indian digital payment providers using UPI and NPCI. 2026 is going to be an exciting year for Biocon after the company's full integration with Biocon Biologics, says CMD Kiran Mazumdar-Shaw. Expects margins to go up on the back of increased contribution from specialty ingredients. Novo Nordisk gets US FDA's approval for its weight loss drug Wegovy pill. Company's shares gain 7% in the German stock exchange. Delhi government amends its excise duty policy, including a significant increase in storage and possession limits for special dematured spirit and an expansion of provisions governing sacramental wine for church use. Big impact of Women's World Cup win. BCCI raises match fees for women cricketers from 20,000 to 50,000 rupees per day. For domestic cricket matches, reserve players will get 25,000 rupees per day. Hello and welcome viewers. A very good evening. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a bulletin that gets you all the updates when it comes to markets, national as well as international news. Let's get going with checking how the markets fare today. Benchmarks gave up afternoon gains in the final hour of trading today. The Nifty still managed to hold above the 26,100 mark, while the Sensex slipped back into the red, ending more than 70 points lower. The advance decline ratio, also called the market breadth, stayed tilted in favor of the advances. It was a mixed sectoral picture by the closing time of today's trade session. My colleague Mahima now joins us with a detailed roundup of today's market action.
All right, so it's been a muted day for the markets, especially for the benchmark indices. The Nifty 50 ended absolutely flat. The broader markets did outperform the benchmarks. Coal India, Shriram Finance were the top gainers on the Nifty 50 today. Nifty did, of course, close about the 26,150 levels for the second straight session. The mid-cap 150 gained for fourth session. Top gainers included counters like NLC India and NMDC. The small-cap 250 gained, and this was even better than the mid-cap 150. Third straight session where it gained, and top gainers include counters like Jupiter Wagons, Ircon International. All sectoral indices saw ending on a mixed note. The Nifty Media and FMCG gained over 0.5% for the day. Media emerged as a top gaining sector. Bazaar Technologies gained most in the Nifty Media. Nifty IT fell nearly 1% for the day. Nifty Oil and Gas Auto gained for third session, and Nifty Realty snapped its 3-day gaining streak. So this is with regards to how markets have done for the day.
Thanks so much for summarizing the market action today for us, Mahima. But as the year ends, we've been getting comments from various experts about how they look upon at the year ahead. And Helios Capital CEO Dinshaw Irani is optimistic about the market trajectory for 2026. Speaking on the year ahead outlook, Irani said that the worst is now behind us and that the markets have held up far better than expected. He added that the RBI policy loosening has begun to support an earnings recovery. He believes the setup for 2026 looks fairly decent, in his words. Let's listen in.
We are very clear that the worst is over. 25 was the worst that you would have seen in terms of even news flows. Though the markets didn't do badly at all. In fact, a flatline market was the best that we could have hoped for, given the fact that there was a lot of fiscal and monetary tightening which happened in 24, which impacted going to 25. And by 25 itself, you saw a lot of fiscal and monetary loosening by the RBI and the government of India, which helped the market to recover, not the market, rather the earnings to recover. I think ultimately the market is slaves to earnings, and that is going to follow going forward. Once the growth kicks in, one saw that in the September quarter, the growth started coming back in. December looks no different. I think December will be another good growth quarter for earnings. And by the way, we have 2 more quarters after December, which are low growth quarters of previous year, where the YOY growth should look good going forward. So I think that way it looks like a fairly decent 26 for us.
fairly decent 2026. But is it warranted to ask if the Santa rally is taking hold on the Lal Street? Because the indices, especially the small caps, certainly seem to be gaining in these final trading days of the year. It appears the Santa rally is in full swing, with small caps outperforming mid and large cap peers, supported by strong historical trends and year-end tax planning flows. Let's bring in my colleague Sharad for a detailed analysis on this.
Well, the Santa rally is here, and that's what is a very interesting concept I have understood. The last 5 trading sessions in the month of December and the first 2 trading sessions in the month of January, that is the period when we call it the Santa rally period. Largely, this has been a small caps outperformance over mid caps and you could say the large caps. Looking at this win rate for the last 10 years, I checked the data, it is 100% win rate. But over the last 10 years, how the average has been for the small caps, mid caps and even large caps, let's see what happens in this period. Largely small caps outperform, and that's the Santa rally. 3.5% the small cap indices went up. Compare that with the mid caps, it's at around 2.6%, and for the large caps, it comes in at 1.8%. Now you must be wondering, why does this Santa rally actually happen? There are 3 important reasons for it. The first one is there are of course some tax planning flows. A lot of FIs and global institutions have your calendar year kind of financial numbers. Sentiment reset happens whenever you start a year. There are some bullish sentiments when you prepare yourself, and the risk on tendencies that increases, and because of that we are seeing buying happens in the risky assets, which also includes small caps as well. And overall, over the last 3 to 4 trading sessions also, we have seen the small caps and mid caps doing really well and actually outperforming the benchmarks as well.
Thanks so much for explaining the potential Santa rally, Sharad. But viewers, let's focus on shares of Chola Mandalam as well, because Chola Mandalam investment and finance company jumped over 6% today, breaking a 2-day losing streak. Investors looked past the Cobra Post allegations and shifted focus back to the company's fundamentals and a supportive macro backdrop for NBFCs. In its response, Chola Mandalam categorically rejected the Cobra Post report, calling the claims malicious and baseless and driven by ulterior motives. Now, the company reiterated that its asset quality, liquidity position and performance remain robust, with no revision in its previously issued guidance. Chola Mandalam further clarified that all related party transactions are fully disclosed in its financial statements and dismissed allegations of individuals benefiting from any such dealings. Let's take a look at Ambuja Cements as well, as it kicks off one of the biggest consolidation moves in India's cement sector, approving the merger of ACC, Orion Cement, Sanghvi Cement and the acquisition of Pina Cement to create a unified one cement platform under the Adani Group. The transaction combines share swaps and a cash deal. Under the approved ratios, Ambuja will issue 328 shares for every 100 ACC shares. Orion Cement shareholders will receive 33 shares for every 100 shares, implying a premium of around 9%. For Sanghvi Cement, the ratio stands at 12 Ambuja shares for every 100, representing a premium of about 4.5%. And Pina Cement will be acquired via cash offer of 321.5 rupees per share to non-promoters. Now, the management says the consolidation will remove holding company discounts, eliminate related party transactions and drive cost savings of about 100 rupees per ton through supply chain efficiencies and improved logistics. Now it's time for an important update on the upcoming budget. Customs duty reform is said to be the next big-ticket budget overhaul. Finance Minister Nirmala Sitharaman is in fact expected to outline a sweeping revamp to simplify procedures, cut tariffs and boost procedural efficiency. My colleague Shrimi Chaudhary joins us with more details on this development.
Yeah, what we are picking up that the custom duty reform is being positioned as next generation reform in the upcoming budget, and in fact sources indicated that there could be a dedicated paragraphs in the finance minister budget speech is what sense we are getting. And talking about the broader elements of this custom duty overhaul is basically focusing on simplifying the custom regime, reducing the tariff complexity, and improving the procedural efficiency. Now, talking about the tariff aspect, there are a couple of points in that. So first up is with respect to that there are multiple notification on the concessional rate. There are scattered duties around, and they are planning to sort of bringing it into single and comprehensive notification. The second one is they are planning to sort of reduce import duty on some raw materials which mainly focus on semiconductor, EV materials, as well as specialty chemicals. And this is also mainly to do with correcting the inverted duty structures, what we've been indicated. And in fact, they're also trying to align these tariff with the tariff talks with India is been doing, and certain FTAs being signed, and important being the United States, where the talks are still in progress. And the third one is, of course, the procedural efficiency, where the government is planning to sort of reduce the timeline of the cargo clearance, the custom clearance, which currently taking 3 to 4 days of the timeline, which they're planning to reduce it up to 48 hours. Of course, there's a lot of focus on bringing automation in the custom regime, as well as making it a faceless proceeding. So with all those details, of course, the exercise is on, and we will get more concrete details closer to the budget date. But for now, the sense being that there will be an overhaul, the next generation overhaul in line with the GST and income tax, and that will be implemented in a phased manner through FY27.
Thank you so much for explaining what's expected out of the budget. But Tata Motors, viewers, is accelerating its electric vehicle ambitions with plans to launch the Sierra EV and a refreshed Punch by calendar year 2026, alongside the debut of its premium EV brand Aviation by the end of 2026. Now, this comes after the company relaunched the iconic model Sierra from the dawn of the century, but with a modern touch. Tata Motors called it the rebirth of a legend. Shailesh Chandra, MD and CEO of Tata Motors Passenger Vehicles, said that the company aims to maintain 45 to 50% market share in EVs. Let's listen in to Mr. Chandra.
To support all the product and mainstreaming actions, we announced a capex commitment of 16 to 18,000 crore between FY25 to FY30, which will help us strengthen leadership, expand our EV portfolio, and accelerate the mainstreaming of electric mobility in India. And through these actions, we believe a steady state EV market share of 45 to 50% is achievable for us, even in an intensely fought market.
And India and New Zealand have extended the scope of their FTA to financial services. Just a day after concluding talks for the deal, the two countries have decided to increase cooperation in banking. Now, this could create lucrative opportunities for Indian digital payment providers using UPI, and also deepen presence of New Zealand firms in Indian banking and insurance space. Let's go across to my colleague Rishabh Bhatnagar for all the details on this particular update.
So as part of the India-New Zealand Free Trade Agreement, there is also a financial services annex that was signed between the finance ministries of both countries, and a lot of interesting increase in cooperation between the financial sectors of both the countries. Number one, a point is, of course, that there will be market opportunities that will be created for platforms that are leveraging platforms like the UPI and the NPCI's various other digital platforms. So there will be a market opportunity for those in New Zealand. What we're seeing for New Zealand is also a recognition of data protection norms while enabling cross-border digital operations. That is also an area where both countries will be collaborating. Another very important win for India is non-discriminatory credit rating treatment from New Zealand credit rating associations. That is something that has come in as part of this agreement. What we're also seeing is that there will be higher FDI limits and also liberalized bank branch licenses being given out to New Zealand banks. So at the current, there are two Indian banks that are operational in New Zealand, but there are absolutely no New Zealand banking or insurance companies with presence in India. So this pact aims to change that, and there will be a lot of more changes coming into the Indian financial services sector if more and more Kiwi companies enter. and that is, of course, a welcome sign, especially in the sector of insurance, where the penetration is quite low.
But is all good that looks good? New Zealand's Foreign Minister Winston Peters has strongly slammed the FTA with India, calling it neither free nor fair. He has warned that his party will oppose the deal when it comes before Parliament. Peters, who is also the leader of the New Zealand First Party, says the deal gives away too much while failing to deliver enough benefits for New Zealanders. The Foreign Minister said the India FTA would be New Zealand's first trade agreement to exclude key dairy products such as milk, cheese and butter. Beyond trade, Peters also raised concerns about what he described as far-reaching immigration concessions, including the creation of a new employment visa specifically for Indian citizens. Remember, while the deal has been finalized, it's yet to be signed. And India has also announced a major reconstruction package worth $450 million to help rebuild Sri Lanka after the devastating cyclone Ditwa. External Affairs Minister S. Jaishankar handed over a letter from PM Modi to Sri Lankan President Anura Kumara Dissanayake in Colombo. The package includes $350 million in concessional credit and $100 million in grants. It will focus on the worst affected sectors, especially restoring connectivity in close consultation with Sri Lanka. This builds on India's immediate relief efforts under Operation Sagar Bandhu, which started the day the cyclone hit the country. The biggest highlight of 2025 for Biocon was the ANRF announcement. Now, in an exclusive interview with NDTV Profit, Biocon's executive chairperson Kiran Mazumdar-Shaw spoke about how ANRF was a game changer. ANRF stands for Anusadhan National Research Foundation, whose primary goal is to basically foster and promote R&D in the medtech industry. She also underlined the advantages of integrating Biocon biologics, unlocking potential in GLP-1 and biosimilars. Let's listen in to a brief portion from that special interview.
This has been a very, very eventful year for us. And I think the recent announcement that we made of the intended merger between BBL and Biocon is indeed a big announcement, because I believe that this actually unlocks and creates the value that we have been witnessing in terms of our biosimilars business, and as well as the GLP-1 opportunity ahead. And we felt that by combining the two businesses, actually we would unlock a lot of shareholder value for Biocon as a conglomerate. And we believe that this creates a bigger company, a much more diversified entity, and a simpler and elegant model, which actually then helps us to focus on, really leveraging the opportunity that we have of being uniquely positioned to combine both insulins and GLP-1s, the insulin biosimilars and the generic GLP-1s. So I think this is a big, opportunity for us now to drive big value, and I think this benefits all stakeholders.
But Kiran, as you look back on 2025, of course, many milestones for the company itself, but as a leader, industry leader in the healthcare space, how do you see this particular year for the entire sector, and what were the key highlights that came across for you?
So Nisha, to me, the biggest highlight was the announcement of ANRF. I think this has been a very important step taken by the government to basically focus on IP-driven economic growth through research and innovation. And I think this is really going to help us all big time in every sector, especially even in the pharmaceutical sector. Added to this, of course, is the RDI, which of course helps the pharma sector particularly, because I think a lot of companies are beginning to invest in research and innovation that will drive even greater value. As you know, up until now, we've been really focusing on biosimilars and generics, which of course are very important growth drivers for the pharma sector. But going ahead, can we actually focus on innovative drugs and create even greater value is the opportunity we are looking at. In addition to that, I think we are also seeing the emergence of affordable innovation across the world. And I think India can lead in that.
Moving on, Novo Nordisk has received approval in the US to sell a pill version of its blockbuster obesity shot, Wegovy. Basically, an oral version of the weight loss drug. Now, this marks a crucial step in the company's effort to defend its market share from rival Eli Lilly. As a result of this development, Novo Nordisk's Frankfurt-listed shares opened nearly 7% higher in early trading today. This move also gives the Danish drug maker an edge in the race to market a potent oral weight loss medication as it seeks to regain ground lost to rival Eli Lilly. For context, Novo Nordisk had a first-to-market advantage with injectable weight loss drugs, but initially struggled to meet the explosive demand for this particular drug. But now, Novo is all set to start selling the pill in the US in early January. My colleague Tanushka shares more details on getting the drug regulators' nod on this.
Obesity care and weight loss management has a big breakthrough now with GLP-1 products also, segueing into a pill format. The first of its blockbuster kind GLP-1 drug, Wegovy, will now be available in pill format as well after the US FDA has approved its manufacture and sale in the USA. Now, what do we know about Wegovy? We do know that until now it has been available in injectable formats, but injectables have received some sort of resistance, limited acceptance from many patients across. But now with it now being available in pills format, being manufactured by the pharma giant Novo Nordisk, it is set to be launched in January next year in the USA. It of course opens up the conversation, opens up the masses as well in terms of reach also, and the approved indication is beyond weight loss management as well. It is also with respect to adverse cardiovascular events in adults too. So it's not just weight loss management that we're talking about here, but also with respect to ailments relating to, of course, cardiovascular ailments and events in adults. And we also understand that why is this a big feat? Because the fact that it is pills now, injectables has always had some sort of a resistance from people at large, but pills makes it a lot more easier to consume, easier to access as well, and also, takes away some sort of a preconceived notion from Wegovy and the sort of GLP-1 range of products at large. We do understand that recently only Ozempic, another such weight loss management drug, was just launched in India by the same pharma giant Novo Nordisk. And now Novo Nordisk is set to launch Wegovy pills, oral consumption pills. So it'll be once a daily pill, semaglutide dosage of 25 milligrams per pill and per, of course, consumption at this point. And of course, beyond that, as per how and when your doctor prescribes you, remember that is the most important point about these GLP-1 range of drugs, is that you must take into context whatever your doctor is prescribing you and do not self-medicate.
Viewers, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates. This is Malika Mishra.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद एनडीटीवी इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, compete, stand out और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
सामने नया सुपरमार्केट खुलने वाला है। क्या करूं कि पुराने कस्टमर भी रहें और नए भी आ जाएं?
देखो, आप दुकान के बाहर एक चाय कॉर्नर लगा सकते हो। चाय पीते पीते पुराने कस्टमर बातचीत करेंगे, उन्हें देखकर नए कस्टमर भी आएंगे और एक्स्ट्रा कमाई भी होगी। इसके अलावा आपके बिल्स देख के समझ लेते हैं कि कौन सा सामान कितना लगा है।
मैडम, ये केवाईसी अपडेट के लिए मुझे बार बार मैसेज क्यों आ रहा है?
क्योंकि बैंकिंग सेवाओं के लिए निर्धारित समय पर केवाईसी अपडेट करवाना चाहिए।
होगा कैसे?
बैठिए, समझाती हूँ। अगर आपके पहचान या पते में कोई बदलाव नहीं है तो अपने बैंक या एटीएम या बिजनेस करेस्पॉन्डेंट यानी बीसी के पास जाएं, या बैंक में रजिस्टर्ड ईमेल या मोबाइल नंबर या मोबाइल बैंकिंग ऐप या पत्र द्वारा उसका डिक्लेरेशन दें।
और अगर कोई बदलाव है तो
ऐसे में पहचान और पते का नवीनतम प्रमाण दिखाएं। अपना खाता सक्रिय रखकर बैंकिंग सेवाओं का लाभ उठाएं। बस।
आरबीआई कहता है,
जानकार बनिए, सतर्क रहिए।
विश्वास તું જ્યાં પણ હોય જે કંઈ પણ કરતો હોય જલ્દીથી ઘરે પહોંચ.
માત્ર 12 કલાક આપો. આ ગેલ સપ્પાઓને હું જોઈ લઈશ.
માતાજીનો પ્રસાદ.
હની ટ્રેપ માટે. ના, આ રસ્તો બહુ મોંઘો પડશે.
સીધા રસ્તે ન્યાય મેળવવાની કિંમત આના કરતા પણ વધારે છે.
મેઘના જ્યારે કોઈને આપણા પ્લાનની ખબર પડી ગઈ ને તો આપણે ત્યાંથી
મેં જોયા છે એમને.
ये धरती माता हमें पेट भरने के लिए अन्न उत्पन्न करती है, लेकिन इसका स्वास्थ्य भी ठीक रहना चाहिए।
Agricultural landscape of Uttar Pradesh is changing. Government's priority on direct interaction with farmers, a forward-looking approach to better technology and the timely implementation of agricultural schemes have made agriculture the backbone of development.
अन्नदाता किसान को समय पे खाद मिले, ये संभव है।
The Yogi government is providing subsidies of up to 50% for polyhouses or greenhouses. Training schools are being set up in villages for farmers. In the state, 79 Krishi Vigyana Kendras are currently operational and the construction of 10 more is underway. A modern seeds park is being developed in Lucknow. The low-cost, high-production mantra of the double-engine government at the centre and the state has doubled Uttar Pradesh's agricultural growth rate over the past 8.5 years.
With SBI, Celebrations Unlimited. Make every celebration special with festive offers on car, personal, gold loans and loans against mutual funds.
Yeah, 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 yeah.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, but today let's give you some guesses, why we are calling a company here. And for today KYC, let's guess the company. The first one is it's a recently listed pharma company. Half of this guesswork I already have given it to you. This has been subscribed 94 times during the IPO. Yes, investors have also participated. But the company has come with a weak Q2 numbers. Just after listing, company comes with a weaker set of numbers. And of course, the market will treat it on the other way and there will be some punishment. The company I'm talking about is Sudeep Pharma. That's the focus. And there are some questions I need to ask. The first is, what led to a weaker Q2 just after its IPO? Second question is, there's a margin pressure coming when I'm analyzing their numbers. Will this margin pressure continue in the third quarter itself? That's another concern. The third question I'll be asking is, working capital issues are still there. Will this continue going ahead? Because once this happens, this continues for at least 6 months to almost 9 months in this industry like the company which is operating. And will the return ratios remain under pressure because company is going through expansions and also some restructuring, and that is where my concern comes on the balance sheet. Also, what is the market potential for supplements? This is a very sunrise sector, and we are seeing all across the market nutraceutical players all flocking this segment. So what's in it for the company, and how different it is as if you position this company with another pharma company? So these are the questions we'll be asking for Sudeep Pharma. But I want to make you understand something about this company. This company is a bit different. It's just not a regular pharma company. And I would like to point out, this was recently listed, and there is a moat in this kind of business. To be fair, the company manufactures pharma excipients or food grade minerals. Now this excipients is nothing but, let's just say, the best supporting role when it comes to a medicine. And what happens because of this is they help in giving a binding agent, they become a flavoring agent, and where the real action is supposed to happen for this table, for this tablets or medicines, that's what the excipients do. So they are very, very much important in the entire ecosystem. Over here, specialty nutritional ingredients are also there as we move towards the lifestyle side, and that is where Sudeep Pharma comes in. Now the IPO euphoria, that has come down on a weaker Q2 earnings. That's what the street is looking like. Last 2 trading sessions, they were under selling pressure post the earnings. IPO subscribed 94 times. That is what everybody was talking about. But if the numbers don't come, the markets do punish you. And of course, we're looking at the large listing gain. That was the pop. That was 24% for this company. And there were some important investors. Mukul Agarwal, Prashant Jain, related promoter entity also participated. But now let's go back to the segments, the core business. Where's the action? Specialty ingredient, that's around 67 odd percent. Remaining the pharmaceutical, the food, that's around 34 odd percent. So that's the revenue breakup I'm getting via the business. Geographical distribution is largely, there's around 58% for Indian markets. Exports, if you look at it, that is also coming in roughly on the higher side. But this is the detailed breakup coming in. It's still, there is no major, you could say, concentration happening. The distribution is slowly planning out. There are 3 plants in Baroda, Vadodara, 1 facility in Ireland, which was acquired in FY25. That is what we'll be looking out for. The total installed capacity currently stands at 72,246 million tons per annum going ahead. And also they're setting up a new expansion plan in Gujarat, and that is why the pressure is coming. The IPO is also done to actually take some proceeds for this expansion. And that's why we might see the pressure in the financials for the company, because they have taken a big hit. Now expected to be operational by Q4 itself. So we will be asking the management what is the status about this important expansion, and because of that the street will be looking forward to the commentary as well. But now let's focus on how our KYC show comes up, and we give you generally 8 categories which has to be focused in. And lastly, I'd like to point out the financials, the income statement, the balance sheet, the cash flows, and even the return ratios. These are the 4 parameters where I'll judge the company, and the remaining 4 parameters, they include shareholding, street cred, valuation, outlook, and then we'll come with a combined KYC rating for Sudeep Pharma as well. Let's start with income statement, where the action is there. Of course, recently we have studied the IPO, because the last numbers which you can see, they have been decent. Revenue has grown up almost 14%, but EBITDA, that is something which has brought my eyes into this interest. That's around 38% growth coming in. Margins very decent, for a pharma player, getting a 39 to 40 odd percent and sustaining, that's something which is commendable. But net profit, that has also done well. And the Q2 numbers, that has become sore for everyone, and because of that there is some pressure in the stock as well. Revenue, nothing much happening, just 15% year-on-year basis growth coming in. And if we could just show the numbers again, how it's actually panning out for the Q2. The concern is here, the margins, the net profit, that is where the important market was looking, to look at the good numbers. But just after IPO, a weak set of numbers coming in. Now let's pull up the margins, what happens. and largely the margin trajectory was 40 to 39%, and we thought this would be sustaining, but then again it's back to 31, and that's where the question arises. What's the actual sustainable margins going forward? Will there be more pressure as companies going for expansion as well? So two sides of the coin, and I will be giving a neutral rating when it comes to the income statement. The second one is balance sheet. That's also very much important post IPO. Of course, we have seen the numbers shore up, going on the higher side, the equity base going up, the book value going up, but the borrowings, that has slightly gone up by almost 6 odd crore rupees. So we thought that there would be some debt reduction, but this has not been used. This has been used for expansion when I am talking about the IPO proceeds. Also note the cash bank balances, that has showed up properly, and that's roughly gone up from 37 to 68 crore rupees. So it's decent, but it's not something which is very great. On that basis, I will give the balance sheet parameter a neutral rating. So income statement, balance sheet, both of them are done. But let's look at cash flows. It's one of the most important things to judge a company. If a company claims it is having a strong moat, if a company claims it has a strong margin, if a company claims that its products are very strong compared to its peers, let's see what the cash flows suggest then. Operating cash flows, that has gone down, and that has started for me to research more into the company, and the concerns start coming in here. Also, let the PAT numbers, that has also actually gone down, it's down almost 78 odd crore rupees. Let's come down and just show you the cash flow to PAT conversion. That has been going down from FY24, FY25, and now in September as well, and my concerns are starting to come. The net cash flows, that has also been erratic, and just 11 crore coming in the month of September. So we'll be asking company the questions on the working capital, and will it actually improve, or will the pain be there for the next 6 months or 9 months or even 12 months? Because these industries, the working capital issues are definitely there, and they have a higher time period for that. And because of that, I will give a thumbs down when it comes to the cash flow segment for Sudeep Pharma. Also, let's look at the return ratios. I had already mentioned to you that the return ratios would be in a big problem, and why this is? Because company is doing expansion, and this is of course a greenfield expansion coming in, and the nutraceutical business, there are some restructurings happening as well. Company mentioned it honestly in the Q2 numbers as well, but the market sees how the growth is there, and the sustenance of 30 of these numbers actually might be coming down as well for the next 6 months or 1 year. So ROC numbers still decent, but I would be giving because of its history, I would be giving this a thumbs down. So we spoke about 4 rating parameters to you, and right now the financials, they were evenly poised, but there's some concerns came in cash flows and the return ratios. But let's look at the other aspect also, and this is the shareholding aspect. If you're seeing just only one data set is there because it was recently listed, so I'll be giving a benefit of doubt to the company. But let's look at how the numbers pan out. Promoters are having 76% stake, so likely in the next 3 years there'll be a minor stake sale for SEBI norms to be fulfilled. FIs, not much, but DIs have come in properly, 15%, almost double of what the stake was there in the public shareholding. So net initial levels, it is looking neutral to me. With time, we'll judge the company more, and more progression will come in both institutional and public participation, and let's see how things move. But as of now, where the things stand, I will be giving a neutral rating when it comes to the shareholding pattern. Street cred, very small history, a very strong listing pop, but after that there wasn't much happening. From the listing price, stock is down 19%. From the IPO price also, we see there has been a good downtick of more than 10%, and post the earnings in the last 2 trading sessions, the stock has seen selling pressure. So that is where the issues start happening, and for that, if you remove the IPO euphoria, now slowly the company, the fundamentals and the pricings have started to match. Might look to go down also from here onwards. So right now, I'll give a thumbs down when it comes to street cred for Sudeep Pharma. But we spoke about the stock movement and the shareholding, but let's also talk about how the valuations pan out. The company claims that in their RHP, there isn't much any peer as such. I did a little bit of research. Sigaji Industries does have some kind of similarity. It's trading at a trailing 12 month of 54 times even after the IPO correction. That means there might have been a mispricing from the merchant bankers, or maybe the valuations were high. That this is what the street has been buzzing. But just to keep things in fairness for my show in KYC, I have got Nifty Pharma Index. That is at 33 times trailing month 12p. Even in this, I will still give a benefit of doubt to the company and a neutral rating coming ahead in the valuations front. So of course we need to give in more time as well. So 7 ratings are done. Let's go to the 8th rating. That's the outlook. Specialty ingredients, they are manufacturing, and that is where the street is very bullish on. These are high margin products and we need to give time, especially for a long-term investor, 2-year, 3-year, 4-year, to actually see the benefits coming in. And if you had an IPO listing pop gain, congratulations to you. Now the upcoming greenfield expansion, everybody will be looking at this, especially the timelines and when the incremental benefits start coming in. Mineral chemistry expertise for battery material, that's what the management has been bullish on as well. But the question is, when are the R&D numbers going to come? When the client announcement will start coming in? That's what the street will be waiting for. Nutrition supplements is a large theme in the making. So of course, that is something which you'll be watching out for. So overall, looking at this outlook, I will be giving this a kind of a thumbs up going ahead. But let's just revise all the ratings, how the ratings have panned out for Sudeep Pharma. Recently listed company, 94 times subscription, but weak Q2 numbers. Income statement, balance sheet, it has been largely neutral, but cash flows and return ratio, that's where my concerns come in, and that's why I've given a thumbs down to it. Let's show the other parameters as well. Shareholding valuation, it's neutral. Street cred, after IPO, there isn't much thing if you have entered discounter. And last but not the least, outlook. Out of all the 8 parameters, this is the only parameter I have given thumbs up to it, because it is of course there in a sunrise sector, at least in their category which the company claims. So on the lower side of my analysis, I would give Sudeep Pharma 3 out of 8 in this segment as well. But there are a lot of doubts in the investor community and we will clear all of them. But first, we'll slip into a very quick break, and on the other side, we'll be joined by Sunil Bhayani. He's the director of Sudeep Pharma. Stay tuned.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद NDTV इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, compete, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
Nice, yeah.
Hey, Mahi, suggest a cool bank जो environmentally conscious हो.
SBI, coolest है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, EV लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया.
Wow, that's cool.
SBI, the banker to every Indian. Truly.
Prime Minister Narendra Modi's dream of providing a pakka house to every poor person in the country has been turned into record achievements through Chief Minister Yogi Adityanath's own vision and fast-paced working style.
60 लाख गरीबों को पिछले 8.5 वर्ष के अंदर एक आवास उपलब्ध करवाने में हमने सफलता प्राप्त कर दी।
Significant progress has also been made in the Chief Minister's housing scheme run by the state government. The target of 3.73 lakh houses will be achieved soon. Government land that was under the control of mafia elements is being freed and used to build homes for the poor. While it takes an average of 299 days to construct one house at the national level, Uttar Pradesh has set an example by completing a house in just 195 days. Through convergence, the completed houses have been provided with toilets, electricity connections, LPG connections and drinking water connections.
सामने एक नया सुपरमार्केट खुलने वाला है। क्या करें कि मेरे पुराने ग्राहक भी रहें और मुझे नए ग्राहक भी मिल जाएं?
देखो, आप एक चाय कॉर्नर लगा सकते हो। चाय पीने पुराने कस्टमर्स रुकेंगे और नए कस्टमर्स भी आएंगे। इसके अलावा बिल्स और सेल्स देखकर हम एक इन्वेंट्री प्लान
Welcome back. We are now joined by Shanil Bhayani. He's the director at Sudeep Pharma. Very good afternoon to you, Shanil. First of all, IPO recently it was listed, high subscription numbers, but a weak Q2 numbers coming in, and of course the numbers have been on the weaker side. I looked at the margins, I looked at the PAT. What led to this kind of an impact in Q2, Shanil?
Yeah, hi, good morning. Thanks for having me on the show. I think our business is such that I've always maintained this, that it's best to look at the business on a YTD basis. We operate something in the food pharma space. We operate a campaign order book, which happens on certain quarters for very large customers. We do annual contracts with them, but not necessarily that each quarter there would be a campaign. But throughout the year, there will be multiple campaigns, which is why if you look at the business on a YTD basis, right, you will see the growth that the business has done. I think 26% in terms of revenue, 19% on PAT. Q2, definitely, I think there were two reasons. One, certain campaign orders would not have occurred in this Q2 compared to Q2 of FY25. In addition to that, what has changed is, I think the tariffs were announced in August 2025. And that kind of led to a wait and watch scenario for the first month or so in the US, which is our largest market outside of India. What we've seen after that is, I think there was a lot more clarity that came in terms of which products were subject to tariff, which products are not subject to tariff. Today, 50% of our business to the US is now exempted. So while that clarity came in, customers started to place the orders again with Sudeep. I think there was a time differential, so a lot of the invoicing moved to Q3. So while you don't see the numbers reflecting Q2, they will certainly come in Q3. But again, we maintain that as a business, quarterly, there could be significant growth in one quarter, say slightly muted growth in one quarter, but on a YTD basis is the best way to look at our business.
Shanil, the margins fronts, that has been a cause of concern, and a lot of investors have also written to me. They've stated that, of course, before the IPO, the numbers were looking very strong on the margins, and we are asking, will this sustain or not? Now the margins are almost downtick coming in. I saw your Q2 numbers also. There were some reasons for it. Will these margins or the ROC numbers continue to stay in pressure for Q3, or will there be some bottoming out?
I think if you ask me honestly, I don't think there is any significant margin pressure. When you look at gross margins, they were exceptional last year in FY25. They were significantly higher for a one-time event. Otherwise, 63-64% is our historical average in terms of gross margin, which we are comfortable that this will sustain, and this is what you will see in the rest of the year for FY26. More importantly, on the EBITDA and net margins, what has happened is operationally we continue to remain as strong. However, and I mentioned this yesterday in my quarterly call, that we are making an upfront investment today in building out a larger sales team in the US and Europe, which are two key markets, including warehousing capabilities. Additionally, there is expense that we're currently booking in the business to support the growth in the battery materials ecosystem. So while that is getting expensed out today, that is, I would say in the next couple of quarters, you will see that investment today being, kind of bearing fruit and adding value to the business, both by going direct to Europe and the US through the direct sales approach, the margin will actually further improve. So while today there is an expense that we're accounting for, it's for the growth and the margin improvement in the coming few quarters.
Shanil, you explained us about that, but the greenfield expansion, that's what before IPO the conversation was, after the IPO conversation was, post earnings also that's the conversation happening. Give us the expected timelines, incremental benefits will start occurring. What will be these dates?
Sure. So as I mentioned, the greenfield is close to completion. We will commission the facility in the next couple of months. So in Q4 of this financial year, there is a total investment of 150 crores that will go into this greenfield, which is now almost complete. And if you look at our historical business, we've operated at a 2.5 to 3 times asset turn. And that is the kind of asset turn that we expect to maintain along with the margin profile for the new greenfield as well. So you will certainly see the benefit coming in FY27, more importantly in FY28.
All right. Shanil, the supplements part, we call it nutraceuticals or allied products. Yeah, I'll ask you two questions. One is the industry aspect of it. What are the key products which are there? Excipients are there, which is like a literally, you could say, a very big supporting actor to a medicine, to simplify it for our audience. But you position yourself as a pharma company having no exact peer as such. That's what I read in RHP. So how different you are and what's your moat in your business?
I think great question. So I think we were a pharma excipient company when we started in 89. Over the years, we've transitioned from a core pharma company to now becoming a technology-led specialty ingredients. And why I say this is our expertise actually lies in the 6 proprietary technologies which we have developed at Sudeep. And the use of these technology is how can we make the mineral or the ingredient more effective in the human body? So how can we improve the absorption in the human body? How can we make the product more stable? How can we control the release ke body mein, where it gets absorbed, where it gets released, stability of the product. And these technologies are technologies which very few companies in US and Europe have scaled significantly, but no real competition in, say, other geographies, including India and China. And that is where we see the large opportunity in competing with manufacturers in the West. And that will also kind of drive the margin profile going forward as the specialty ingredients continues to grow. Today, it's close to 40% in terms of revenue contribution. In the next couple of years, we see this becoming almost 50% contribution to the business. And that will further drive the margin improvement in the business.
Yes, Shanil, you have mentioned that. If I'm not mistaken, please correct me. It's like something like in chemical industry, your products are like something like a flavor or a fragrance, having a high margin kind of a usage. And also overall, the demand in the entire ecosystem is going up. Also, the new product launches, I want to know a little bit about that. And if you could just give the non-scientific version of it so that our audience understands. You spoke about supplements, and especially if you can give us the lifestyle angle also. What are these key product launches or the categories you are looking at?
So we are, from a nutrition perspective, we are focused on 6 key minerals. So calcium, magnesium, iron, zinc, sodium, potassium. I think when COVID happened, we all recognized the need of having a healthier lifestyle and taking the necessary supplements. You consume, during COVID, people were taking zinc supplements, people were taking vitamin C. Historically, people take calcium supplements. So our investment going forward will be how can we help an individual taking calcium supplement? How can we help them absorb better calcium into their bones? Whether it's iron, whether it's zinc, so improving the delivery or the level of absorption in the human body. In the greenfield that we are commissioning, we are expanding capacity of some of our existing products. Additionally, we will be launching certain new molecules again to do with the zinc, calcium, and iron. Again, focusing on how can we make the supplement more effective for the person consuming it. So, what you consume goes down, but your body actually improves the level of absorption that it receives.
All right. Shanil, one more question is there because it's a very new product category and I've slowly started to understand that there is a moat in your business as well. But there are a lot of acquisitions and cross-selling from your arms also are there, right? So there's a key product, then there are ancillary products which keep coming in. Just to give us that entire view, next 3 to 4 years, where do you see Sudeep Pharma, going ahead? How will it look like?
I think there are 4. I think today from where we're sitting, there are 4 areas where we see significant growth opportunities. One is the greenfield and further investing in the minerals category, as I just mentioned. Second is strengthening our specialty ingredients or the technology-focused ingredients that we're doing. This has further been strengthened by an acquisition we have done overseas in Ireland. The company has been around for 40 years and they are a key marquee player in the infant nutrition segment. as a business, we want to operate in critical end markets, whether it's infant nutrition, whether it's clinical nutrition. For example, people have started taking a lot of GLP-1 drugs for weight management. When what that does is people start to skip meals, but there is still a requirement of the relevant nutrition that someone needs to consume, right? So that the vitamin and minerals category for clinical nutrition is a key focus area for us. And the third is the battery materials that we're entering into. Again, mineral chemistry is our expertise. The product iron phosphate, we are today the largest in India and have been making it for 10 years. And we're leveraging that expertise to also offer a battery grade iron phosphate, where today we would be the first company globally outside of China to have the technology and the product readily available.
All right. Thank you very much, Shanil, for that. And we're seeing that the management is defending post its Q2 earnings as well. Lot to cover, lot to prove when it comes to Sudeep Pharma as well. And that's all for today. Thank you very much for joining KYC.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
मैडम, ये केवाईसी अपडेट के लिए मुझे बार-बार मैसेज क्यों आ रहा है?
क्योंकि बैंकिंग सेवाओं के लिए निर्धारित समय पर केवाईसी अपडेट करवाना चाहिए।
होगा कैसे?
बैठिए, समझाती हूँ। अगर आपके पहचान या पते में कोई बदलाव नहीं है, तो अपने बैंक या एटीएम या बिजनेस करेस्पॉन्डेंट यानी बीसी के पास जाएं, या बैंक में रजिस्टर्ड ईमेल या मोबाइल नंबर या मोबाइल बैंकिंग ऐप या पत्र द्वारा उसका डिक्लेरेशन दें।
और अगर कोई बदलाव है तो
ऐसे में पहचान और पते का नवीनतम प्रमाण दिखाएं, अपना खाता सक्रिय रखकर बैंकिंग सेवाओं का लाभ उठाएं। बस।
आरबीआई कहता है,
जानकार बनिए, सतर्क रहिए।
विश्वास तू ज्યાં પણ હોય જે કંઈ પણ કરતો હોય જલ્દીથી ઘરે પહોંચ.
માત્ર 12 કલાક આપો. આ ગેલ સબ પહોંચે હું જોઈ લઈશ.
માતાજીનું પ્રસાદ.
હની ટ્રેપ માટે. ના, આ રસ્તો બહુ મોંઘો પડશે.
સીધા રસ્તે ન્યાય મેળવવાની કિંમત આના કરતા પણ વધારે છે.
देखना જ્યારે કોઈને આપણા પ્લાનની ખબર પડી ગયું ને તો આપણે ત્યાંથી મેં જોયા છે એમને और अंधारी रे रात लड़ी मानिस राचर रसवा।
ये धरती माता हमें पेट भरने के लिए अन्न उत्पन्न करती है, लेकिन इसका स्वास्थ्य भी ठीक रहना चाहिए।
Agricultural landscape of Uttar Pradesh is changing. Government's priority on direct interaction with farmers, a forward-looking approach to better technology and the timely implementation of agricultural schemes have made agriculture the backbone of development.
अन्नदाता किसान को समय पे खाद मिले, ये संभव है।
The Yogi government is providing subsidies of up to 50% for polyhouses or greenhouses. Training schools are being set up in villages for farmers. In the state, 79 Krishi Vigyana Kendras are currently operational and the construction of 10 more is underway. A modern seeds park is being developed in Lucknow. The low-cost, high-production mantra of the double-engine government at the centre and the state has doubled Uttar Pradesh's agricultural growth rate over the past 8.5 years.
watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani, and today we're going to talk about two very interesting topics. The first one is IPOs. 2025 was a blockbuster year for IPOs. Heavy subscription numbers, strong grey market buzz, and massive retail participation. But once the dust settled, did the returns live up to the hype? Is the question that we're going to ask to our guest tonight, and to look at how the IPO scorecard is looking like, and to take this conversation ahead, Narendra Solanki, Head of Fundamental Research Investment Services at Anand Rathi, joining us now. Mr. Solanki, thank you so much for taking out the time. Firstly, in terms of 2025, the second half of 2025 did see a flood of IPOs coming in. We saw heavy subscription numbers as well. Some saw listing gains. But if you have to give retail investors a report card so far as to how IPOs have done in 2025, what would that report card look like?
Yeah, hi, Mahima, and thank you for inviting me. Definitely, the second half of 2025, we have seen buzz coming back in the primary markets. Initially, the start of the year was riddled with a lot of geopolitical uncertainties and US tariff tantrums, etc. And gradually, what we have seen in H2 is that the tariffs have started coming down. It looks more likely that India would also be signing a deal in very soon. Plus, the lot of geopolitical uncertainties have also reduced. Added with that, we have seen multiple rate cuts, along with not only from RBI but also from the US Fed. So all these things, plus the domestic factor macros like inflation coming down and the growth picking up, especially the Q2 GDP, which has been surprising on the positive side. So all these macro factors have also added to the sentimental optimism, and hence we have seen a bumper IPO this year in the H2. And I think we have almost hit more than 100 IPOs. A century of new IPOs have already been hit. And we have also surpassed last year's peak IPO funding, and I think we are closely sitting at around 180,000 kind of number, and maybe we would be crossing and touching around 190 or something by the year end. So definitely the IPO in 2025 has been very good. Now, coming to the 2026 outlook, I think the market would be still be buzzing with a lot of IPOs from the big names, and the markets are also expecting that a lot of companies like Jio, NSE, Oyo, and new age companies like PhonePe, Flipkart, PayU, Zepto, Board. So these are the interesting names which are lined up for the next year as well. So I think the market should continue to remain in a good mood as far as IPOs are concerned.
But Mr. Solanki, do you think that recently, with a lot of IPOs that have come in, is it about strong businesses coming into market, or it is more of strong marketing of businesses coming to market? What is the view like?
I think it's more about the business of the company, as well as at what valuations the company is coming out with an IPO. So wherever investors have found out that the business proposition for a company is very good and the valuation is also very attractive, so that IPO has performed really well. For example, you may have seen how the LG IPO has done the listing gains. So where in that scenario, the business case was also very good. The growth was very promising. Being a market leader in most of its segments, having a market share of more than 40% across multiple segments, gave the company a kind of a moat. Plus, the valuations were also very reasonable. Hence, the investors have rewarded it very well, handsomely in the listing. So, whenever both these combinations fit in for the company, we see a good amount of listing gains. Even on a standalone basis, either of these combination should be there for any stock to perform better post listing. So overall, good business internals as well as attractive valuations should be the key criteria for releasing the IPOs.
The other aspect that generally people look at is grey market premium, and that's one of the reasons as to why a lot of investors go ahead and invest in these IPOs as well, right? How reliable do you think that grey market premium is as an indicator to subscribe to these IPOs?
I think since in the name itself suggests that it's a gray area, hence the reliability is really questionable. And I think investors should not actually keep keep their premise of investing just because of the numbers shown in the gray market, because they are very risky. And actually, what they should do is to study the company, look at the valuations of the IPO, and then make an investment case rather than just following whatever the number is being shown into such kind of messages or websites.
Okay. Several IPOs, Mr. Solanki, were oversubscribed many times, but have struggled post-listing. And, retail investors who did not get subscription chased the counter after it got listed. That led to a spike, then a sudden downtick in the counter. How do you advise retail investors to deal with such IPOs?
I think, as I've said, that post-listing, any IPO is just kind of any normal stock wherever you are going to invest. So analyze it that way, study the business of the company, see how the business is going to improve, what are the competitive intensities in the industry, where the company is operating, what are the growth prospects, what are the plans of the management of the company, and how has been the company performing in its latest results, be it quarterly results, annual results, etc. And then see at what valuations the company is trading. So I think analyzing all this, so I think it's not a different kind of analysis wherein you apply to any new company versus any existing company. So it's all the same things which you have to look wherever you are trying to invest into stocks for medium to long term.
Do you think, Mr. Solanki, you did talk about valuations in your previous answers. Do you think that IPOs in 2025 were priced for growth, or were they priced for perfection? Because there were some IPOs that were extremely overvalued yet oversubscribed.
I think it's a mix of both. As far as data is concerned, if you just look at on the basis of the data, definitely the kind of valuations at which the IPOs may have been listed in past, maybe 5 years back. So we have seen significant premium listings this year. So that is true. But again, you have to see it on a more granular basis. So when you compare any IPOs coming 5 years before and the kind of IPOs which are coming now, so there is a huge difference in the structure of the companies as well as the industry itself. So right now, what we have seen is that earlier most of the companies who were coming with the IPOs were mainly into the manufacturing kind of segments. Right now, in 2025 or in recent years, the companies are more of a companies which are operating into a services sector. So they have a very small physical footprint, and a lot of scalability optionality is there in terms of providing services. So hence, the services companies have generally multiples on the higher side. Plus, some of the new age companies wherein the growth runway is very huge for most of these companies. They are expected to grow and become 5x or more than that in terms of their revenues and profitability. So if you have that kind of a high growth runway, then it's certain that the valuations would be at a premium side in comparison with other companies in other sectors as well as in the later stage of the businesses.
Understood. With regards to the mindset of, exiting on the listing day itself, do you think that's a dangerous thing to do? If a retail investor is looking at a particular IPO from just a listing day gain point of view, is that the right approach to it? How should one go about it?
I think in the markets, there is nothing like a right approach. So everybody invests and everybody sees the market from his or her own perspective. So it is ultimately the person who is putting in his or her money. So he is the best one to decide how long he wants to play. So we have seen that there are players who just invest for listing gains. Plus, we also see there are investors who invest in for a very, very long time. So in markets, there are multiple kind of investors and there are multiple kind of strategies which different people deploy. So even if you see the listing gains data, so I think in last 3 years, we have seen overall on an aggregate basis, the listing gains have also, the investors who are following the kind of this kind of a strategy has also made a decent amount of money along with the medium to long-term investors.
Mr. Solanki, what's the biggest red flag that retail investors should have spotted in 2025 IPOs, not just in 2025 but before that as well, but has still not been able to do that and should do that going forward in 2026?
I think what investors should really do is that whenever they are trying to invest in a very early stage company or a very new age companies, so they should not follow a knee-jerk kind of a strategy, wherein because these companies tend to have a volatile early periods. So in any new age companies, there are a lot of volatilities involved. There are a lot of variables. Even the management of the company is still evolving their medium to long term strategies. The competition is also very severe. So there are a lot of variables into the play in the business. So they should not react to each and every news, either it is negative or positive, in a very short term manner. And they should have a medium to long term outlook in terms of evaluating their investment rationale, and then only take a decision based on that. So I think everyone should follow this kind of strategy in order to consistently make investment return in the markets.
Understood. One last question, Mr. Solanki, to you is with regards to the IPO market maturing. Do you think that as and when we move forward, do you think the IPO market is maturing, or there are still lessons to be learned by retail investors?
Yeah, I think our markets are definitely has matured. Plus, there's there's always a lesson to be learned from the market. So it's a never-ending thing. So you always try to learn something from the markets. And so definitely, I think we are continuing that journey. So definitely in terms of investments, as well as the kind of enthusiasm and the kind of reach we have seen, the kind of number of investors and applications which we are seeing. So definitely shows the amount of maturity the overall category of investors have shown. And I think it will continue to improve going ahead.
Solanki, I hope that it helps our viewer entering into 2026 and making a sane decisions while applying for IPO. So thank you so much for giving us all those insights and, of course, taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, so the second conversation that we're going to have today is also an interesting one. Selling investments for liquidity sounds logical until you realize it could break long-term compounding. Whenever investors need quick liquidity, the instinct is simple: redeem mutual funds, right? But with product like loan against securities gaining traction, the real question is, should you exit your investments or borrow against them? Tonight we decode which option truly makes financial sense. And to decode exactly this, we're joined by Nikhil Kotari, who's the director of Etika Wealth Private Limited, joining us now. Nikhil, thank you so much for taking out the time and speaking with us at NDTV Profit. My first question to you is that generally when investors are looking for liquidity, the default reaction is to either redeem mutual funds. But do you think that this is, always the smartest exit to make?
See, always first we need to realize that what is the purpose of this redemption, right? Is the purpose for really long-term, if it's a goal, like if you're invested for a goal and your goal is achieved now and you need money for that purpose, then it's obviously wise to withdraw the money because your goal is already achieved. But if it's not because of that and you need some money for your bridge funding, say for example, suddenly you have a delayed in the salary or delayed of some payments, and you need to do a bridge funding, then it's not a wise call to withdraw your long-term assets to pay for those goals or those bridge funding, because you are breaking long-term compounding. So you need to understand the purpose of withdrawal. If the purpose of withdrawal is very, very short-term, is to bridge a funding which is for say 1 month, 2 months or 6 months, then it's wise to take a loan against mutual funds or loan against securities. But if the purpose is like say really long term, like say for example you're buying a house and you want to make a down payment, right? Or your kid is going for education and you need to pay a school fees or pay a payment or college fees, then it is advisable to withdraw because that is long term in nature and you're not going to get this money back. But if the purpose is very, very short term, then it's always advisable to take loan against securities, because you're not breaking the compounding, right? And you're not paying huge capital gain tax also.
Sense. And when we talk about loan against securities, it's often sold as don't disturb your investment solution. But is this a real trade-off that you always look at?
See, basically, earlier, when you had to apply for loan against securities, it was a very, very cumbersome process. But now with the whole advent of online and the technology, right, we can get a loan against securities very, very seamlessly. So the liquidity is very, very high. Now, why this pitch is again from perspective that if you need money for overdraft facilities or you need money in terms of bridge funding, say for example, you have got a 1 crore rupees. Now you may need this money for 10, sometimes for 5 days, sometimes for 10 days, sometimes for 15 days. Then every time withdrawing this money doesn't make sense. So it's advisable that you invest this money, and whenever you need this money for short-term needs, right, like the bridge funding, that time you again always take this loan against securities and use this money as a overdraft facility. And as soon as your work is done, you can repay that, and you only pay interest for that tenure which you have taken the loan. So if the pitching is very clear that if the money is not required for long term and money is required for very, very short term, unnecessarily breaking the long term assets, right, is not advisable, and you are losing out on compounding benefit, and you're paying huge amount of taxes, right? And so it's always advisable for very short term, take the OD facility and use that money.
Okay. Nikhil, then I wanted to understand as to when you compare these two in terms of cost. First one where, loan against securities is being taken, so interest cost for that versus the opportunity cost of exiting the existing investment, right? How do you compare these two?
Okay, so say today loan against securities is available in the range of 9% to 10%. That's a broad cost of taking the loan against securities. Now, if your money is invested for very, very long-term assets, like an equities, in equity fund or equity stocks, right? And over a long period of time, what we have realized that the equity mutual funds has given you return in the range of 12 to 14% year on year, right? As compared to what the cost you are paying is only 9 to 10%. So that's and we have always realized that if you miss best days in the market, right, then returns can come down dramatically. So you can't time the market, right? So that's why it says that if you're investing for long term in equity mutual funds and you have to bridge funding in between, then it's advisable that to take a loan against securities, because as I discussed with you, you pay capital gain tax also, because once you withdraw and again reinvest, you pay capital gain tax also, right? So in that case, even if it's a long term assets, then you make 12 to 14% as compared to 8, 9, 10% the interest cost that you're bearing. But if your money is invested in debt securities, right, in a fixed income securities, which is yielding, say 6 to 8, 7% return, then it's not advisable that if you need money for long term or medium term, then it's not advisable that you withdraw from then you take a loan against securities. It's better that you withdraw from the asset, because your return on that asset is only 6 to 7%, whereas your cost is 9 to 10%.
Nikhil, the other aspect is that what happens to loan against securities in sharp market corrections? Does it add to your stress of at the worst possible time? Because at the same time, when you're paying interest, your value of investment is also going down.
True. So again, if you're taking against equity mutual funds, so normally you get in the range of 50% of your overall value. So, for example, if your overall portfolio value is ₹1 crore, you get a OD facility up to 50 lakh rupees. Whereas in debt securities, you will get a slightly higher percentage. Now, if the market goes down and the market from, say, you have a portfolio value from 1 crore goes to 80 lakh rupees, then what you can withdraw is only up to 40 lakh rupees. Right. So if you have already withdrawn 50 lakh rupees, then you have to do a top up, right? You have to repay 10 lakh rupees, or in that case, they'll sell the securities worth 10 lakh rupees to bridge the margin funding. Now, during the market crashes, why loan against securities makes sense? I'm saying if you're buying, if you have to withdraw during the market crash, then you're making your paper loss into permanent loss, right? If your money is only required for very, very short term and the markets have fallen, then say it's not wise to withdraw from the market that point of time. Then it's advisable that whatever OD facilities you can get for the portfolio value, take that OD facilities and use that money for your bridge funding, and do not make your paper loss into permanent loss. And as soon as the market recover, right, then your portfolio value will again go up. Because if you've already withdrawn, if you've already done redemption, and if you're not, and then market rallied, then you make your loss as a permanent loss. So if when the market has crashed, then it's advisable to take loan against securities instead of redeeming the money. In normal cases, yeah, if you have taken money for a very, very long-term goal, which I discussed with you, that if your loan is for 4-5 years, then it's not advisable to take loan in securities. It's always advisable that you withdraw your investments and use that money.
Interesting, very interesting, Nikhil. Now, with regard to some behavioral aspects of somebody who's taking loan against security, right? Generally, an easy access to loan against security might encourage, over leveraging against his or her portfolio, right? How does one manage all of this, considering not over leveraging their portfolio as well?
See, that's the thing. The purpose has to be very, very clear. If your purpose is to do a bridge funding, if the purpose is to maintain your working capital, right, then the loan against securities completely makes sense. But the purpose is that, okay, let me borrow at 9-10% and invest that in market, assuming that I'll make 12 to 14%, that's not right, right? Because then you're leveraging your money, and then in the times when markets are bad, right, then you get a pinch of both the sides. When the markets are falling, as well as you pay the interest cost. So, like say for example, last year a lot of people thought that it's very easy to make money in equities, right? You will always make 12 to 15% return. So if you've already invested and you have mortgaged that and you've taken loan and again reinvested in equities, right? Then it's not a wise call, right? Because you lose out on both the things. So you should not over leverage, right? You should only use loan against securities to bridge your bridge funding gap. When you get over leverage, right? When the markets are very down, when the valuations are very, very cheap, like times of COVID, when the things are really markets are really cheap. That time, if you want to leverage it, so leverage also depends on when you want to leverage it. It's still fine if you want to leverage when the valuation, when the markets are very, very cheap, and you want to leverage it, and you know the risk that okay, if things goes bad, I may lose out some part of the money, but if things goes in my favor, I can make huge amount of money. So leveraging during those times still is a technical call which someone can take it. But in the normal circumstances, one should not leverage. One should not take a loan against securities and invest back in the mutual funds or equities, because markets can be in rough phase, and that time you will get a pinch on both the sides. You have to pay the interest cost as well as your portfolio is going down. So you lose out on both the sides.
Interesting. Nikhil, the other aspect is when somebody is taking a loan against security, what are the hidden clauses that one needs to look out for in the agreement that could possibly deceive the customer?
So first is the interest cost, and what is the compounding, like the interest cost frequency, whether it's a monthly or it's a quarterly or it's a annually. So because as the frequency of interest cost is also depends, it will impact the overall cost of the loan. So one is that you can look at that. Second is the amount of percentage of overdraft facility they will give on the overall portfolio, right? So some may give 40%, some may give 50%, some may give 60%. You look at that very carefully. Third thing is that when they will sell the securities, right? So at what margin level they will sell the securities. So that clause has to be very, very clear. Will they give you how much heads up time they will give you in terms of reminder that okay, there's a margin call and you have to get you have to withdraw, you have to give the money. So that the number of days and the level at which margin call will be coming in, those one need to read very, very carefully before going and signing up the loan against securities.
How important do you think is monitoring the LTV ratio once you take this loan against security?
It's very, very important, because if, for example, you have used the whole money and then suddenly market falls, they will only give you 1 day's notice or few hours notice, and then they'll sell your securities immediately. And that happens when markets are falling, right? So you make your paper loss into permanent loss. And that's why a lot of people lost money, right? Because what people have done is that when the markets have fallen, right, they are not able to pay the margin money, and then their shares are sold, right? And when the shares are sold, they are sold at the lowest level, right? So that's what we always say, it's a margin pressure, and that's why you're seeing a huge fall in the market. So when there's why markets suddenly fall in deep time is all because of margin pressures. That the brokers sell the securities without looking at the price, and they just sell the securities. So that's why we want to be very, very careful. You should never allow your securities to be sold at a distress level, because then you're making it a permanent loss. So you need to monitor your LTV. If your allowed limit is only 50%, make sure that you never cross 40%, right? So that you always have the buffer of 10%. So if any market falls, your securities are not sold at a distress level.
Point to note, viewers. One last question, Nikhil, before I let you go. One golden rule that every retail investor should keep in mind before planning this entire loan against security, against their portfolio.
See, loan against security is a facility given to you so that you don't break your long-term compounding. But it should not be used for your lifestyle goals. It should not be used for your consumption, right? It should only be used as a bridge funding. So if you need money suddenly for a very, very short-term purpose, right, and you are going to get back this cash flows over a 1 month, 2 month, 3 months time frame, then you can use loan against security instead of breaking the golden rule of compounding. But if the money is required for very, very long term, right, and if it's a permanent nature, then do not take loan against securities. It's better that you withdraw the investment. And third rule, never leverage, right? Leverage will only be done in the extreme when the markets are very, very lucrative, not in the normal circumstances. So don't use loan against securities as a free loan available to you and go and buy your consumption goods like phones or a car or something. The loans are not cheap. The loans are expensive. So basically, make sure that the loan which you're taking is for productive purpose and not for unproductive purpose, and do not leverage by taking loan against securities and reinvest in securities, because market falls, you get the impact on both the sides. So do not take for lifestyle goals, do not take for leveraging, take for actually bridge funding, and you know that your cash flow is going to come.
Absolutely, Nikhil, that makes complete sense. Thank you so much. This conversation has been very helpful to me as well as to all our NDTV Profit viewers. So thank you so much for taking out the time and speaking with us at NDTV Profit.
Thanks a lot. Thank you.
All right, viewers, with that, we're completely out of time on this edition of Your Money Matters. Stay tuned. More news and updates on the other side.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
वैसे रिस्क प्रोफाइलर के हिसाब से मुझे इक्विटी म्यूचुअल फंड्स में इन्वेस्ट करना चाहिए, पर स्मॉल मिड लार्ज इतने सारे सेक्टर्स समझ नहीं आ रहे हैं इन्वेस्ट कहाँ करूँ।
मल्टी कैप फंड, इनकी मदद से स्मॉल मिड लार्ज तीनों मार्केट कैप्स में एक साथ आसानी से इन्वेस्ट कर सकते हो। अगर एक फंड से मल्टीपल सेगमेंट्स और सेक्टर्स में आसानी से इन्वेस्ट करना है तो तुम्हारे लिए मल्टी कैप में निवेश हुआ।
सोचा समझा निवेश।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना से संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने डबल चेक नहीं किया तो your money goes straight into the scammer's pocket. SEBI is stepping in with two major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. यूज कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
देखा, म्यूचुअल फंड्स रिस्की है।
हाँ, लेकिन जैसे तू अपनी कैपेसिटी के हिसाब से वर्कआउट करता है, वैसे ही रिस्क प्रोफाइलर मुझे अपनी पर्सनल रिस्क टेकिंग कैपेसिटी बताता है और रिस्कोमीटर फंड का रिस्क बताता है बिफोर आई इन्वेस्ट। यानी रिस्क है,
लेकिन सोचा समझा रिस्क। म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
कल का भारत उन्हीं से बनता है जो आज सीखने, समझने और नई सोच रखने का जज्बा दिखाते हैं। और इसी जज्बे को सेलिब्रेट करने आ रहा है अदानी सीमेंट फ्यूचर एक्स क्विज इन एसोसिएशन विद एनडीटीवी इंडिया। फ्यूचर एक्स सिर्फ एक क्विज नहीं है, ये एक नेशनल लेवल चैलेंज है जो स्टूडेंट्स की नॉलेज को टेस्ट करता है। अगर आप क्लास 9 to 12 में हैं और तैयार है अपनी नॉलेज को टेस्ट करने के लिए, तो फ्यूचर एक्स क्विज इज योर चांस टू पार्टिसिपेट एंड एक्सेल। सो पार्टिसिपेट, कम्पीट, स्टैंड आउट और बनो फ्यूचर बिल्डर्स ऑफ भारत। एनरोल नाउ।
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
रियली कूल।
SBI, the banker to every Indian. Truly.
बोनस म्यूचुअल फंड्स में इन्वेस्ट रिस्की है ना?
ऑनलाइन शॉपिंग करती है ना सब डिटेल्स चेक करके। वैसे ही इन्वेस्ट करने से पहले रिस्कोमीटर मुझे फंड का रिस्क दिखाता है और रिस्क प्रोफाइलर अपनी रिस्क टेकिंग कैपेसिटी, यानी रिस्क है
लेकिन सोचा समझा रिस्क।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।